two-day banking conference program. I request Chairman WRC CA Arpit Kabra, Treasurer Ketan Sayya to escort our keynote speaker and guest of this program, Rajneesh Karnataka ji, ED of Union Bank. And before we begin, I request everyone to rise up for Institute motto.
Jayesh Jagrati. Jayesh Jagrati.
Thank you. Friends, on the dais, we have our keynote speaker and guest of this program, Rajneesh Karnataka ji, Executive Director of Union Bank. Let's welcome with a big round of applause to him. We also have the dynamic and innovative Chairman of WRC, CA Arpit Kabra, and Treasurer Ketan Sayya ji. So I request all the dignitaries to join for lighting of the lamp. We have presence of our Central Council member, CA Durgesh Kabra sir with us and speaker of the next session. So I request all of them to join for lighting of the lamp. I request all my regional council member, immediate past chairman Murtuza Kachwala sir, Piyush Chandak ji and Sweta ma'am to join for the same. Thank you, everyone. Friends, in each year in March, we are gearing up for the bank audit. And every year we are discussing a lot on the part of data analysis, how we can plan. So this time we have come up with a 2 days banking conference, including all the aspects of bank audit. So my compliment for this to Ketan Sayya sir, who have coordinator for all these structure, really a wonderful structure we have this time. So our quality of audit can be improved, and this is we have to do. As we are also entering in the 75th year of our existence, and our president have bigger, you can say very big vision for all of us, and we have to live upon that. So we are feeling proud for our legacy of 70 year, 75 year, and really we all are, you can say, pride moment for all of us. And for us, pride stand for P, have to perform, or we have to relearn from a different perspectives, which is available as per the time. And I is our center point, that is innovation. And we have very innovative chairman this year at WRC. With leadership of chairman, we are trying to build innovation in each and every program, so we can increase our quality of work, which is most and at most important for all of us. Then again, D, we have to distinguish ourselves from others so we can enrich our ecosystem. E stand for enrich. We have to focus on first planet, then people, then profit, so that our ecosystem we can enrich all together. So with this, I like to invite for his welcome address, Chairman of WRC, CA Arpit Kabra.
Good morning, everyone. I welcome you to this, as the president says, standard template of whatever we do at the region, the banking conference. As we gear up for the bank audits, I think these programs becomes must for us, not only for learning, but more importantly for networking. Because during the tenure of our bank audits, during the tenure of our engagements, I think we need a lot of support, we need a lot of help, we need a lot of assistance. And this is where we identify so there are different clubs as per the banks, as per the audits that we get, which gets formed. So these sessions are largely for those networking sessions as well. And today, I'm happy to share that, with Ketan Bhai and Saurabh, I think we have structured a wonderful program for 2 days, which would have not only learned speakers addressing us, but also other side of the table coming and talking to us and telling them, look, this is what we want from you. Look, this is what we expect from you. And when I talk about that, the first person whom we reached out and was very happy to join us in this conference, I welcome you, sir. Rajneesh Karnatak ji, ED Union Bank. Please put your hands together and welcome. Very important point, as Saurabh mentioned, about the pride. We are entering into the 75th year. Innovation is centric to us. This year, our bank audit book, just as we have entered, this conference has been made not only for audits, statutory audit, branch audits. I think we have expanded the horizon of whatever that we want to do through this banking ecosystem. So this book that we will, of course, will have today, you must have got it or you will be about to receive it today, which is part of this conference. You will find it leaner. You will find it even more thinner. You will find it laden with technology. Everything that you have, everything that you will get that is written, you can all access it in soft through a QR code. All the checklists that we had just made it can now be downloaded through Excel, and everything that is possible, everything that we talked about, circulars, RBI circulars or any important circulars, I think all of them has been embedded in a QR code. So all you need to do is use your phones, click and access all of these. We'll have I'll request Ketan Bhai to please explain the entire book process, because it will be better for everyone to understand the process of how we have come to this book. I think all of these things had taken a lot of initiative, had taken a lot of efforts, and a lot of brainstorming, and then that is how we come out with these publications. So I'm sure this publication will also be of very, very useful help to you. We'll be doing significant programs throughout the year. Request all of you to please stay along with us. I think we've been doing amazing programs already. WRC has already had a big benchmark. This is the 75th year. Friends, it's going to be a memorable year. It's going to be a glorious year for us as we enter as a regulator, one of the oldest regulators of this country. We are about to enter the 75th year. Happy to hear from each one of you. Any feedback, any clarification or any assistance or any support that you want, me and my council would be here. I have Shweta Jain madam here, Piyush Chandak, Murtuza Bhai is over here, the past chairman, and a host of coordinators that we have. We've also rolled out my role at WRC. If at all any of you believe that you want to have a role, you want to come here, join us, please fill up that form and send it to us. We'll be happy to welcome you here at WRC. Looking forward for your active feedbacks and any program that you believe that you want to conduct from here, please let us know. Happy learning to each one of you and have a great time ahead. Thank you.
Thank you, Arpit, Chairman of WRC. It's really a overwhelming feeling that you all are here in early morning with all of us. So let's have a big round of applause for each one of you for joining us all here. Now I request Treasurer Ketan Sayya sir to introduce our keynote speaker.
Thank you, Saurabh. Respected Honorable Chairman of the Region, Arpit Kabra, my colleague and Secretary Saurabh Ajmera, immediate past all office bearers, Chairman Murtuza Bhai, Secretary Shweta Madam, Treasurer Piyush Bhai, all other dignitaries, seniors in profession. It's a pleasure and honor for me to introduce a worthy speaker, respected Shri Rajneesh Karnatak sir. Sir is the Executive Director at Union Bank of India. Sir has a vast experience of 27 years in banking. Sir, prior to the Union Bank of India, sir was a CGM at Punjab National Bank and he was posted at corporate office. He's a commerce graduate. He's a MCOM and a certified associate from CAIIB. He has got a rich experience of banking in variety of areas of bank. As a general manager in erstwhile Oriental Bank of Commerce, he has headed the large corporate credit branches, vertical as a credit monitoring, digital banking, mid-corporate credit. Post amalgamation of OBC into PNB, he headed the credit monitoring division and also as corporate credit division in PNB. He has attended various training conferences, leadership development program, including from IIM Kozhikode, JNIDB Hyderabad. He was also part in advanced management program at IMI, that is International Management Institute, New Delhi. He was a part of first batch of senior officers selected by FSIB, erstwhile BBB, for a leadership development program of IIM Bangalore. Sir is a regular speaker at various forums. Sir carries with him the credit appraisal skills, including project funding, working capital funding, along with the risk management with a specific reference and emphasis on credit risk. Shri Karnatak has served as a nominee director on behalf of Punjab National Bank on the board of PNB Housing Finance Limited and also India SME Asset Restructuring Company Limited. He has served as on the board of trust as a trustee on behalf of Punjab National Bank on IIFCL Asset Management Company Limited. Sir is a presently non-executive director at UBI Services Limited. He has also served as non-independent, non-executive director on the board of UBI UK Limited, bank subsidiary based out of the London. Sir is a member of the government board on the Indian Institute of Bank Management, that is IIBM, Guwahati. We have very person with a rich experience. I know sir through my friend Arvind for years, very humble, down to earth and a rich experienced person. Sir, we are really proudful and we have really, admire to listen to you on new age banking. And we are very grateful to you for having spare your valuable time and coming over here. I request all of you to carry it with the loud round of applause.
Thank you, Ketan Bhai. Now I request Chairman of WRC CA Arpit Kabra to present memento to keynote speaker Rajneesh Karnataka ji. And I request Ketan Bhai to join for the same. Thank you, sir. Over to you now.
Good morning, everyone. So, distinguished speakers on the dais, CA Arpit Kabra ji, CA Saurabh Ajmera ji, CA Ketan Saiya ji, all the members of the WIRC, distinguished members present over here. First of all, my gratitude and thanks to WIRC for inviting me as a keynote speaker in this event today. I think it is very apt that it has been programmed as a banking event and that you have called bankers, and some of the few other bankers are also coming, as I came to know during the course of the 2 days. So thank you so much on this. So I had just prepared a small note on that. But what I would say is that I have made some 5 parts in my speech, so which I would like to run down quickly. On the topic given to me was new age banking and how the new age banking and the audit fraternity, which is the CA fraternity, can be part of the audit process in the banking system. Within those 5 parts, I would also be having certain themes which I have placed. So these are the key themes which are part of the new age banking as we go and to the path of a 5 trillion economy, as the government says. So as we are all aware that post the COVID era, technology has been at the forefront of transformation across every sector in the modern digital era. The banking industry has witnessed a sea change because of this technology-driven revolution. The efficient use of technology is redefining how our traditional financial institutions operate and turn, offering greater value to the customers in line with the evolving needs and preferencing, and also to be part of the corporate governance framework, which our regulator Reserve Bank of India has given. Having said that, the banking system has always been at the center of innovation. Banking system has evolved significantly since the time ATMs were introduced in India in 1987. Since then, we have witnessed entry of private sector banks in 1994, introduction of core banking solution in the early 2000s, launch of instant settlement systems like RTGS in 2004, which has changed the course of how the fund flow in the country happens from the check system to the RTGS and the NEFT system, which is now launch of mobile banking, which started in the India in 2007-2008, rise of card-based online payments and introduction of UPI in 2016, which was again a big game changer post the demonetization which happened in 2016. Currently, we are in the world of fintechs and tech fins, where credit decision making is evolving from humans to system driven, currency is going digital, and audits are being conducted remotely. So this is thing which is the basis under which the new banking is changing. And this COVID era has also taught us this remote working, which is not only within the banks and other organizations in the country, whether it is private sector or corporate sector, even the audit has become remote in most of the things. So this is how the new way and banking is coming. With the adoption of account aggregator framework, we are going to witness UPI of loans, not only UPI of deposits, but also the UPI of loans, wherein the loans will also get disbursed through the UPI. In other words, democratization of credit through ONDC, which is the open network digital commerce, will be happening. And then OCEN is also not very far off, wherein open credit enablement network will also be coming, wherein the fintechs will be giving the enablement through the bank and the credit will be flowing. With all these things, there will be a lot of challenges for the not only the bankers, but also for the auditors who will be auditing such balance sheets, where a lot of the balance sheet will be driven out of the digital platforms and straight through platforms. So I have, as I told you, put it in my speech in 5 parts. So one of the part where I would like to say is, what are the new banking trends? We should all know what are the new banking trends which are evolving during these times. So there are 6 themes in this, which I have put. First of them is digital banking. So as you all know that there is a lot of talk about digital banking all across in the media, everywhere digital banking is there. All banks are trying to do digital banking, not only banks, even financial institutions, NBFCs are going for digital banking. So presently under the ICA guidelines, what we have is a segment wise reporting, wherein we report in our final balance sheet, the March balance sheet, the retail segment, the corporate wholesale banking segment, and other segment. So this is my personal view that days are not very far off, maybe 4 to 5 years, wherein the ICI will maybe coming out with a guideline. See what out of the total balance sheet book of the bank, how much is brick and mortar balance sheet and how much is the digital balance sheet. So that will be the time which will be coming. So the brick and mortar balance sheet will be the balance sheet which will be done, the business of the bank which has been done physically by going to the branches and other places. And the other part of the balance sheet would be, which will be totally digital, both on the liability side and the asset side, wherein the account is opened through a digital mode, seamlessly, straight through process digital mode, current account opened through a digital mode and being operated also through the digital mode. Similarly, FD is opened through digital mode and being operated and paid out on the due date through the digital mode. And also the loan, various loan, whether it is an agriculture loan, whether it is any retail loan, housing loan, education loan, vehicle loan, personal loan, being distributed and given out through the digital mode. And also in the mid-corporate and corporate credit side, like that, already we are seeing trades is there, channel financing, invoice financing, all these things are all happening through the digital mode. So there may be a time coming in 4 to 5 years when the segmentation of balance sheet will be another two, wherein there will be a brick and mortar balance sheet on both on the asset and liability side, and there will be a digital balance sheet. So just to give you a thought process, we are continuously engaging with our analysts and shareholders regarding, since we are a listed bank at Union Bank of India. So one talk which we every time hear from the analyst is how much of your book, how much of your business book is digital? What percentage? They are asking us now, what percentage? Is it 5%, 3%, 4%, 10%? This is the kind of discourse which is happening in the analyst meet now. So now that with this thing happening and private sector going leaps and bounds, HDFC, I am told that 10% of their total business is digital now. So that is a big number. And if it touches 20% of the total business, once it touches in some bank, it will be a significant number. So these are not very far off, when digital banking will be also one of the criteria in the audit part as far as the ICAI is concerned. So this was one thought which I wanted to share. The second point, second theme I would like to place over here is the technology and the data, which is changing the entire gamut, how we do the audit, how we internally in the bank do our monitoring and other kinds of things. To just to give you an example, as far as Union Bank is concerned, on the data and technology part, we have set up a department which is called the ACOE, which is Analytical Center of Excellence, wherein the entire data through the data lake is captured over there, both on the asset side and the liability side. And that entire data after that is culled out and it is sorted out and sent to different departments in the bank, whether it is, if it is for saving account, it is sent to the branches, current account, it is sent to the branches. And if it is for the loan aggregation, it is sent to our MLP and RLPs. So data is also now filtered, segregated and sent to the branches for what it has to be done. On the loan side, it is also segregated and sent to the credit monitoring department, wherein wherever we see any alerts which are coming out of the data in loan accounts, that is also being sent to the credit monitoring department for analysis and further monitoring of the accounts. Similarly, on the transaction banking side, we have a department wherein all transaction, whether it is our loan accounts or saving account and current account, they are being captured. So there are many frauds which are also happening on the operation level side in saving and current accounts, wherein Ponzi schemes are being floated by unscrupulous people, and for that current accounts are being opened, and then UPI credits are coming in those accounts, and finally withdrawal is happening. So these kinds of things are being caught through our transaction monitoring department through that data lake system which is there. So this is another thing which is being done. And all these are now all part of the audit. When you do the audit, whether it is a central audit, whether it is a branch audit or any kinds of audit which are being done in the branch. So these are all things which are all part and parcel for the CA fraternity also when they are auditing the bank and their bank books. So this is another thing which is very important. The third theme I would like to place here is the artificial intelligence. It is being used very extensively now. All AI powered algorithms are there in the banking system. Lot of fintechs we have onboarded, not only our bank, but all the banks. In fact, private banks are even further one step or two step ahead. But we have also done a lot of things on artificial intelligence and powered algorithms, and many of our straight through processes wherein we are giving personal loan, we are giving vehicle loan, we are even sanctioning housing loans under the straight through process, which is all working through the AI, artificial intelligence. The fourth theme, which I would like to say, and which is part of the latest thing which is there in the new age banking, is the blockchain technology. So blockchain technology is also coming very fast in the banking system. Lot of our LCs and BGs are now being like opened and distributed through the blockchain technology. We at Union Bank of India also have a TradeNext platform where now our customer does not have to come to the branch to open a LC or a bank guarantee. So all customers who are into the digital banking go to the TradeNext platform, and through the blockchain technology, the LC and BG is being opened. Another very important thing within that is in the blockchain technology is the import and export also, which is happening through the TradeNext platform under the blockchain technology, which is a straight through host to host process. So the importer can, from sitting in his office, click open through that dashboard, give the details for the import LC he wants, and through a straight through process, the import LC is opened through our back office center, and straight through the SWIFT message also goes directly after the debit in the CBS account. So that type of technology has already come in the system. And these are also, as I speak, these are also challenges for the auditors, how these LCs are being opened, whether the beneficiary is correct or not, if the sanction is for import of steel, whether rice is being imported, just to give you an example. So these are the challenges for the auditors also, because nothing is being seen in the system. There are no paper in the branch. Everything is in the system and at the back office. So these kind of the challenges are there. We have already have a SOP clearly defined how the audit also will be taking place in such kind of transaction. So these are some things which are coming. And then the fifth theme over here I would like to tell is the CBDC, the central bank digital currency, that is also on way forward. The pilot project is already on. We at Union Bank of India are both part of the retail project of CBDC, which is going on, and also the wholesale project. So for the retail project which is going on, the individuals can transfer CBDC from one to another. Now presently, very specific limited users have been given, identified by the bank. 6 banks are working on this pilot project of Reserve Bank of India. Already IT platform UAT has been successful. Now online transactions have started happening. Even the wholesale transactions have started happening. So now the onus is now on the Reserve Bank of India and Government of India to give the go-ahead to the banks to start the CBDC. As far as the technology part is concerned, CBDC, we are pretty much established, and the technology has successfully taken shape. And that again is under the blockchain technology. So that will be another very big game changer in the time to come. Whether there will be any deposits in bank, that is a big question mark. Whether the deposits will be parked in only in the CBDC account of the individual or of the company or the large corporates who open a CBDC account, that is time to see how that will come out and how the final regulations of Reserve Bank come out. So in the nutshell, the future will have cash in hand with the public, physical cash in hand, CBDC account, wherein CBDC cash will be there in each individual account and with the corporate. Then there will be balance account in the saving balance and the current account. And fourth will be the other kind of investments that they have. So CBDC will be another addition where we can keep our cash and funds. So that will be another game changer. And this is something which the ICAI also will have to see while there will be audits and other things about whether it is an individual balance sheet or it is a corporate balance sheet. So these are some things which will be there. And then last but not the least in this present theme would be the open banking, wherein open architecture is being developed in all CBS platforms. Infosys 10, which is now presently there in all large banks. It is an open architecture IT platform wherein outside fintechs can come in and plug and play and give various tools and processes to the banks for straight through processes of loan sanctions, straight through process of opening of saving and current accounts. So all these things which are coming through open banking also, they will be a big game changer, not only for the banking system, but also for the auditors who will be auditing in the times to come. The second part which I would like to now come with, what the CAs, the CA fraternity or the ICI have to keep an eye on during these times to come, where the things are so much volatile and so much of changing in the banking system with IT and technology driving all the things. So there are 5 themes over here to my thought. First one is with respect to the audit of the digital loans and the credit decision making tools and the rules which are there. So this is one very important and big challenge which will be there for the CA fraternity. How the audit of this digital book which is being created in the banks and NBFCs will be checked and audited. Because both on the liability side, so there will be saving accounts will be opened under the digital mode, straight through process, current accounts being opened through the digital modes, and they will be operated not in the branch through checks and other things. Entire transactions would be happening on those saving and current accounts on the digital mode. So that is one audit which will again, when the branch audit happens, where it is a, whether it is a branch statutory audit, central statutory audit, or even concurrent audits on a daily basis. So this will be one challenge for the auditors, how to audit things. Definitely SOPs will be coming out both from the ICAI and also from the banks, how to audit such accounts. Similarly, even more important would be how the accounts on the loan side will be audited. Like we have already started sanctioning of personal loans, we have started sanction of vehicle loans, we have even started sanction of housing loan on the state through process. Obviously, the mortgage is getting created at the branch level on the physical way, but all other things, whether sanction is there, how the computation is coming, how the limit is coming, everything is digital, no manual intervention. Only certain algorithms are there and certain questionnaires are there, basis which the data is culled out, and finally a person is given a limit, housing loan limit of say 80 lakh, 90 lakh or 1 crore, whatever it is. So these are another kinds of audits which will be coming up, and that will be a challenge for the CA fraternity and the ICI, how to audit this digital book which banks and NBFCs are created. Already we have a 4 or 5 NBFCs in the system which are only digital NBFCs, and in their strategy and their theme, they have written that they will be only digital NBFC. There will be no physical loan given by these NBFCs. So from the day zero, there is a challenge for the auditors in these NBFCs, the how loan credit is happening, what are the engine rules which are sanctioning these loans, and how the SMA 012 reporting is being monitored and taken care of. So these are all challenges. Another important thing which will be there, second theme which I would think over here is the challenges for the CA fraternity is the IT skill gap which the members will have. So this is another tool which I think the CA Institute will have to look into, how the challenges in the IT side of the CA fraternity will be, these gaps will be bridged so that the CA who comes to the branch or the bank or the NBFC or any financial institution for audit, the IT skills are upgraded as far as that CA is concerned, so that they are in sync with what is happening in the ecosystem as far as the IT and digital banking is concerned. Another important thing is the implementation of the Ind AS, which is the third phase of Ind AS. That is again principle-based Ind AS. Another challenge is there for all of us, not only for the CA fraternity, but also for the banks. And then finally, there is the concept of dynamic internal auditing, which has also come because of the changing environment and the changing algorithms which the bank will be doing continuously to make them their products in tune with the present financial system. And last but not the least, the next challenge, another challenge which is already there but will be manifested much further with this digital and IT banking would be the early warning signals for the loan accounts. So there is a lot of early warning signals now coming and thrown up by artificial intelligence and data lake on the loan accounts. These early warning signals have to be monitored by the CA fraternity, whether you are doing any kinds of audit, whether it is a branch audit, whether it is a concurrent audit, whether you are doing ASM, forensic audit, because these are the alerts, early warning alerts, which you will have to ask from the bank. What are the alerts in the account which have come or had come earlier, and how they were settled, or how the bank was able to close that alerts and went forward to give further credit limits, enhancement, renewals, whatever. So these are the things, 5 themes I thought were the challenges as far as the CA fraternity is concerned with the changing times which are there. The third part of my speech, I would like to say under the 7 themes are the new age auditing trends. So according to me, these are the new age auditing trends, and there are 7 themes in that. Number one and most important is the forensic auditing. That is one very important theme in this new age trend for the auditors. So number 2 is the data analytics, which is coming. Number 3 is the use of artificial intelligence, as I have already explained, and machine learning, which is now being done under the data lake system. Then agile auditing is also one of them, 4th theme, because we have to be very agile now as auditors with the changing times and the technology and the digital which is going on, because you do not know what is happening behind in the screen, because there will be no ledgers, no printout, nothing. So it is something which is very important, that agile auditing also we speak, and you also develop certain tools and mechanisms under which you are able to filter the data, take out the data, and find out certain inconsistencies in the data, which can be taken as an audit tool. And even one small inconsistency which is thrown up in the data can be just a tip of the iceberg of a big inconsistency which may be happening in the bank balance sheet overall. So that is another thing. And then the continuous auditing with the daily transactions of crores of transactions now which are happening in the banking system. So the 6th thing which I would like to say over here is the challenge or which has to be done is the NFRA. The National Financial Reporting Authority is also coming very heavily on the banks also. Lot of correspondence and letters we are receiving from NFRA also now these days. And they are trying to sensitize the banks, like what is happening in the auditing, where the gaps are there, what has to be seen while the audit has to take place. So this is another challenge which we all have to see in the new age banking. And then the company's auditors report order, which is the CARO. That is another very big challenge which is coming forward, not only for the banks, but also for the CA community. This is what I believe. So these are the major challenges as far as the digital part is concerned. So the next thing which I would like to, the part of my speech is, what is the collaboration which can happen between the banks and the CA fraternity? So there are basic three things in that. So one basic thing which we have been doing all throughout the years since the banking system has evolved is that we are collaborating with the chartered accountants and the firms, all the banking system for our statutory audit, for our concurrent audit, stock audit, revenue audit, ASMs are there, forensic audit is there, transaction audit also we are getting it done through our CA firms. Then bank guarantee audits is there, utilization certificates we are taking, balance sheet certifications also we are taking, and also ROC work is being taken. So a lot of collaboration is happening between the banks and the CA fraternity, which is again very important for the audit and corporate governance framework, which is there as far as the bank are concerned. And it is also part of the regulatory guidelines of Reserve Bank of India, and also helps our various stakeholders, whether they are our shareholders or our employees or our vendors, everyone. So clear transparency and better corporate governance is always better in a corporate world. And especially with another regulator, most of the public sector banks and other banks are listed. So SEBI is also involved as one of the regulators. So the second theme which I would like to say is, which is very important and where the CA fraternity is playing a very important role for the banks, is in the NCLT. In the IBC process, also in the corporate insolvency, lot of CAs have got themselves impaneled, and very important and very big kind of work is being done, because you understand when the account goes to NCLT, normally such accounts are huge, big accounts, wherein the exposure in some of the accounts are 30 to 40,000 crore of NPA in one single account. So that is another very important and significant work which is being done by the Chartered Accountant fraternity through the NCLT, and by being the corporate insolvency resolution professional. Another important thing now, which is a part of that, I would like to just point it out over here, is the central statutory guidelines and the branch audit, which has come out for the latest for this year, March 23, wherein 70% and above business of the bank will have to be audited this year, which is the latest guideline of RBI is concerned. So 70% is their minimum. So as far as Union Bank of India is concerned, we are trying to make it as higher from the 70% as possible, so that most of the branches of ours are covered. So just to give you a sense, we have 8,400 branches. We were discussing pre this event in the chairman's cabin, how we can more broad base the number of branches which can come under audit. So under one thing that we have decided yesterday, there was our audit committee of the board also. So whatever the number of branches are finally decided in the bank for the branch statutory auditors, we will make sure that another 30%, 25 to 30% of the remaining business part is also audited under the concurrent auditors. So there will not be much of the branch which will be left out in the bank. So the branches which would be left out will be very small branches in very rural areas, which have a business of 1 or 2, 3 crores, where only scale 1 officer is a manager, or a junior scale 2 officer is a manager. But substantial business of the bank will be covered through these concurrent audit branches and the branch central branch auditors. So this is one thing which is there. Another, last but not the least, I would also come out, inform you about the initiatives that Union Bank of India has taken for the CA employees. So before I give that, I would just like to give a small sense of the distinguished members over here about Union Bank of India, since I am from Union Bank. So we have a business of around 18 lakh 50,000 crores as on December, which is the audited numbers. We have a 9-month profit of 5,000 crore plus for the 9 months. We have a ROA, which is just shade under 1%. We have a gross and net NPA, which is now quite reasonable place. We are Union Bank of India. We are the 5th largest bank among the 12 public sector banks. And as far as the entire scheduled commercial banks are concerned, we are the 7th largest bank in the country. So that is the kind of size and scale we at Union Bank of India are having. As far as the CA employees are concerned, our bank has a total strength of more than 200 chartered accountants in the bank, specific CAs in the bank, and they are from scale 2 to chief general managers. So they are managers also, senior managers, chief managers, assistant general managers, deputy general managers, GMs, and also the CGMs among the chartered accountants. So some critical posts like the CRO is a chartered accountant in the bank. Our CFO obviously is a chartered accountant in the bank. Few of our general managers who are heading corporate credit and other credit at central office, they are chartered accountants. So that is the kind of belief and trust we have in the CA community, and the kind of ability and skills they have, and they bring forth on the table when we do day-to-day kind of banking. So this is something which I wanted to communicate here at the WICA. That is a good platform where I thought I should inform. And then in the bank, we have we are improving continuously for learning and overall development of our CA employees in our bank. We are reimbursing actual fee for 9 certificate courses of ICI. So our CA staff can do any number of courses, out of which 9 courses in a year we are reimbursing for our employees. So we are always nudging them and asking them to reskill themselves, upskill themselves as far as the new guidelines and new innovations and techniques which are coming by the ICI. Apart from that, bank is also providing reimbursement of annual membership fees to the existing CA employees. So all 200 CA employees, we are persuading them, and it is part of their job family in their workplace Prerna dashboard, which is there, whether they have taken that annual membership certificate or not, and we are reimbursing that fees also. So we are conscious to that extent also. So these are the broad things which I wanted to communicate over here. Lastly, I would like to conclude by saying that the chartered accountants are the backbone to the banking industry, and it is a partnership between the CAs and the bankers, which will take the bank, the institution, and the ICI to the next level of corporate governance. So this is something which we want to do. The balance sheet of the customer is also that of the bank are finalized, I would say, under your signature. So our customers' balance sheets are being signed by you. The bank balance sheet is being signed by you. So this shows the kind of trust we all bankers have on the CA fraternity. So my thanks to all of you for that. So let us enhance this trust and let this get stronger in the times to come, so that much more delivery and cooperation and collaboration we can have with the CA fraternity. With all these collaborative efforts by the players in the financial ecosystem, new age banking is poised to become one of the most exclusive drivers of India's sustainable growth and also the banking growth in the times to come in this Amrit Kal. And with this, I would definitely think that the 5 trillion economy is not very far off. And since banks are the reflection of the economy, and if the economy does well, definitely the banking system will also do well. Our business will also grow. And along with that, the collaboration with the CA fraternity will also grow. Thank you so much. Thank you.
Thank you, Rajneesh sir, for sharing all valuable information and appreciation for our fraternity. It's really a pleasure for all of us. Friends, as Rajneesh sir also mentioned that we are in new age of banking and we have to fill the gap of IT skill. For that, we have scheduled a session in this conference, data analytics with using Power Query. So I request all of them to please attend and use Power Query during your audit work. Friends, we also have presence of our senior member, CA Rajkumar Jagedia ji with us. He's mentor for me and he's also a coordinator for this program. So I want to extend my thanks to him on behalf of all of you. Thank you, sir. Now I request CA Ketan Sayya to propose well-deserved vote of thanks for this opening ceremony.
Thank you, Saurabh. Honorable Chairman told me to brief about this book. Of course, WIRC has been putting, every year a lot of efforts with the help of all the respected compilers. Similarly, this year also, almost all experts on banking from Western region had put in their valuable time and with some thought processes of making, improvement in the book, we started with this. Number one, we introduced this year QR code in this book. This book is going to be distributed to you, all of you shortly. So what we did is wherever there were references of Reserve Bank of India circular, or there were checklists, or there were, the detailing which was there, which earlier used wanted a soft copy of them. So we thought, let's do this improvement. So what we did in each section, wherever, the authors have referred, the compilers have referred some RBI circular or some checklist, we have, put it on website at one place and given here the QR code in the book. So moment you scan the QR code, you'll able to go to the website, you'll able to download all those soft copies and able to use it very easily for your auditing purpose. Also, we realigned the topic which were there. We introduced some new topic, something like, expectation of central auditors from bank branch auditors, or some topic like, fraud in bank and precaution as auditors. We have been seeing that the instances of, account being classified as a fraud or the other type of frauds happening. And then as an auditor, how do we safeguard and how do we discharge our duties in proper manner? So with that thought process, we introduced this new topic. We realign and merge the verification of profit and loss account with the audit report and certification. So this way, the entire book is reduced to a proper size. So in true sense, it can become a handbook. With respected chairman's thought process, we tried and, brought this publication yesterday at the August hands of President. This book was released at the members meet yesterday evening. Just referring to what is being quoted by the chairman, he has rightly quoted that you can't just keep doing what work one time you have done. Everything around you is changing, and to succeed, stay in front of change. So as we understand, sir spoke about a new age banking and the role of auditor also in a newer form. We at WRC also thought that let's try and do the improvement in the publication. And coming to the vote of thanks, sir, first of all, really thankful to you for reposing trust in chartered accountants by, saying that we are, partner and we are doing, a lot of audits of your bank as well as the customer. Really grateful to you, sir. Sir, as rightly told by the secretary, we've, tried and included in these 2 days conferences some of the concept of which you referred, be it, the use of technology using Power Query, Power BI, or some CAT tools. Also, our publication carries some article like red flag, which you referred. We did mention about, what are the red flag while carrying out the audit. Sir, you spoke about a lot of opportunity. Let me assure you on behalf of Western India Regional Council and all of our members, we will be always available and always stand for, whatever opportunities which are coming forward to us, and we'll be partnering and we'll be, definitely putting our lot of time, energy, efforts, mind to see that we discharge our duties diligently. Sir, you mentioned about the courses which, the Union Bank is supporting, you being, playing important role even in IBA. We also from WRC will request you that, you try and move this concept, which is implemented by Union Bank to even other banks and also through IBA. That will be our request from here. So that again, the chartered accountant who are in bank are equally updated with the lot of courses being hosted by ICAI. As I mentioned in my, introduction, sir is really down to earth and humble person, and we have heard him, and in his short speech, he has covered various aspects of new age banking, and we understand the percentage of volume of the digital transactions which are happening in India are the highest in the world. So we also as an auditor need to change, the entire working pattern. And there are some banks where, the even concurrent audit is centralized and one auditor sitting and doing the concurrent audit of entire bank using the technology. So we need to move forward to use of technology. The Reserve Bank of India, as sir mentioned rightly, has reduced the percentage of advances to be audited from 80% to 70%, and in coming year, maybe it is at the discretion of the bank. But yes, as rightly told by sir, the audit will be there in one or other form, maybe in statutory or concurrent form. And we will get a lot of other opportunities like forensic, ASM, NCLT sir spoke, the insolvency professional sir spoke. So, there will be sinking in one type of, one sort of audit, but there are 10 other doors which are opening, which sir has rightly pointed out, and sir has rightly, enlightened us with those opportunities which are coming up in the banking system. Sir, on behalf of Western India Regional Council, I propose a very well-deserved vote of thanks to you, and really, really grateful to you for sparing your valuable time, and looking forward for a lot of meaningful association with Western India Regional Council and the ICAI. Thank you so much, sir.
Now I request Regional Council Member Piyush Chandak to take charge for next session.
यही वाला, हाँ।
A very good morning, all of you. Good morning. Good morning. Thank you for the response. As our keynote speaker spoken about and given us a very new keyword, new age banking. So we are having our next topic on the technical sessions, and I request our immediate past chairman Murtuza Kachwala sir to escort the speaker on the dais. As rightly suggested by our keynote speaker, as he has set the tone for the today's and the 2 days seminar or workshop on bank audit, auditors has to upgrade themselves for the new age banking audit. And as the name of the topic suggests, name of the topic is smart audit planning and execution, that is specific, measurable, achievable, relatable, and time-bound audit we have to do. So we have got a good speaker for that. And I request our immediate past chairman Murtuza Kachwala sir to offer a memento as a token of our love and affection. I'm fortunate to get a chance to introduce before you the learned speaker, Mr. Anil K. Saxena from Kanpur University, science graduate from Kanpur University. He is qualified as a chartered accountant in 1984 and is a founder and senior partner of Messrs. Agrawal and Saxena. They have got offices in Kanpur, New Delhi, Mumbai, and Lucknow. He has authored a book published by Taxman Publication named Bank Audit, a Practical Guide for Bank Auditors, updated 2023 edition. He has also co-authored FAQs on accounting standards published in May 2017 by the Bombay Chartered Accountants Society, that is BCAS. His professional experience is wide experience in the central statutory audit of public sector, private sector, cooperative, and regional rural banks, apart from other types of audit in the banking sector. He has also done asset valuation of NPA assets of public sector banks and financial due diligence assignments on behalf of asset reconstruction companies. Concurrent audit of CDR monitor accounts on behalf of banks and forensic audit on behalf of banks. First time adoption of Indian AS, impact study and convergence is one of the achievement from him. Statutory and internal audit of wide range of companies, various sectors, public and government, including telecom, manufacturing, power, real estate, insurance, general and life, depositories, stock exchanges, etc. He has also done inspection of mutual funds and stock exchanges on behalf of SEBI, Mumbai, and members of commodity exchanges on behalf of Forward Market Commission. He has also done liquidation audit, IFC management audit, services, SOX audit, investigation, development and implementation of accounting systems. So I think we have got a very good and learned speaker faculty on the subject, and I welcome C. Anil Saxena for his delivery. Over to you, sir. Thank you very much.
Morning, everyone, and thank you, Piyush, for the introduction. I thought, that could have been shorter. ऐसी कोई इतना लंबा introduction की जरूरत थी नहीं. But then thanks a lot for the introduction. And in fact, the chairman is not there, but then the organizing committee, I think I'll like to thank them for the invite to me. Because as a speaker on bank, I think, I've spoken in quite a number of places, but Bombay was never one of them. This happens to be my debut, so I am a little nervous. And if I make some mistakes, I think, you can put it for the first time speaking in this thing. Anyway, I think, we've just been given 1 hour on a topic which is smart planning and smart execution. Since this happens to be the first kickoff kind of session for the bank audit, I think rightly so, the organizers have given a very nice thing. And, planning actually for me has always been I think that, in any audit, whether it is bank audit or any other audit, I think, planning should at least take up 30 to 35% of your time before you actually venture out into any kind of assignment. So smart planning, I'll probably give you a few tips. I'll run through tips which, as a bank auditor you need. And then smart execution, in fact, over the next 2 days, whatever you hear from various speakers, they'll all be smart execution. But then I picked up a few things which probably I can categorize into the smart execution this thing. The agenda, of course, is a very simple this thing. We just have the smart execution and the smart planning. We start off with the planning, then the execution. Before we set off, just a disclaimer that, the opinion which I would share with you over the next 1 hour would be mine and has nothing to do with either the institute or the firm where I'm a partner of. Before, we actually get on to the planning, or we need to actually try and find out, where the banking industry is as of now. Because, whatever size of branch we go today, uh, the current scenario in the banking industry would definitely make an impact. Now, if you compare, where we are across the banking industry from probably 1922, 21, 22, I have data up to September 22 only. The gross NPA ratio has gone down. So, if I actually have to say that, whether my challenge of identifying NPA, has it gone down? No, it would not go down, because I could still have a number of NPAs which are hidden or which need to be identified by us as auditors. But then definitely, what the bank has identified, what the system has identified, because now the ministry is already, made it compulsory that it should be a system-based identification of NPA. So that identification of the system is, definitely down a large way as compared to, 2 or 3 years back. Similarly, the PCR, which is the provision coverage ratio, is also, as you can see across the banking industry, stable and a little, comfortable for us. The growth in the SMA 0, 1, 2 and the NPAs, again, when I compare it with the March 22 data, that also is comfortable. I mean, it's not increasing. So, that inherent risk which we go with when we go to the branch audit, definitely we can say it is, in the comfortable zone. Now this, you would have seen the keynote speaker talk of frauds and the early warning signals, etc. So this, happens to be always a part, not only because of the master direction which the RBI has come out, but also one of the essays which and the institute's guidance where, we need to concentrate on also on the frauds. Now, when you compare it with 2019-20 and today, in terms of value, you see it has come down from nearly 1,85,000 crores to just 19,000 for half the year, which is, translated, annualized, it will be around 38,000 crores. Or compare it with the numbers also, from 8,702, it's come down to 5,406. So, and in fact, as you read the paper, you would find that, the number of frauds which are being reported is also down. So maybe, that gives us a certain level of comfort, but definitely I would not say that, should not make us complacent, because, we always need to go to any assignment with that thought in mind that, there is something wrong and we need to find out. So what made news? Just 2 slides. Obviously, the biggest one was after 2015, 1st July 2015, the RBI came out. Of course, it came out in October 21, the master circular. It had actually stopped issuing master circulars after 2015, but then it came out with master directions in between. So during this year, we will have to probably comply with what I normally call the mother of all the circulars for us as branch auditors, which is the RBI Master Circular on IREC advances, dated 1st of April 2022. And this would probably be the most important one. Then the RBI's continued expectations of us as auditors with respect to the early warning signals. We'll discuss it in a little more detail as we go on to the presentation, and fraud management system. This is not only the RBI's expectations, but friends, also the expectations of the ICAI also. And in a recent meeting with the auditors, the RBI, expected the auditors to focus on automation, which the keynote speaker also talked of, the inter-office accounts, the whistleblower mechanism, and the IFC, which normally we do not concentrate at the branch level. Then, of course, the 6th March 2023, the circular which came out regarding the coverage of the business, etc. Now, obviously, this one, other than the reduction of business, which has come down to 70%, the another thing which is probably it will compensate for the loss of 10% in coverage of businesses. We have a condition that not more than 2 branches would be given to one auditor. So probably, you may have the same number of auditors in spite of the decrease in the business during the year. Then, of course, this risk of being audited, re-audited by the regulator always remains whenever you do a bank branch audit, or even if you're doing a C&AG audit. So this, of course, and of course now the audit by various government agencies, the press, etc. So, one needs to be careful. These are risks which we need to appreciate and incorporate in the procedures which we carry out. Like I said, I'll break up my presentation into two. One, the planning part, the execution part. The planning part, broadly, when you go to a branch, I think these are the things you have in mind. You need to audit the balance sheet, the profit loss, various statements which are attached, part of it. Then, of course, the certificates, a host of certificates which we need to sign, the LFAR, the tax audit, depending on, if you are doing a bank where you are required to do the tax audit. And most important of all, of course, the advances which constitute the major risk on the asset side when we do a bank branch audit. A quick walkthrough for the branch audit which we would do. Once you receive the appointment letter, you confirm the disqualification. My advice to all of you would be that, with respect to the disqualification of indebtedness and independence, in case you are a firm where you have more than 1 or 2 branch auditors and probably placed at different geographies, then I would request you that, you send out a mail to all the partners seeking, and probably, based on the skill set, you develop a team, send it out to them for seeking a confirmation that, none of the partners are indebted, so that the firm doesn't carry a disqualification, and also with respect to the independence. Of course, this would be part of the compliance of SQC1, which the secretary was referring to. And then, of course, we seek the NOC. You don't have to wait for the NOC. You would then dispatch the engagement letter. Probably modify the acceptance letter of the bank, or, some banks are very specific that, they want the acceptance in the same format. Then you send the engagement letter to the appointing authority. And since, it's not expected that the AL would be acknowledged by the appointing authority, my advice to you on a practical level would be, if you're doing 2 branches, carry the engagement letter to the branch head and get it acknowledged by the branch head, because the responsibility of preparing the financial statements and other things lies on the branch management. And of course, for me, most important of all is documenting and preparing for the planning meeting, which we'll quickly discuss. In between, as soon as you talk to the branch head, you please talk to them, find out what kind of branch it is, and then immediately send out a inquiry letter to the branch. Email it. Nowadays, it's faster. And then, of course, depending on the kind of branch you have, and the skill sets of the members you have in your firm, constitute the team which you would like to visit the branch with. Obtaining the SA 580 management representation letter should always happen before the sign off. At various seminars, I've been questioned as to, what happens if, the branch head refuses to sign the MRL as per this SA 580. My simple answer to that would always be that if he refuses to sign this SA 580, I can always refuse to sign the audit report because, my responsibility would be after the sign off would happen after the documents by the branch head happens. In fact, one of the key character of a branch auditor should be, should have the courage to say no. If I have the courage to say no, if I have to courage to question everything, I would be able to do a good branch audit. Otherwise, we would, as has always been our experience as a central auditor, you would find a number of MOCs hidden in LFARs and sometimes even in tax audit reports, which, should not be happening. And then, of course, friends, please remember that, based on the appointment letter you have, find out which certificates one needs to sign, which are the certificates where I have engaged, I've exchanged an engagement letter which I need to sign. The appointment letter would be clear that I need to sign, let's say, 4 or 5 certificates. I need to restrict myself to those 5 or 6 certificates only. Because the branch you would find, aapko bahut bari, you would find that, while you're going out, the branch head would probably ask you and tell you that, sir, these 2 certificates also need to be signed, which probably are not there in the appointment letter and I have not exchanged an engagement letter. You are not required to do that. Please refuse to sign anything where you are not appointed because number 1, you do not have the authority to sign that, and number 2, you are not paid to sign that certificate specifically. And of course, while issuing the audit report, nowadays it's on the portal, etc. I mean, there's no harm. I do it personally, always compare the format of the audit report with the SA 700 series. And if you're probably qualifying it, then 705 or 706, whichever is applicable to this. Planning, which has to happen with, the entire team members, including your articles, etc. These are the things which I feel should be read very thoroughly in the back office before you move out to visit the branch. Number 1, the appointment letter. The appointment letter where, like I said, what are the documents to be signed, what are the certificates to be obtained, what are the various, when you see the appointment letter or probably the closing instructions, you'll find a number of instructions there which probably ask you to map a certain statement with the balance sheet or probably various, various statements to be interlinked, figures to be mapped amongst various statements. So, these are kind of controls which we as auditors need to make. Of course, find out the number of statement certificates to be signed. And then also before we leave, we need to, study and find out what are the changes which have been made during the year vis-a-vis the previous year. Like I said, the 1st April 2022 RBI Master Circular would be an important Master Circular to this thing. So the entire team needs to read that. And as a leader, probably you as a partner have to inform everybody about, what are the changes during the year and what are the procedures which would be required of us to do when to ensure that, we mitigate the risk with respect to the compliance of those particular RBI Master Circulars. Of course, identifying the skill sets of the members which you need to take would depend all upon you. Now, what are the consequential risks in case we do not plan or we do not execute this? And obviously, I have a risk of incorrect attestation and reporting, non-complying with the master direction, the master circulars, the press releases, the FAQs, the various notifications, etc. And most of all, you would see that, nowadays, for the past 6 to 7 years, probably more, the RBI, earlier used to visit branches and carry out an inspection under Section 35. Now, since data is available at the central server, they import the data and then carry out these control tests and etc., identifying incorrect provisioning, incorrect classification, asset classification, sitting at the head office and then identifying even a advance which is probably, 50,000 or 60,000 below, which they would never have reviewed earlier, and then give the list to the our bank head office, and then ask them a question as to why this particular account was not classified as a substandard or a doubtful, or the provisioning was less, etc. So for this, the next action is always that the bank, then writes to the branch auditor. So if unfortunately happen to be that auditor where, the branch I visited, I missed out on 3 or 4 of those accounts which needed to be classified as a NPA or had to be provided for, at a higher amount, then I would get that letter from the bank, obviously based on the RBI AFI, and then I would need to answer. If, the number of mistakes I've made, the errors I've made are large, then, there could be a situation where I get referred to the disciplinary committee, etc. So that is why, my advice would be that, we need to be very sure about the major risks which bank branch audit does. And of course, since IFC is one of them, so non-identification of this control risk weakness, which is also now part of the LFR. So my audit procedures need to comply with obviously the SQC1, the important essays, the guidance note on bank audit 2023, which probably came out, I think, yesterday or day before yesterday, the accounting standards, the technical standards, the various RBI circulars, etc., regulations. And of course, we also need to ensure that, our firm could be peer reviewed or, quality reviewed if you are one of the central statutory auditors. Quickly, the essays which we need to ensure compliance with. SA 230, I think, it goes without saying, we need to ensure documentation. Fraud 240, analytical procedures, I think the keynote speaker also talked of. 320, materiality, normally it is there as part of, the bank's instructions to the from the central auditors. Welcome, sir. Then, of course, the external confirmation. Now, normally in a bank branch audit, we do not expect that, you would be required to do external confirmation. I've been doing this external confirmations for the past 10 years, even in a branch audit. And I think it's a very simple process. All you do is as soon as you talk to the branch head, when you get the appointment, talk to him, ask him to share with you the top 10 to 15 depositors, the top to 15 borrowers, and also if they have accounts with other banks, ask them to share with you the email IDs, etc. And then before you leave for the branch audit, you can probably send out a mail seeking confirmation. And of course, SA 580, we already discussed, use of work of the concurrent auditors, 210 engagement letter already exchanged, and compliance with the SA 700 series. So all this, friends, may appear to be very cumbersome, but then unfortunately, we as auditors, we cannot get away from complying with the institute's guidance on the one hand, and also the regulations, whichever entity we're doing. So if you're doing a bank, you need to comply with the regulations of the regulator, and the number of directions, circulars, etc., is actually very large. Now, the first step in smart planning is, I would always, give out advice with respect to these two important documents, which can save you from a lot of trouble in future. See, when you carry out a review of the most risk-averse, advances, which is considered to have the most highest amount of risk. So to mitigate that, you generally carry out a larger sample of the advances. And after the review of the entire advances, you would probably have two kinds of issues. Where number one, where I identify, let's say 10 accounts where I need to issue an MOC. And then out of 10 post discussion with the branch head, I find out that, the branch agrees to 6 accounts where an MOC is to be passed. And 4 of them where post discussion, I accept that, I can take an opinion where I do not need to pass the MOC. So I would categorize those 4 accounts into potential NPA and the 6 accounts where I'm passing an MOC. So for those 6 accounts, of all the accounts which that particular borrower has, please take either a soft copy or a hard copy of the statement of account for the relevant period, maybe a year or something. And then specify in detail, either on your computer or even if you're good at writing with a pen, you can write it down on the statement as to the reason why I passed the MOC together with the corresponding reference to the RBI circular, maybe the master circular or any other direction. Maybe, they would have restructured, and based on restructuring, since RBI does not allow that dispensation, you've probably downgraded. So those are the 6 accounts. Now the 4 other accounts, this is more important, where probably subsequently I can get a query as to why did I not qualify these, categorize these accounts as an NPA. So in these 4 accounts also, I again take a statement of account for the entire year. Here also I list down the reason and the regulation as to why I have not categorized this account as an NPA. Now, why do I write it down? Why do I document this? Primarily because when the query comes to me after 2 years, number 1, I may not have that particular partner with me. Number 2, I do not expect, that kind of memory. At least I do not accept it from at my age. I do not accept that, I would remember some things 2 years down the line in detail. So once I have documented that, if I have a query from the Reserve Bank, my answer becomes an easy thing. In fact, friends, as a central auditor, I did face a few queries from the Reserve Bank with respect to some accounts. And this is only because of document 2 was I able to, easily reply to the Reserve Bank, because I had the reasons documented. I had the relevant documents in my file, which I was able to share and then justify the reason why the account was not passed as an MOC. So these are 2 important documents, which is a part of the smart planning. The next smart planning is, I recommend, obviously you create a checklist, and this smart planning I would recommend is a pre-sign off checklist by the partner. So, as a partner, before you sign it, obviously you ensure that, your complete audit program or the audit checklist is complete. But a few things before, other than ensuring compliance with other, is 4 or 5 important things which I've listed, which will probably help us ensure that there are no big loops which I'll leave out before signing of the balance sheet. The first is, I think, the keynote speaker also referred to, is the red flagging. In the RBI master direction on frauds, they have listed around 43 early warning signals, where, based on which the banks red flag an account if, an account has a number of early warning signals. So here it is compulsory in respect of accounts with an exposure of fund-based, non-fund-based greater than equal to 50 crores. And if it is less than that, most of the banks even, have a limit up to 1 CR and above. So they red flag those accounts. Now, the RBI says that, in case the red flag has not been removed within a period of 6 months, that is, these early warning signals which were existent in that particular account do not cease to exist, I need to categorize all such accounts as a potential fraud, a suspected fraud, or a fraud, and report it to the RBI. So if they've not done that, I, as an auditor, would obviously then have to review those accounts along with the early warning signals and probably treat it like a potential NPA and find out whether or not that account has to be categorized or downgraded as an NPA, and maybe an MOC is to be passed. So, for this, we would immediately we would require the branch manager to give us a list of the red flagged accounts. And in case he says that, there are no red flagged accounts in our branch, then please take a specific confirmation to that respect in either your MRL, the SA 580 letter, or probably a separate letter which you can take. Then similarly, the early warning signals, wherever the early warning signals which you map with the RBI master direction on frauds. So in case you find early warning signals in a particular account, some of them are material, then you treat it as a potential NPA, review it further, and then try to find out whether I need to downgrade that account. And if not, if there are only some early warning signals which do not impact the categorization or the classification of the account, I would probably report it in the respective place under the advances part of the LFAR. Then there is a central fraud registry, which again, as an auditor, I do not have access to, but then the bankers have access to. So I would have to request the branch head that, with respect to all loans where the sanctions are 1 CR and above, whether the bank has used the central fraud registry portal before sanctioning that. So as a sample, you can probably, based on the number of accounts which have been sanctioned during the year, you can take a small sample, ask the branch head to visit that portal, ensure that the CFR portal was used before the particular account was sanctioned. Earlier, if you remember, we had these hard copy documents, title deeds, etc., of the securities, collaterals, which the banks used to keep. And, wherever you wanted them, you would ask them to get it. They would get it from the safe and show you one by one. Now, since a number of years, we have this SIRSI portal where, for the security, all you would find that, you have the registration number there. You log in the registration number, and then you would get a confirmation that this particular title deed is registered. And, so you don't have to actually look at it. And this is for both the movable and the immovable property. So in respect of all NPAs, obviously loss accounts, I don't have to look at the security angle. But in respect of all of this NPAs, doubtful and substandard, whenever I need to ensure whether the security is available, I can visit the SIRSI portal based on the registration number, title deed registration number. But again, here as an auditor, bankers have not given us the access. So we would again require the help of the bankers. Then another smart planning aspect is on the LEI, which is the legal entity identifier. Now here, of course, it is above 100 crores, which is would be applicable in very large bank branches only. But then I think, probably from April 23, they're trying to reduce this. Here it's basically a portal which where you others can get access to that and find out the legal entity, whether you are there, the financial transactions, etc., can be held. Of course, but like I said, would be applicable to very large branches only. So then I think the exception report which comes out from the system at the day end, which is normally, even if you go to a branch, you would find that, most of the exception reports, bankers, they are correctly as per the SOPs required to download that, print it and sign it and document it in hard copy. But many banks have found that branches, they do not do this. But as an auditor, and the exception report is a very important document where, for me, the year-end exception report, the review of the exception report becomes important because I could have some signals in the exception report, which probably indicates that a few accounts need to be probably downgraded or probably which has a financial impact on any other thing. So I need to review the exception reports, not only of the year end, but my advice would be that probably a few other days also to check whether there are any irregularities which are being reported there. Then the KRILK report, which is obviously the, which gets uploaded to the RBI with respect to the SMS 0, 1 and 2. Now, SMS 0 is only 0 to 30 days out of order. But those accounts which have a habit of getting into SMA 1 and 2, if they are repeatedly being reported there, obviously it gives me an indication that these are accounts which the operations are not healthy and they need to be looked at with, in deeper this thing. So wherever SMA 2 reporting is regular and repeated, identify through the KRILK reports, and then I take the list of those accounts and probably get them reviewed, get the operations of those accounts in depth. And probably, you could have a potential NPA or a possible MOC too. I think next 2 days, you would have somebody looking after the data. How do you import data? How do you analyze this, etc. So my smart planning tip would be that, you obtain the data and ask the branch head to give you relevant data. I mean, this is only a few examples, which probably, a few branches have also shared data before you visiting the branch. So, if you have that with you, like the GLB of this year and the previous year, the loan overdue balance, etc., it gives us an indication. You can probably make a lead sheet and then review as to what exactly is in store for me when I reach the branch. And of course, the inquiry letter you shoot out as soon as you get the appointment letter. In case you are interested, I would always advise you to do it. Do an external balance confirmation, take the email IDs and shoot out mails before you actually start out for the branch. And the GLB's data for the current year and the previous year. So, the data analysis can be done much before you go to the branch, and also identify the accounts, the account line items which you need to look into with depth. So the last smart planning tip: what do you need to carry? I mean, this is a very basic kind of this thing, but then you obviously the previous year's audit file, if you, in case it is the same bank, it gives us an idea of to what one needs to sign. The digital signatures, your letterheads. The RBI circulars, of course, now you have it on the QR code, the WRC has provided you. The guidance note, branch audit program. Of course, every auditor has a different branch audit program because we have a different checklist. Most important, carry the, in case your bank is on Finacle 10, carry the transaction codes which would be relevant. Guide the team members which are going probably for the first time as to, what are the transaction codes which he would need to use when doing it. And then, of course, the index of the circulars of the RBI, which would be required for you as an auditor. Now, this, I think, is available on the rbi.org.in, which is the master circular. A number of master circulars the RBI issued this year after 2015, like I said. The master directions which are there, the circulars, the press releases, and friends, for me, I think on a few topics, I think, the FAQs are of great help. The FAQs on MSME is probably one of the very detailed document which you can use while taking it. In fact, all of them are available on the RBI site. You can download it and take a printout if you want. Even there's another FAQ on the priority sector, which again is always there's a conflict between the auditors and the management as to, whether this is a priority sector or not, etc. So, you can take that FAQ along with you. Then, of course, the mother of the bank branch audit, you need to have a copy of the RBI Master Circular on IRAC norms and advances, 1st April 2022. These are some important circulars which are issued during 2022-23, not too relevant for us, but then, last few years, 2018-19, if you find that, there were a number of restructuring which was happening even during COVID period. And then because of that, the RBI is coming out with a number of circulars, which this year, because, there was no restructuring, all restructuring is done except for DCCO. I think, there's nothing where you can retain a standard asset classification, or probably the restructuring under the natural calamity. Otherwise, everywhere else you need to downgrade. So if there's a restructuring, close your eyes, get it downgraded, and get on with it. Then, of course, the master directions, which are important, which is number one, obviously on frauds, and also a master direction on the lending to MSME sector, which normally forms a large part of the most of the branches we audit. Then, of course, on the RBI interest rate, and then in case you visit branches on agriculture advances, then do not forget to download the circular on the interest subvention, which would be important because you would require to issue around 3 to 4 certificates on interest subvention. Then, of course, these three FAQs, which I would recommend, number one on the MSME, the priority sector lending, and of course, the FAQs on UDEN, because I get a number of queries on, do we require, so the institute has this FAQs on UDEN, which you can download, and then smart execution tips, some of them which we can quickly run through. Friends, as an auditor of a branch, we issue 3 reports. Number one, the LFAR. Number 2, the audit report under the SA 700 series, and then the IFC. Just before you close and sign off the branch, please ensure that there are no contradictions amongst these 3 audit reports. And if there are contradictions amongst these 3 audit reports, I mean, that is the document you're leaving for others to report that, look, I mean, it's a classic way of hiding an MOC, which you need to give, but you don't want to give it as an MOC of. Still, you find that, LFARs have some hidden MOCs. So, please do not do that. If you have to pass an MOC, just do it. I mean, there's nobody stopping you. But do not put it in the IFC or the LFAR. So there need to be no contradictions in either of these 3 reports. You need to identify the key risks in advances, because this will help you in executing. Number one, obviously, is the data integrity and mapping with the surround application. Friends, if you see Finacle 10, most of the banks, you would find that, the asset classification and the provisioning is not, the statement you get is not generated from the Finacle. It is normally an ASCROM or the CCIS or any other document which you would get, and which is probably, the data is extracted from the Finacle. The surround application is used for categorizing those assets, asset classification, and providing for. So this particular CCIS or ASCROM, whichever bank you're doing, so please take that, do not think that it is out of the Finacle 10, the CBS software. Carry out an independent check. I've even done simple checks like comparing the NPA date, etc., vis-a-vis the previous year's statement signed by the auditors, and I found errors there. If you get a soft copy of the previous year's surround application for asset classification provisioning and also the current year. I think, those of you are adept in Excel, you can do a compare then and then probably do that. I mean, that will give you new things. So please ensure that the date of NPA, the asset classification, the provisioning, and that there's no security which is repeated over different accounts of the same borrower. So these kind of things happen. So this is averse to a lot of risk since it does not get generated from the Pinnacle or the CBS. My advice would be that, please spend a lot of time on the surround applications which you get for the advances asset classification provisioning. And of course, the fraud methodologies which the RBI has given us, in case you have any borrower in the news which at the branch you're doing, carry out a special review of that account. Evergreen accounts, the RBI has given us some methods by which, accounts are being reviewed. So we need to ensure that. And of course, wherever can take a list of all the restructured accounts and ensure that, we review them and ensure that there is no maintenance of the same asset categorization vis-a-vis the last year, except unless it is of the because of the DCCO or maybe the natural calamity. The next two slides, these are some RBI identified reasons for evergreening. You can have a look at this. The accounts close to open new accounts to camouflage, accounts which are already NPA but were camouflaged to through evergreening, round tripping of funds given to parents coming back to SVB to regularize the account. And, you would find a number of cases where the BGLCs on devolvement, they are not debited to the main primary account of the CC to, avoid that account being classified as a NPA. They would probably be parked in a separate account, whereas the RBI Master Circular of 1st April 22 has a specific reason for, provision that this has to be debited to the operating account. I think I'll just take five more minutes. I know I'm, I think I overshot the time. Then enhancing the fund-based limit without assessment, change of the DP multiple times in a month, converting the non-fund into fund-based. So these are RBI identified reasons where, the banks are evergreening such accounts. So, as an auditor, as a for smart execution, we need to ensure that, we do not overlook all this. Frauds, early warning signals, there are 43 of them in the RBI Master Direction on frauds. So you can have a look at that. These are some of the items which are there, which I have highlighted, but then you need to list those 43 accounts, map it to the accounts which you are reviewing, at least the large ones of them, so that you do not miss it. See, even a thing like a raid by the income tax GST, the RBI says it can be one of the reasons for an early warning signal because it would result in a operational smart execution. Friends, I think if you are going to a branch which has agriculture advances, as I go across branches, I find that, this is one of the major confusions and, mismatch between the understanding of the branch and the auditors. So, I think before we actually set out to branch an audit, we need to unravel all the confusions which will happen in agriculture advances, which is a short-term crop, a long-term crop, a mono-cropping farmer, a multi-cropping farmer, whether it's a Rabi season, whether it's a Kharif season, whether it's a long, I mean, there are so many things which we need to, and what is the due date of the advanced Rabi crop or a Kharif crop, which I've given, whether there was a drought, whether, there was a natural calamity where I need to restructure. So, we need to be very clear about this before actually doing it. One smart check, execution check, which we can do in respect of agriculture advances list out all the accounts because they'll all be small accounts. You can't carry out a check on all them. Take a soft copy of that and identify all accounts where the outstanding balance is probably double the principal outstanding. I mean, so there you have a clear-cut case where all of them would be an NPA. There are some thumb rules, of course, and also you can carry out a similar review where probably the balance is 50% or more. Where balance sheet and profit loss, smart execution, just a few tips. Do not forget, other than advances, the other assets and the other liabilities. These are two heads where major things are hidden, other assets and other liabilities and branches. And of course, the contra items, which is the off balance sheet items in a branch. CCIS, ASCROM, I think, we already touched upon. And I think I end this. Thanks a lot for a patient hearing. In case time allows, I am open to questions. And again, before I close, I think I need to thank the organizers for inviting me. Thank you.
Thank you very much, Anil sir, for your deliberation on the smart audit planning. So if there are any questions, we invite the questions from the audience. Anybody? Any question? So I think there are no questions, and I assume that the topic has been dealt with very well. So for this, with the permission of the speaker, we will be definitely upload the PPT on the website of WIRC. So I'll request our immediate past chairman for the very well deserved vote of thanks.
Thank you, Piyush. The first thing which I caught on to when Anil ji was talking about was planning requires 40% of our time. And I would say it may need little more as well. As things keep changing and things get like as the banks do a lot more automation and a lot of technology. And which is what I think in the keynote address also, it was very clear by Karnatak ji that a lot of adoption of technology is happening. See, earlier, possibly we went to the bank, we sat there, we started asking for the files, looking at the documentation, and then the work started, and then the selection of samples started. But I think now, and he also talked about the essay on analytic procedure. And I would say that the analytic procedure sits ahead of the sampling. First, you need to do the analytic procedure, get the exceptions, remove the false positives, and then you know what is really going wrong in a way, or there is an indication of what is going wrong. And then you start selecting the samples. And even before that, see, he talked about a host of circulars, RBI and all of those. But I'm sure we are also issuing a report on the internal control or the internal control over financial reporting, as we call in India. Now here, the most important thing is the CEO and the CFO of the organization, the bank, has to prepare a risk control matrix, a design. One is design and second is checking the operating effectiveness. And I'm sure the moment a circular comes or the moment they make a change in the technology or in the way they do the work, they change that risk control matrix. It is getting updated. It has to get updated. If it is not, then there is a challenge. Again, you will have to report on the design of the processes which are there. So first is, I think, looking at getting those policy procedures, those SOPs in the bank, taking all the design of the internal financial control, the RCMs, looking at them, and then maybe starting or even doing an understanding and then writing the queries to do the analytic procedure and getting the exceptions. And let me give you one small example. Mr. Karnatak talked about all the letter of credit and bank guarantees getting automatically being issued. No one has to go to a bank branch now. No problem. But first thing, even before issuing a letter of credit or a bank guarantee, the credit assessment will be done, right? How much to be given? And that credit assessment either is being, and that also he said is now automated. That means the financial statements are there, you know, what is the turnover, what is the profit, and then you decide on the basis of certain factors. Like, okay, the limit is so much. I'm going to issue bank guarantees and letter of credit up to 2 crore rupees for this particular customer. Excellent. Then there will be the banking system which is going to control that whether it exceeds 2 crores or not. There are going to be a system-based control. That is an automated control. And if that automated control is not there or the software is not working effectively, manual control. Now, what is that control? See, again, guys, everything, whatever the world will keep on changing. But we as auditors have to first understand the process. What is currently happening in this organization that I'm auditing? And a union bank can be different from a State Bank of India, and it can be different from some other bank. So in that particular bank, how is it working? Is it documented properly by way of design of IFC or by way of processes? And then take everything, and let me draw your attention again to, see, WIRC also, ICA also does a lot of good work. At WIRC, we are running an IT course. Part 1, we teach coding in Python and working on SQL database coding. 60 hours, 9,000 rupees only. Saturday evening, Sunday morning, sitting at home, you can do it. Part 2, we have launched where we are teaching you Power BI, Power Query and Tableau. And that is only 7,000 rupees, 40 hours again training. And Akash Rugani only does, he's the last speaker, is going to talk about the Power Queries tomorrow on the banking. And now we are also launching a 3rd batch on robotic process automation, because most of the places he talked about, Mr. Karnatak talked about the data lake. Ultimately, from the data lake or the data warehouse or whatever you, if you want to pull out your data for doing an analytics, how will you pull it out? Either you go and pull out the reports and save it into a folder and then start doing the queries, or you employ a RPA bot to pull the data that you want from multiple places, bring it into one place, and then you write queries. What will compare with what? The normal procure to pay में मैं बोलता purchase requisition पहले के purchase order, उसके बाद GR और उसके बाद 3 quotation, उसके बाद comparative statement. Here again, there will be many things. For interest calculation, you will have to do something. For giving of loans and advances, again, you will have to do something. And to check whether it is an NP or not, what is the payment cycle, what time the money should have come in, whether it is coming in or not, and the exception reports will be ready for you to see okay, what is going wrong where. And I think that would be the starting point. So to my mind, understanding what the organization does, what softwares, writing the queries, getting the exception report is still what is, according to Sir, planning. And then you have the exception report, that is one. Then you go to the essay on sampling. While doing sampling, statistical as well as judgmental. Judgmental में आप काफी सारे जो reports बैंक के internal है जिसमें उन्होंने बोला ये गलत हो रहा है उधर, तो you can pick up the judgmental sampling. And of course, the third and the most important thing is, which we all don't do it so well still. Sir, data पूरा ले लिया, data पे analytics कर लिया, लेकिन ये पूरा डेटा मेरे कोई आर्टिकल क्लर्क के या तो मेल बॉक्स में या उसके लैपटॉप में है और वो चला जाता है, और जब भी मेरे पे डीसी लगेगा तो हाउ विल आई प्रूव दैट व्हाट डिड आई डू? एंड दैट इज वेयर इट इज इंपॉर्टेंट दैट वी ऑल हैव सम सिस्टम ऑफ मैनेजिंग दिस डॉक्यूमेंट्स और द वर्किंग पेपर और द एविडेंस एज वी कॉल इन दोस पर्टिकुलर स्टैंडर्ड्स. जो डेटा लेके एनालाइज कर रहे हो उसको एक फोल्डर में डालो, सर्वर पे या क्लाउड में ऑफिस में, नहीं तो कोई डेटाबेस मैनेजमेंट सॉफ्टवेयर बाय कर लो, फिर उसमें क्या सेलेक्ट किया वो भी उधर डालो, थर्ड पार्टी कंफर्मेशन लिया तो वो भी उधर डालो. ये सब आर योर एविडेंसेस, डॉक्यूमेंट्स, वर्किंग पेपर टू प्रूव दैट यू डिड द वर्क. Work not documented is work not done. Okay. So I think, sir, Anil ji, thank you very much. Really, so well you covered, and so many things you showed to us as auditors we need to do. And I am sure it is going to be a very good learning over the 2 days. So thank you. Thank you for your presence. Thanks a lot.
Since we are running late, we'll move towards the third session of panel discussion. I'll request C.A. Shweta Jain to escort both the panelist and moderator. Also, I'll request Asita to join with them. When we were structuring this 2 days program, the topic which we are now going to head towards, the expectations of bankers, and the session after lunch, the expectations of central auditors. So in dual sense, we as an auditor have a lot of expectations from auditee, as well as bank while appointing us based on their internal systems, their internal limitations. They address the auditors. A lot of banks have these systems of, doing a meeting of auditors and addressing them. But these ways, an interaction with the panel will be going to be more fruitful. And we have, both the worthy panelist, Subrat Kumar sir, as well as Ruma madam from State Bank of India. Subrat sir is from Bank of India. And we have again very knowledgeable moderator, Anagha. She's partner at MP Chitle, and she has been doing various central audits for last few years. And she's again one of the expert on bank audit, including banks, central statutory audit, branch audit.
Hello. ठीक. 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 Hello. ठीक.
With this, we start the formal session. I'll introduce our first worthy panelist, Shri Subrat Kumar. Sir is the Executive Director at Bank of India, and he has assumed office in November 2022. Sir is a BSc, MBA, CAIIB qualified banker. He has vast experience of 3 decades into the commercial banking and asset management company. During his stint with the banking industry, he has gained various exposures in the different areas of operational strategic banking, specialized expertise into treasury and international banking, the corporate credit inspection audit. He has held the various positions, including Chief Risk Officer and Chief Financial Officer of Bank of Baroda as well. Sir has been the speaker and has been the panelist at the various forums. Sir, we are really grateful to you for your sparing valuable time and coming to the ICAI, and we are looking forward for some such more session with you. Thank you so much for being here. I'll request our coordinator, Ashita Shah, to introduce the other speaker, Ruma madam, as well as the moderator, Anagha madam.
Thank you, Ketan sir. Today it is my proud privilege to introduce both the women, both the dynamic ladies in the month wherein we have celebrated Women's Day. Our moderator for the afternoon, Anagha Thatte. She is a partner with MP Chitle and Company, commerce graduate from Mumbai University, and a fellow member of ICAI. She is in practice as chartered accountant since 1998. And she is accredited certified information system auditor by the Information Systems Audit and Control Association, USA in the year 2001. Apart from that, she specializes as engagement partner for many of the firm's assignments in statutory audits, internal audits, information system audits, review and assurance services, as well as audit and assurance services to treasury operations of bank and primary dealers. Field of tax audits and corporate advisory services also. The industries in which she specializes is banking and finance, IT and services, manufacturing, utilities and infrastructure. Apart from that, she's also a member of RBI working group on Ind AS for banking industry, and a regular speaker at ICAI, RBI and ICACA Mumbai. With this brief introduction, let us welcome our moderator. Moving on to our panelist, Srimati Ruma Dey, DMD. She's holding the position of Deputy Managing Director and Group Compliance Officer from June 2022. As a Group Compliance Officer, she and her team are having oversight on 26 entities, 17 domestic non-banking subsidiaries, and 9 overseas banking and non-banking subsidiaries across the SBI finance conglomerate. She a career banker. She joined the bank as a probationary officer in 1990. During a span of more than 31 years in the bank, Srimati Ruma Dey has served in different capacities in the bank across various geographical locations in the country. She was general manager at Kerala in 18 to 20. This was followed by stint as chief general manager of Bhubaneswar Circle in 2020-21 and Kolkata Circle in 2021-22. She has varied experience in different fields of banking, credit and risk management, retail banking, human resources, agriculture banking, international banking and compliance. She's a certified associate of Indian Institute of Bankers. With this brief introduction, let us welcome our panelists.
Thank you, Ashita. I'll request Regional Council colleague Shweta Jain to please do the honor of giving Moderator to Subrat sir, and I'll request Chairman Arpit Kabra and Secretary Saurabh also to join for giving the moment to Subrat Kumar sir. I'll request Ruma ma'am to come forward for I'll request Anagha, Anagha Thatte to come forward for the moment of giving. Over to Anagha madam for starting this session.
Hello.
Good afternoon to all. First of all, I would like to thank overall ICI for organizing this very apt program, because since the bank audit season, as we normally call it as a practicing chartered accountant, as a season for audit. So the regular audit will be also on, and more emphasis on the bank audit. And in current days, I should not say limelight, but the entire banking and finance sector is really under a very turmoil stage as far as the US or the international banks are concerned. Every other day we are getting some of the other news about this bank is collapsing, or US or Fed has given some help to this bank, that bank. In today's newspaper also there was a news on this First Republic Bank. So with all these kind of things, in past few days there was news about Silicon Valley, and Credit Suisse was also in negative talks. So with all these things, really the timing for this program was very, very good. And I should congratulate the entire organizing team for keeping this program, and the entire auditing faculty who had joined. Along with that, I would like to thank both the experts with Subrat sir. So Subrat Kumar sir, I dealt when I was doing the Vijaya Bank audit, and being the SBI representative, like SBI to har ek Indian banker ka bank hai. So we are having the privilege from these two most PSU C-suite employees or the C-suite executives to have an open dialogue with the auditee, and be very focal as far as, or very vocal as far as their expectations from the overall auditing as a function is concerned. And more so when it comes to the central statutory auditor as well as the statutory auditor of a bank branch. What are their expectations from this entire system? Is there any gap or any introspection is needed from both the ends? And in today's paper, when the RBI Governor sir has given a very apt statement as far as the risk management, why Indian banks have not had those kind of heavy shocks, is the entire credit goes to RBI regulatory mechanism, the overall supervising what the RBI is getting employed or deployed at various stages and in various sectors in the banking and financial industry in India. That credit goes equally to the RBI's overall supervising mechanism as well. So with this background, I thought that let's have an open dialogue, that as an auditor, what we should be doing, and as an auditee, what are the auditee's expectation when it comes to the statutory audit as a function, and the year-end activities when we are at the fag end of March closing. And recently RBI has come up with the circular also as far as the bank branch audits are concerned. Both the previous two speakers have put the right tone. The earlier session on the smart planning and execution was really good, because it has set the tone that as an auditor, what we are supposed to be doing, what steps we should take prior to the actual execution, prior to visiting the branch or the corporate offices, or if it is a large corporate credit branch, if you are having the audit of that, what you should be doing. Because in majority of the things like the early warning signals or the red flag account, you will come across only if it is a large corporate bank. And in the current scenario, when it is the centralized environment, is the entire banking sector in India is more into the centralized environments, and in majority of the things, the decisions, the controlling thing, the supervising activities are being handled at a central level. It is more essential for the branch auditor to understand what the branch is doing. So with this small background, I would like to start few of the questions which I am having, and I will not keep it only for Subrat sir or maybe Ruma madam. It is open for both of them. They can definitely add their views, their expectations, any specific challenges. If auditor is also facing, we can take it at a later stage once we hear both the learned speakers basis their experience. So starting with that, do you agree, both of you, sir and ma'am, that is there a expectation gap between the auditor and the auditee in considering the current scenario or the overall international failures in the banking thing, which is just getting again in the limelight. Again, it is correlated with 2007, 2008 fallback, and basis that kind of thing, again, when the environment is slightly more risk prone, do you feel that there is a gap, or what is your view on that?
Thank you, madam. Thank you for having me here. In fact, in the Indian context, I'll say the RBI governor has also given a statement that Indian banks are safe, absolutely. And, the kind of systems and procedures which are in place, we can proudly say, yes, our banking system is robust and all that. Second point is very important. Any audit process, any conducting the audit thing is a collaborative. It should happen in collaborative mode. It is the joint responsibility of auditee as well as auditor. It is not that auditor has to do the job and auditee has no responsibility, and otherwise also. So now I think here the responsibility lies with both the entities, and we have to carry out this responsibility very efficiently and keeping other things also in mind, which we'll deliberate during the course of our deliberation. Now, coming back to the questions, what madam has raised, the recent spate of failure of banks overseas in US and all that. See, if you see basically what I understand from the failure of one or two banks which have happened, you see the major problem was their ALM. And liquidity is the lifeline for any bank, even for the stronger bank, you can say liquidity is the lifeline. If that is cut, any strongest bank also can fail. There, what happened? See, it kind of, very, you can say focused kind of analysis. If you do the entire treasury operation, you can say, people talk about in Indian context, we always say narrow banking is the safe banking and all that. You must have read in the newspaper, but sometimes narrow banking also create a problem, and which is a glaring example in US. They invested in the treasury, US treasury, 10-year, 8-year, expecting in anticipation of better yield at that point in time, 3 years back, when the yield was 10-year yield was ruling around roughly 1.5, 1.6%, right? After that, they could not anticipate that the rate hike will happen. It will happen very fast, very rapid. They could not anticipate. Ultimately, what it led to? It led to mark losses to their books. So this is how, ALM desk should be live of that situation. They should have red flag this situation. This is the expectation of interest rate cycle, and interest rate is likely to move up. In that situation, you have to reduce the duration. This is a, very, very pragmatic and prudent way of handling any risk. And also because of the greed of having more kind of yield, they went, very aggressive in mortgage-based securities. So ultimately, they took a heavy hit on account of increase in interest rate, and their MTM position went worst. So now what they did, they invested at 1.6%. You'll argue that they could have borrowed. Yes, they could have borrowed against that treasury securities, but what rate? Fed rate has gone up during the process at what? So they were borrowing at 3.5%, 4% against the yield of 1.6% in the portfolio. So there the mismatch, they could not carry much. And in fact, there's another, the way they communicated with outside world, that was also very faulty. MTM is a notional gain or loss unless it gets crystallized. You all will agree with me, right? So after a certain point of time, if interest rate cycle reverses, this entire situation would have come to normalcy, and then it could have been handled in a much better way. But anyway, that history is history. So I think this is what has happened. And here in our case, our audit system is so robust, our inspection system is so robust, risk management practices are very, effective. So we always take care of this ALM mismatches and what kind of risk we carry in the books, what is the earning at risk at any point in time. We are in a position to find out. So I think we are quite safe so far as these issues are concerned. So this is from my side.
Yeah, thank you, Anagha ji. First of all, before I answer Anagha ji's question, I must thank ICAI for organizing this very timely and very apt conference, because this is a time when across, we have 22,000 branches, and totally there will be more than 1 lakh, 2 lakh branches of all in the financial sector, and the auditors will be spreading out to these branches. So such sort of an interaction is definitely going to help the audit fraternity to know exactly the pitfalls which are there. Pitfalls in their understanding, pitfalls in the understanding of the banks. So thank you very much, ICI, and for inviting me to this August banking conference which is being held. Coming to the question, expectation gap. There are two types. One is expectation of the auditor, expectation of the auditee, between the auditor and the auditee, which can be, the gap can be reduced by constant engagement with the, in between the auditor and auditee. These sessions which you all will have over the next 2 days, this will help you to understand this gap and bridge it as much as possible. But there is another expectation gap in the light of the financial sector crisis, which is slowly happening. For the outside world, my bank may be having different types of audits. We have internal audit, we have concurrent audit, we have our risk-focused credit audit, we have FEMA audit, so many types of audits, which is internal to the bank. However, the audit done by the statutory auditors is outward facing. You, as an external person, you are giving the report of the bank's affairs to the entire world. And therefore, if any bank is failing, then what were the auditors doing? What were the rating agencies doing? These are questions which likely come up because the people have faith that once an organization is audited by the statutory auditors, then things are right. So that expectation gap, you are the face of that a comfort which we are giving to the stakeholders, to the investor community. They go by the annual report. They'll say, yes, annual report it has come out correctly. It is the affairs of the company are being held are being conducted properly. So we are safe to put our money, whether be it as an investment or be it as a depositor or be it, even taking loans, to be, that, okay, we are being treated fairly. So that expectation gap, we both as auditor and auditee, we owe it to our investors, we owe it to the entire community at large. So these three types of expectation gaps, we have to take care. I think that's my.
Yeah. Thank you, ma'am. Thanks, ma'am and sir. Now moving to the second aspect, that as in the smart planning also sir has already covered that like KYC is made mandatory by RBI on the banks. That way for the auditor, we are also required to do a KYC for our auditee, our client, that is know your customer. And so in this case, being customer is a large size bank, let it be a PSB or a private sector bank or a small finance bank or a UCB, any bank, any type, but ultimately pertaining to the banking sector. It is very, very essential for the auditor to do its KYC before actually the planning thing happens or before they accept the engagement, and they are aware that where their role starts and where their role ends. And for doing a proper deliverables or the proper delivery of the expectations and to bridge the gap, what he should be knowing about the auditing. So, sir, pertaining to that, as far as the know your client is concerned from the annual audit point of view, what you would like to share your thoughts to the audience, that what could be the basic minimum thing?
See, once the engagement is finalized with any auditor, right, audit firm, after that, they should know the entity which they are going to audit, the bank, concerned bank, the management, concerned management, the culture of the bank, the style of functioning. Then you can say this other part of the like systems, procedures, and the softwares which they are using. Because see, now data is fuel. We used to say now data is in digital form. Most of the banks now it has come in digital form. So what kind of system and the procedures, checks and balances are there? What is the compliance status? And many things are available in the entity with the help of which you can find out the ascertain with a fair degree of, I can say, confidence, the status of the bank, right? And because you validate our financials, non-financial aspect, and your validation carry a lot of weight in the outside world with your, in your fair assessment. I will not say whatever you validate is absolutely correct, because it's not possible also, to be very fair with you. A fair assessment, you do that. So I think this is the thing, once you are getting onboarded to any bank, these are the things which you have to interact with all vertical heads, and here CFO plays a pivot role. He has to connect with all the vertical heads, understand system, how the paper moves, how the processes are there, sanction happens in case of credit. It's like what kind of monitoring is in place, which vertical takes care, all those things. So these things are required before you get onboarded, and the understanding of the software is very, very important. And sometimes what happens, I'll say, now in the complex world, many complex products are being used by the banks. Many complex products are there, where auditors are not even aware of what kind of products are there in the bank. So you have to, your job becomes, it's like you have to take, you have to make double effort to understand the system, procedures, understand the software, how the entire flow happens right from end to end. And the other part is that understand the product itself. What will be the ramification if something goes like some kind of situation? If it goes this way, then what will be ramification, whether audit trail is there or not in the system? Some of the officers or anyone, whoever is, like they can manipulate the system without having any audit trail, whether that system itself gets validated by the outside agency or not, whether proper IS audit is happening in this, many things. So these things at least have a checks before you get fully onboarded. This is my, thank you.
Being the largest
Yeah.
bank in India, ma'am, from your side, we would more like to know.
Yeah, I like that term, KYA.
Yeah.
Know your auditee. So I think that is one thing which you can convey to all your members. Know your auditee. In fact, when I was sitting upstairs, they said your ICAI also has something called Know Your Member, KYM, right? Started. I like that, KYM. That's new term I heard in the morning, and now KYA. I think KYA is very, very important. In fact, I actually missed Mr. Anil Saxena's lecture. I came in the last 3-4 slides. So now I'm thinking, no, I missed his lecture. I think it was very, very good, sir. And very, very, very catchy. Without having all those, chota chota likha hua, you don't remember baad mein kya ho raha hai. It was very, very, very effective. So I will ask for a copy of that, so that I can warn my people. भाई देखो अनिल सक्सेना जी ने ये सब निकाला है, ICAI के वेबसाइट पे है, ये सब आप ख्याल रखना. So
It will help.
yeah, it is for both, benefit of both. So I found that very good. So it is a part of that smart planning, and it is a part of know your auditee also. Nowadays, with everything being on the net, the banks are also very transparent, particularly if we're speaking of my organization and all other PSBs. We are very, very transparent in what processes we are doing, in what the systems we are implementing. And in most of the places, we are very upright also about it. That yes, this is what we are following. This is our interpretation of the RBI guidelines. So a couple of things. One is know your auditee may, what the, like sir said, Mr. Subrat said, that what systems, what are the products they are doing, and how it is being done both in the digital as well as in what are the manual controls they are having on it. And secondly is what you need to see from the RBI guideline perspective and how these guidelines have been implemented in the bank. Normally, this information will be given by the circle financial officer, the AGM audit, who is there in the circles. We have the concept of circles. So in the offices, the AGM audit will be able to give you, and you need to be aware how the auditee is doing it. That will help you, it will save a lot of time, and it will also help you to zero in down on the areas which need your attention and which needs to be brought to the attention of the top management. So that is maybe, you can just have a format also for it. Just like for KYC, you have, these are the things. You can also have a format for it. Maybe a little thinking will be required. It's exactly what, but some format, can be there. How robust are the IT systems? How is the information security being handled? And going forward, you will also have the, data privacy and data protection, which will come in any time. So that will also, be required. It will become a part of the auditable going forward. So that also needs to be looked at.
Thank you, ma'am. So moving to the next point, as in the audit report or in the overall execution, we have to state that we have relied on the management representations. These are the significant representations which every auditor should be aware of, that what those representations are. And every management employee who is ultimately on part of the audit signs the MRL, they should be also aware, because financial statements are really the financial information, but where the management estimates play a very crucial role. So as far as the MRLs are concerned, what is your view on that? Because in the real life scenario, sometimes it happens that the management says कि orally तो मैं आपको बता रहा हूँ ना या बता रही हूँ ना, but why you want it in writing? So how to do the balancing act in those kind of scenarios where auditor can take a stand, I'm relying on your representation, and management may say that I will not give it in writing. I'm showing you the case or the evidence, but over and above that, I will not give you in writing. So how to handle these kind of scenarios?
See, when you are going in as an auditor, whether for a branch or for the, central or at the circle level, there has to be a basic element of trust between the auditor and the auditee. Otherwise, it becomes, fist fight. But the auditor ye bolega, auditee bolega, nahi, ye to nahi hai, ye hai. So a basic element of trust has to be built in. That element can only come when we one is that KYA, that your auditee, and second is the auditee also is aware that the auditor is here to help us or to ensure that we are in the regular scheme of things. We are not doing things which are not permitted by law or which are against the regulations. Because whenever anybody is doing work, it is very natural that mistakes will happen. Very natural that there will be some deviations, and very natural that, these will continue to be there. So whether if there are deviations, whether they have taken the right, what is it called? The permission for those deviations from the competent authority, whether that is in place. And secondly is whether it is overall, it is in tune with what the RBI guidelines are. In fact, when we were discussing in one of the meetings, where as a bank, we are relying on some certifications from one of the circles, from one of the branches. So there was a thought that because I belong to compliance, how we can validate the certificates also. What is the process? So right now we have, formed a small working group in the bank where we are thinking how we can validate these certifications, because you are also relying on these certifications. Sometimes as a bank, as sitting in the corporate center, I have to rely on the certifications of some branch, of some circle. So how we can also test these, validations going forward. So that also may be one way, in which you can check these statements. From this.
I will just add here, this entire management representation thing is about the interpretation of any issue. When it comes into the picture, then only this management representation comes. Because I think I have got my way of, looking at the things, or looking at the circular, looking at the guidelines. And if you have got different ways, so I am pretty sure if this is a logical way of looking at the things, then I will give the representation. That is one way. Second thing, the auditor should also be very practical. Because of this certification, means like something like that, if some external certification is not there, and you want some kind of representation without that, so bank will not be in a position to give any kind of, this kind of representation to you. Third point, especially in case of statutory branch audit, I have seen timelines are there for completion of the branch audit, and if they are by any chance they are not in a position to complete the activity, again they want not a representation, I will say, but kind of certification. If this you have done as per this guideline, I am okay as per this guideline. This should not substitute this kind of certification. So auditor should be very careful, because see, if any branch head, ultimately he is a human being, he or she. So we can give end number of certificates, and based on that, if you are auditing, that is, I think they should be a little careful, because ultimately what happens, bank management also comes into the trouble in future if some incident happens, and auditor also comes into. So you have to pan out your entire audit process in such a way that it can be done in a reasonable timeline. And this kind of do in exceptional situation, not in the general matter or routine matter. This is what I think.
Okay, thank you, sir. In the overall audit scenario, when as part of the know your auditee kind of thing, the auditor is aware that which one is the first line of defense, who is the second line of defense, and like where his or her role starts being a statutory auditor. So in this case, both the banks, maybe a private sector bank or a public sector bank, has this requirement of the internal audit department, and the external, maybe the concurrent auditors or the revenue audit, inspection audit. So many things are there. So pertaining to these kind of audits which are getting spread out during the year, and it is expected that when you will plan your audit and start the execution as a statutory auditor, the statutory auditor is required to take the cognizance of those reports, find out the expectations. But sometimes it happens that in LFAR, just the cases, even though it is getting closed, it is getting documented, and hence there may be some kind of conflict when the LFAR, basically from the branch level, the branch LFARs which got issued, those kind of scenarios happen, and the SCA does not take into consideration the closed issues and all. So for those kind of things, ma'am, what you would like to say pertaining to the line of defense which is inherent in the banking system, and how the auditor should take care of it?
Yeah. See, in India, the concept of, these three lines of defense, particularly in the banking industry, came in much later than what it was abroad. Abroad, these three lines of defense are very clearly demarcated. What I find is these three lines of defense needs to percolate down to the branch level. The third line of defense, luckily, is identified. I belong to the second line. The challenge is to know how to get into the second line concept. But third line is independent, and in our organization also, people are very much aware that audit is an independent thing. So yesterday when I was thinking about the topic, I said, okay, third line to audit to ho gaya. Then audit may be, if there is something like 3A, 3B, 3B, 3C, 3D, 3E. So statutory audit is the 3E part of it. So we have our internal audits, and we have the concurrent auditor, all this PEMA audit, this audit is taken care. But the final and the last line of defense is the statutory auditors. So therefore, there is a very big responsibility. And like I said in my first response, that this is your responsibility is to the world at large. So therefore, a very close coordination is required between the auditors at our circle level and the SCAs which are there, and the management. And that has to flow, because we have so many branches, so it has to flow from the branches. For LFAR, normally what happens is many times discussions are not held. At the top level with the SCAs, the discussions are held in a very, very structured manner. However, at the ground level, the branch person may not, discuss anything with the branch manager, because it is a natural tendency of the business branches and all कि एक तो हम इतना customers handle कर रहे हैं, इसके ऊपर ये audit आ गया. इतना 31st तक हम इतना मेहनत किए, सोचा था कि ये 1st to 10th थोड़ा आराम करेंगे, कुछ नहीं, again auditors have come on the head. So in fact, many branches, they say, अभी business बंद है, audit चल रहा है. So we are not able to attend to, both businesses. So that you can say it is the fear of audit, or I would not put it as fear, but just, it is an unnecessary burden which has come to the branch. So there is no link. Many times also the auditors, they send very, very, I would say insufficiently experienced people at the branches. So what happens is the branch manager also feels कि मैं ये इस inexperienced वाले से मैं क्या बात करूं. So branch auditors also should send a person who is reasonably experienced. By reasonably means he should know what he is talking about, rather than sending freshers. I find many times they send bilkul freshers who are learning. The bank should not be a training ground for the freshers. So that little bit needs to be taken care of by the auditors. And if that engagement and that conversation happens between the branch auditor and the branch managers and going upwards between the branch auditors and the SCA who is there, then, the LFAR also will be more meaningful. It will be attended to also more meaningfully. That discussion needs to happen. We have it in our bank. We have a midterm review. When the audit process is going on with the circle auditor, we have a midterm review where all these issues are raised, and they have, conversations with all the business units. What exactly is happening? This is what we are going to give. This is our observation, whether you can rectify it and all. So it can be made constructive by the joint efforts of both at the branch level also and at the circle level. And obviously it is already happening at the corporate center level.
Sir, you are saying that.
I will only add that LFAR should not be taken as a routine kind of matter. You have to come because you get very less time to finish that activity, right? And ultimately, sometimes it becomes, embarrassing also for auditors afterwards, and as well as for the entity also, because LFAR is basically document of auditor. It's not a bank's document, right? So there what happens, cut paste for last 3 years continuing. It means nobody has paid attention whether it has been fixed, rectified, resolved. Nobody is taking care of that. And sometimes guideline which was there, now it is not in vogue. Still we are continuing and referring to those guidelines. So I think it needs some more attention. This is one part so far as LFAR is concerned. And what happens in most of the cases I've seen, it has been left to the bank, whatever they prepare, ultimately they sign and sign it off. That's all. So that part should be taken care a little more seriously. The other part is that now going forward, most of the banks are moving towards centralized banking, right? Centralized, when I say you have got the retail processing cell, SME processing cell, large corporate banking branch, the trade finance centralized, entire transaction processing is happening centralized. There, what madam said, there you need, right resource, a skillful resource. So a chartered, I think that day is not far when a chartered accountant firm will be having a high-end kind of technical person sitting there, running or writing the SQL query to get the data. And, having expertise in treasury operation, trade finance operation, risk management, everything. It's like then you will be having a holistic kind of approach to audit or appreciate the even auditing point of view. Because here the problem is that there's a disconnect. I am saying from some other wavelength, you are understanding from some other wavelength. So those wavelength doesn't match because of, we don't have proper connect, because that subject matter maybe you have not come across, but it is prevalent in the bank. So I think you have to have right resource in audit firm. Third, very important point, I have seen in case of concurrent auditor also, what madam said, it is absolutely right across the bank. Very, I will say the resource is very naive, new kind of resource is put on the job. Now the problem is that if something goes wrong in that branch, then ultimately entire investigation happens and all. So what bank will do? Bank will say, I have put concurrent auditor there, they failed to detect this issue. They will report to IBA, they report to ICI for blacklisting. And if it goes to some investigating authority, then matter becomes further worse. So please, I know there are some fee issues also. Normally I have heard, let me be very candid to before you say the fee is, that means like fee is not sufficient enough to absorb the cost of high-end resource. That's correct. So we have to take some steps forward. You have also to take some steps forward. So otherwise we are jeopardizing the entire audit process in the bank. So you'll appreciate that. We are definitely open to that, and it should be in line with the industry, whatever fee is stipulated. And that also you have to keep your resource updated and the quality of resource suitable for that particular branch. That you please take care of those parts. Thank you.
One more thing I'd like to add, in the context of the other speaker who was there after Mr. Saxena's, vote of thanks, he spoke, I don't get his name. Mr. Matuza, yeah. He said, you have to have systems to identify and put it, that, okay, you can retrieve it later on to prove that you did the audit. Documentation, yes. So LFAR, what happens is, like he said, sir said it's a very rushed affair because of the time constraint. So some statements are made. And then, we are asked, okay, fine, this, now how do you rectify this? So we go back to the auditor and tell them, please give that sample, you said these accounts are happening, please give me that sample. Sometimes it doesn't come. So we are left with a dilemma, neither can we, do a root cause analysis with that sample and find out what is happening, but it is there in the audit report. I have to answer that audit report. I have to comply with it. So that keeping those, the documentation and keeping it in any cloud or any wherever, storage, that is also very, very important, which should not get missed out because of the time constraint of LFAR.
A very touchy issue both the experts have dealt with. One is the adequacy of the specialized resources, because being treasury or the large corporate, digital banking is another challenge that समझता ही नहीं है कहाँ से क्या link आ रहा है, कौन से GL में जा रहा है. When RBI is coming up with heavily on this inter-office account and the proper reconciliation, in the normal banking scenario also, it is not a job of by doing that reconciliation by one application. There are n number of applications running at the background. Each application has to talk to each other or the central reconciliation tool and then give the result. In this slicing of work scenario or the decentralized, so to say, as far as the transaction is concerned, and centralized as far as the reconciliation or the control level thing is concerned, when it comes to the reconciliation team, and if that reconciliation team is getting audited by the statutory auditor, they just give a static reply ki ye to tool ne report diya hai. Now you reach either to the branch or the transaction originating agency or write to CPC. So in this whole scenario, because as an auditor, and when the topic for today's panel discussion is the auditee's expectation, I am just try to do the balancing act. So with resource shortages, the technical specialization, at the same time, sometimes it really happens that maybe for any reason, but the auditee is not ready to give that information in the sense the required log. That a classic case is in ENPA or the NPA automation circular. RBI expectation is the audit trail needs to be maintained. So when the auditor goes and he says audit trail dikhao, neither the person who is dealing with that auditor is aware ki audit trail dikhao matlab kya dikhana hai inko. And then he puts some remark maybe as part of LFR or as part of his communication to SCA. If it is a SCA, because normally NPA gets finalized at the central level, then the central statutory auditor will also put some comment as part of his communication to the top management. So my question to you is, in this kind of balancing act, when sometimes it happens that the auditee personnel say that ki nahi yaar ye to technical hai, yeah, specifically sir, in case of the structured derivative products, it happens that MTM aaya, there is a calculating agent who gives the confirmation, and if the auditor would like to ask few more questions, till last month there was a positive MTM, how come in this month it has come as a negative MTM? Then the person may get irritated, or he will say, "Arey wo na wo calculating agent hi deta hai. My job is to give this statement to you." So in this kind of specialized or a peculiar scenarios, what is your solution to it, or how, being the largest bank, in your case, you handle these kind of scenarios?
What happens is, major conflicts come, NPA declare karna hai ki nahi karna hai. That is correct. First thing, NPA declare karna hai ki nahi karna hai. हाँ, MOC में क्या डाल रहे हो? So that is the major, thing, issue which comes up. So there, I would like to narrate one incident. I was the branch manager. I was not actually branch manager. I was the head of the division. And this particular customer was not ready to pay up. And he was one of the staff only, and a very senior staff who was not ready to pay. And we interpreted the circular as that he has to pay that interest. And he said, no, the interpretation is no, you're incorrect. I will not pay. It was an educational loan. He said, my son will pay. वो भी पढ़ाई कर रहा है, वो जब करेगा तब करेगा. And he was going on studying, MBA हो गया, MBA हो गया, फिर PhD गया. So there was he was evergreening his studies. And I had this problem where I could not, I just could not, even I was quite junior, even he would not allow me to enter his cabin also. So I had a problem. And when the statutory auditor came, and, he was indicating that that account should become NPA. So I realized only this auditor can make this man pay. So I told him, yes, sir, आप insist करिए कि ये NPA होना ही है, because even I believed in it. Basically, I believed that yes, he must pay or it should be an NPA. But senior officer का तुम कैसे कर सकते हो? We are a hierarchical bank here. So then this auditor, insisted, and I remember it was late in the evening, 7:30. He said, nothing doing, I'm making this as NPA. So then of course, I didn't take him with me. I took my boss, I took my AGM and went told him, sir, I have no choice. Okay, fine, you tell me, you are my senior, you will tell me. But I have no choice. The statutory auditor has decided to make it NPA. And mind you, he paid. He paid it because, we knew that what the statutory auditor is telling is right. Yes, this year's So he paid it. So now what happens is, that one, I had that trust. I believed in it. So I just took it as a, I just took his support to make that account and, prevent that, make the person pay. So it is like that. So we should, both auditor and auditee should know what they are talking of. And as a bank also, we should be prepared that these are the likely questions which are going to come based on the guidelines, based on the regulations. A little bit of preparation from our side also, as banker side also, to face the audit, I would call it, would go a long way, in making it more fruitful, both for the auditee as well as for the auditor. So that is, I think, we should.
See, in case of NPA, 90% of cases, I think there is no dispute. Only 10% of cases, this kind of situation arises. And we also appreciate that you are also answerable to somebody. It's not that it's like that we really appreciate. And so we don't want to put auditors also in trouble, right? So whatever is ultimately, whatever you read, whatever your qualification is there, at the end of the day, common sense and logic work. Beyond that, we can't do anything. So that is very, very important. So ultimately, we realize that this is NPA. Then we have to categorize it. There's no way we can hide it or somewhere, or we can request you or literally pester upon you, you don't make it NPA. This is point number one. Point number two, there is always escalation thing is there in every bank. I told you in the beginning, CFO is the person, if he is not able to resolve the issue, you can go to the ED, DMD, MD, all are there, all are open, because you are our eyes. If if you are not doing your job properly, then we will be in trouble ultimately, I tell you. So that's why you have got all the way up to MD, and not only MD, you have got access to ACB also, right? Audit committee or board. There you can go and give when you give your presentation before ACB, you can always flag this issue. So I think most of the cases thing get sorted. So escalation is there, so it is good thing. You can always reach out to a level where you can get the solution. I will just, what Anagha madam said, MTM and all that, one thing just struck me. See, MTM is also okay. Somebody is there to give you this mark to market value. I am talking about where it is mark to model. There is no even market. You have to go feed in Bloomberg or some system, and then you will get the value. And no veracity of that value. That kind of product has also come. So I think it requires a lot of validation. And if any bank is, taking that or dealing in that kind of product, there should be proper checks and balances. And otherwise, it will be very difficult for you to check the actual market value, because it is dealt with model. There is no market value for that particular product available, right? Thank you.
Yeah, please.
We can't hear you.
Or come. I will.
Hi, this is Akhilesh. One area in branch audit is IFC testing, which has been introduced since last 4 or 5 years back. The thing is, awareness about IST testing as a branch auditor is very less. When we go as the auditor for IFC testing and we ask for some sample in IFC, they are totally blank. They need to ask their circle office, regional offices or something. So this area need to be very well taken, because it goes to your balance sheet. As a CFO, you must have handled, sir. So this is, which is a very gray area in our banking. And as a part of timeline, 7th, 10th or 15th, they have to complete the balance sheet. We also cannot write negative, because in one branch is IFC is negative, it will go copy to all the branches, because system is same, criteria are same, everything is same.
So this area need to be very well taken as a banker, as an auditor also. We need to take this. This is very gray area and not to be taken. It is like tick mark it goes like आपका जैसे वो ढिलानी घोष कमेटी जाता है कि last year what was there, yes no, our juniors copy this. So this is one more major area which need to be covered. And one more area, when, as you rightly pointed out, verticals are there now. But in some of the banks, advances are parked in the same vertical. But in some of the banks, advances are parked in the branches. Sanctioning authority is different. People doing the sanction are having different mindset, discussion with the client and everything. But account is parked in the branch. Some other auditor is auditing the branch and some other auditor is auditing the center. And in processing center, there is no advance parked, most of the bank. So auditor goes and sign the balance sheet because they have to audit the balance sheet. They don't have to audit the process. Even if they audit the process, they will write something in LFAR. But it is not a matter of concern, sir. You will appreciate this, Saxena. So as a part of this, when we go as a branch auditor to some bank, branch manager goes, sir, all these documents are at the CPC or some processing center. So it takes a lot of time if you want. So if you want 10 files, you'll get 2 files. It's not that somebody is doing it intentionally. But practically, sometimes it is not possible. So these areas should be also dealt with. In SBI, we have seen, madam, the SBI circle office need to specifically mark their RMs. You have to keep all your files ready in CPC. And they used to give slot to the auditors because in single CPC, there may be 20 auditors coming to the branch. So they need to give slots. Sir, half day you come, 3 teams come. So we have seen that in SBI. But as a banking, we have to concern these areas very well. Or you can give your ideas, sir, on it.
Yeah, ICFR is a very correct point, because what we have seen is at least at the branch level or that way, other than the centralized locations, they may not be aware that what is mean by the risk control matrices, and they are fully aware that ये मुझे process start to end ऐसे करना है, but उसका KCA KRA क्या है, and this auditors team is also very smart. Like bankers use short form, they have started using RCM दिखाओ, then the branch manager will say कौन सा RCM, मेरे पास तो सिर्फ इतना ही आया है. So these kind of things as part of maybe the, as SBI always does, the opening meetings.
Yeah, we have a very, very good system of, before the audit starts, all branch auditors and the statutory central auditor for that circle, they come together in a meeting where all the controllers are introduced. All controllers are introduced and given that this is the coordinates. So in case you have any problem at the branch level, then you please escalate down. That escalation mechanism is also there. Further, what you said, and yesterday when we were having the discussion, now the centralized processing centers, their AGMs are also called so that they can plan out, itne auditors aayenge to ye slot unko dena hai to see the documents. So that planning has to be, very, very meticulous and very fast also. Otherwise, you cannot do it. The timeline is so short that you just cannot do it. So that way, in our bank, we are taking a lot of care to ensure, that the audit process goes on very smoothly. And, वो दिन भर रात भर वही चलता है. कितना ब्रांच हुआ, कितना का क्या हुआ, कितना CQ हुआ, कितना CRA हो गया, कितना पेंडिंग है, क्यों पेंडिंग है?
You would like to add?
That's the only thing is that the pre-audit concept is very, very important. So because we all appreciate the time is not sufficient. That's why we say, like, for example, 31st March audit you have to do. They start right from 15th March itself. Deputy your people, they'll go through the documents. The only thing is that up to December, you are having everything, right? All audited numbers. You can go through entire thing. You have got 15-20 days time to go through. And maybe by first week, 3rd or 4th of April, most of the banks, they provide you the data dump to use it. Then from that date only your audit count starts. It's not that from the 1st April itself. So we make it very clear. If we are not able to provide you data, what audit you will do? Right? So data is to be provided, and that data should be correct data. And when I'm saying data, there is multiplicity source also creates a lot of problem. It's like some data interference or multiple data points. So that also we have to check internally, and the sanitized data we have to give it to you so that you can start the process. That's the thing.
Thank you, sir. Moving to, yeah, please. If you don't mind, can you come in the front?
Thank you for your kind, kind of support and kind of for creating an awareness. But from a comprehensive perspective, don't you feel that just a matter of 3 days doing an audit, does it justify the audit process itself? Okay, because even if you take a small private limited company, our members spend at least 3 weeks. Maybe it could be just a 10 crores of turnover. Okay, but looking at from that perspective, just a matter of 3 days or 4 days, it looks more of a ritual, you know. So branch audit. No, it has to be maybe probably you can start the process sometime around March 15, let it go up to April 15. So in between the auditor can do something, can do the audit and then come back, send you queries, you can give the replies. No, it can be made a wholesome process. Okay, so I believe this is like more of a ritual actually, because really no auditor would be able to really satisfy himself. Even going by the very definition of auditing, auditor need to satisfy himself. But mostly this satisfying himself cannot take place only if you want to speak honestly on that. Thank you very much.
See, I will respond to your, this observation this way. See, nowadays, most of the banks are having centralized service, centralized processing cell. So now branches are mostly acting as a, at an interface with the customer, means they are selling the product. They are selling the, so branches centralized cell. So branch level is still, means like in case of Bank of India, I can say we are the only public sector bank where the total advance, almost 93% advance is under audit, right?
Oh.
Though RBI has reduced, but still we are maintaining 93% because it gives a lot of comfort to the bank management also. What I am saying, coming to the point, is that now things are moving away from the branch banking to the centralized banking. So that's why now going forward, branch may, it's like you don't need much of time to go through the documents in branch because documents are also at the centralized processing cell. Monitoring is also happening. I think in some of the business models, I can definitely tell you, monitoring is also happening at centralized processing cell. So attention is given to centralized processing cell rather than this front office, which is only sourcing the proposal or acting, as a nodal officer for the customer, interface with the customer. Beyond that, nothing much is happening at the branch. So they are marketing agent of the bank, extended arm of the bank to source the proposal. Their audit part may not be that important compared to centralized cell.
Yes, sir, agree, but what?
Correct, that's correct. But I'm saying the burden has come down from the branch to centralized processing cell. Now, for example, I can tell you in my erstwhile bank, or even in case of SBI also, these in Gandhinagar, most of the back office operations are running. You will find 300, 400 staffs operating from there. So that has become now hub. So entire transaction of LC, BG, forex related, everything has become centralized, which used to be at the branch level earlier. Now, the thing is that customer sitting in his office, he can upload the document straight away from the system. It goes to the transaction cell. He will see everything. He will see whether Finacle has limit is there or not. FEMA guideline is complied or not. RBI guideline is complied or not. After it will go to SWIFT and the necessary instruction will be passed on. So what I'm saying, things have changed dramatically during last 5-6 years. I think Madam would agree with me.
Yes. So branches have more become, sales and service, more transaction oriented than advances oriented. Of course, there are specialized branches where more time is given. If you're doing a CAG branch for us, or you're doing a CCG branch, it is a long period is given for that particular branch. It starts also.
That's correct, but other thing, if it is subject to concurrent audit, for example.
Yes.
He said that can be one of the cases. No, and I think, no, just to.
No, I think this can be avoided. This can definitely be avoided.
Definitely be avoided, and that engagement is very, very required,
Correct.
very much required.
And see, as it is, you are having this concurrent audit report, internal inspection report, so it makes your job little easier also.
Moving to the next point, and I think we have to come near the end of the session. So the last point from my side is, in this data privacy, secrecy, right to personal information, protection, so on and so many restrictions as far as the data per se is concerned. Data confidentiality is a very, very essential thing. And as part of that, sometimes it happens that the auditor may try to do a cross mapping of the GL what he has got, or the numbers what he has got vis-a-vis the MIS of the bank, or the internal reporting happens in a given framework, and he finds some mismatches. He asks for the additional data, and then in that case, the normal response is कि ये तो MIS है, ये नहीं दे सकते, या ये client data है, I cannot give you the SOA, आप screen पे देखो. So in those kind of scenarios, ma'am, how, what is your say on that? How you want the auditor to react to this scenario?
Actually, with everything moving into the digital sphere, no, more and more restrictions are coming in for sharing of data. So in our branches right now, we provide you that you can look at the data and do it, but downloading it on a hard disk or, taking it on a cloud and all is not permitted by the information security. It puts not only, it puts us at risk, it puts you also at risk, because from where data leakage will happen, we don't know. In fact, it's a big challenge for, I think, for all organizations. Even when we have to give data to Reserve Bank of India for their, risk-based supervision, we are facing a challenge right now because we have to give heaps and heaps of data, reams and reams of how much printed paper can you give? You need to have some system, and we are working on that, how we can give system. Earlier we were using, email and all. Now emails are not allowed. I cannot even access any other email from my laptop or from my PC. So with all these restrictions coming in and financial data, we have to be very, very careful. I mean, the however much precaution you take, it cannot be enough. So therefore, we are allowing the auditors to look at the data, yes, but taking it on hard drive and all, earlier it used to be done, but with the risk of data being leaked out, getting compromised, and you don't know from where it is going to happen. So with all that, right now we are not, we are not allowing to be downloaded or uploaded into cloud or to hard disk and etc. That is a very, very strict policy which we have implemented.
So specifically for SWIFT, what is your?
No, I'll address this. See, if you see the draft guideline of data privacy law, the kind of penalty which will be imposed on the entity is absolutely astronomical figure.
Humongous. You cannot even think of it. Yeah.
The kind of penalty which they are planning to impose is still in draft phase. So please appreciate the importance of maintaining the integrity of the data. And as it is bank is at risk. When I say multiple, we are running multiple softwares are running across the bank, and anywhere data can be leaked, hacked. So see, these are the very, very, like very, very critical issues, which I don't know, we have to go through the data privacy law. Once it comes into effective, then we have to see what kind of, some kind of provision is there.
इससे भी tight हो जाएगा सर. इससे भी tight हो जाएगा. जो है उससे भी काफी tight हो जाएगा.
अभी तो हम लोग NDA करके हम लोग कुछ कर लेते हैं. अभी NDA करके कुछ कर लेते हैं. We are managing.
Yes.
Like now in that, if that is also provided and all that, then it becomes very difficult. So anyway, we'll find some way. ऐसा तो नहीं है कि काम नहीं होगा. होगा काम. We'll find some way.
Yes, we would like to ask something. I think. He's saying to give one common ID for that 3-person team, so that there will be at least some
Okay,
restriction
okay,
as far
okay.
as
Hello?
sharing
Yeah.
the data.
Only one ID is available in the branch. So how one person can audit the entire branch? ID is only one.
I think that's something, of course,
Yeah.
with the concurrence of the, the IT department, of course, that can be thought of. Some solution can be thought of it.
I think we are having a very healthy discussion. We are listening to both the experts in the field on the top bosses of the two largest PSB in India. So just now we are winding up as far as this session is concerned. So just would like to sum up that being bank is a very essential factor as far as the overall socio-economic framework in any country is concerned, including India. So we have to, as an auditor, we have to consider this fact in mind when we will be doing the statutory audit. I am sure that Institute has also taken many steps as far as creating the awareness, how the standard on auditing needs to be followed is concerned. The open dialogue with RBI also is helping as far as getting the appointment of auditors norms getting relaxed or smoother, I should say. We have heard both the panelists. A very sincere thanks to both of you, ma'am and sir, for your open discussion. So now I'm asking Ketan ji to give the concluding thought.
Thank you, Anagha. I request Regional Council colleague Shweta Jain to propose a very well-deserved vote of thanks to moderator as well as both the speaker. But before she does, one question which I had received from participant. Sir, the RBI has, as we discussed in the earlier session, also has reduced the coverage of audits from 80% to 70%. And going forward in the next year, it is going to be bank's discretion. So any discussion or what as SBI or what as Bank of India, stand you'll be taking for next year, whether there'll be reduction in number of audits or number of branches. This is one question which has come from public on WhatsApp. So requesting you to take that up.
Yeah, in case of Bank of India, it's still 93% we are holding that. So I know that we are holding 93%. Because see, ultimately, unless we are comfortable, see, we get to know many things from you only. See, that's what I said, you are our eyes and ears. So we don't want to straight away or knee-jerk reaction, we can reduce the thing. We will see how much we can do it on digital mode. And a day will come when you will not go to even branch, sitting in head office, you can do the entire audit.
Yes.
So that time is also not very far away, but at this point in time, we are continuing with 93%, which is, I think is the highest in the industry for the sector bank.
I think also that I think private sector banks, you are doing at one centralized place.
Correct, you are right.
For PSBs, still we have not implemented because we still perceive that there is some risk attached at the branches. So basically it will be on the risk perception. We would also not like to keep our, some branches or some fields which are open. We would also like to fortify it with an audit and an external audit at that. In fact, many of our processes right now, also when we have our discussions, we try to get external validations for what we are doing, because an external perspective is very different from our internal perspective. Internally, what happens is we tend to interpret it as per our convenience. Whereas as an outsider, as a statutory audit, you will be giving me a different perspective. So that perspective is very, very valuable. Therefore, the types of the audits may, change. But the coverage under the audit will definitely not change. We cannot afford to, leave outfits entirely out of the statutory audit. So based on that, it will be taken going forward. It will be taken.
Thank you. So responsibility on the shoulders of the auditor is huge, and we have to live up to the expectations of the stakeholder. There is no choice about it. We have to see and we have to be very vigilant while doing our work, and our work should be very effective. So friends, we heard from our panelists what is the expectations of the bankers from the branch auditors. some takeaway points, what I can say is, from the discussion is, we got to know the area where we should focus to reduce the expectation gap between auditee and auditors. And really important to know about it. Second, know your auditee is really required before start the audit. Third, we also came to understand that important area of LFAR where we have to do a extra care, or which area we should focus more while reporting in our LFAR. Fourth, I can say is classification of advances is really important. So if any difference of opinion, we can always escalate the matter to higher authorities. So on behalf of WIRC, I would like to present my heartfelt gratitude to our both the panelists, Madam Ruma Dey and Subrat Kumar sir, for sparing your valuable time and being with us today. Thank you so much. And also would like to extend my thanks to Anagha Thatte madam for conducting wonderful panel discussion. Thank you so much, madam. So friends, we are staying here for the lunch break. Again, we'll be come back very soon. Thank you so much.
Thank you.
Regional Council member, kindly escort our panelist on the dais. I request each one of you, please take the front seat. I know post-lunch session is little bit hectic, but friends, please believe me, our eminent speaker are extremely grateful. So I request all of you, please take the first row, first 2, 3, 4 row. सर आ जाइए, सब लोग आगे प्लीज. Last row, ma'am. देखो यार, सीएसए को बहुत ज्यादा एक्सपेक्टेशन है आप लोगों से, और आप ऐसे पीछे छुपे रहोगे ना, तो ये लोगों को लगेगा कि यार ये 70% भी ज्यादा है. तो बैंक ऑफ इंडिया वाले बोल के गए हैं कि हेड ऑफिस से ऑडिट होने वाली है, तो वो दिन दूर नहीं है. तो आगे आओ और दिखाओ कि भाई हम लोग हैं, काम कर रहे हैं, हेड ऑफिस से ऑडिट मत करो. तो रिक्वेस्ट अगेन. Very good afternoon. Welcome you all again post lunch session. Respected immediate past chairman Murtuza Kachwala sir, secretary WIRC, my younger brother or elder brother CA Saurabh Ajmera, past treasurer Piyush Bhai, current treasurer and dynamic leader, the man behind this program Ketan Bhai, on the dais my fellow in council Gautam Bhai, and the eminent panelist Jayesh Kala sir, Pankaj Tiwari sir, Abhay sir, and the moderator Abhijit sir. Welcome you all. I am very delighted. I am extremely grateful to welcome you all, sir. Sir, let me first, before talking about the bank audit, let me recognize or welcome our immediate past chairman Murtuza Bhai. Friends, मैंने पूरे साल मतलब पूरे साल सर के साथ काम किया है। एक भी दिन ऐसा नहीं होगा 25 फरवरी 2022 को सर ने चार्ज लिया और टिल 24 फेब एक भी दिन नहीं है, चाहे रात को ये 3 बजे गए हो 2 बजे गए हो, मॉर्निंग 9:30 ये बीकेसी इंस्टीट्यूट के चेयर पे थे। सर थैंक यू सो मच फॉर योर सर्विस टू द इंस्टीट्यूट सर, kudos to your efforts sir। Friends, our stakeholder CSA have many tremendous trust on us, sir. For it's our duty to live up to their expectation and work in best interest of public at large. This seminar is mainly designed by our treasurer, Ketan Bhai, and chairman and secretary. In this manner, all the aspects inside all the banks branch audit include practical as well as theoretical. And also, I like to congratulate Ketan Bhai for such a beautiful or such a useful publication. Thank you so much, sir. Thank you for your contribution. Thank you, sir. Now I request Gautam Bhai to kindly present a memento to our panelist, Jayesh Kala, sir, along with Secretary WARC, Saurabh Bhai. And Ketan Bhai also. Pankaj Tiwari sir, request Piyush Bhai kindly all you can also join to Gautam Bhai. Abhay Kamat sir, Gautam Bhai, please present memento. I request immediate past chairman Murtuja sir, kindly present memento to Abhijit sir. Now I request Gautam Lad, Regional Council member, kindly introduce our today eminent speaker.
Good afternoon, everyone. Thank you so much, Ankit, for the fabulous MOC and, giving me this opportunity for introduction of our today's eminent speakers. Without taking much of the time, let me start, quickly. So our today's moderator is Abhijit sir, the man who will be asking different and tough questions to all three panelists. So Abhijit sir is has a 33 years of post-qualification experience and 2 decades of speaking experience. He's a post-qualification certification courses faculty at ICA and CAQ. He's also an author, mentor, blogger, interview with philanthropist. So this is about Abhijit sir. I request everyone to kindly give a huge round of applause to welcome him. Today's first panelist is Abhay Kamat sir. Abhay Vishnu Kamat. He's a commerce graduate and a chartered accountant since 1987 and subsequently admitted as fellow member in 1992. He is practicing since 1987 and presently a partner in Mukund M. Chitle and Company Chartered Accountants Mumbai. He is members of various committees of professional bodies like Banking and Insurance Committee of WRC of ICA, 2011, 12 and 12, 13, IFRS Implementation Committee, Study Circle Committee, Emerging Opportunity Committee, Panel of Examiners in Accountancy maintained by Board of Studies of ICAI. So a man having a rich experience of speaking and part of various professional forums. We welcome you, sir, with a round of applause. Our next panelist is CA Pankaj Tiwari ji. He's a director with CNK and Associates. A very young and dynamic chap, you can see, generally we do not found a young member speaking on bank branch audit or, bank audit for that matter. So qualified as a chartered accountant in May 12, currently involved in audit and insurance services along with various services like due diligence. Previously has worked with BSR and company, handles various audit assignment, IndiGap assignment, and specialized in bank audit and NBFC audit. We welcome you, sir, today. Our third panelist, and what should I say about him, Jayesh Bhai. Jayesh Bhai is one of us, and friends, before starting with formal introduction, one thing I would say about Jayesh Bhai, that anything, whoever is in committee, whoever is in council, anything, whenever we would like to plan on bank audit or anything related to direct tax where we want to invite any of the officers, no matter whoever is in committee, the first name which comes in the mind is Jayesh Bhai, and immediately whatever it is time in the morning, night, we just give him a call. And एक बार आपने उनको फोन कर दिया ना कि सर बैंक ब्रांच बैंक ऑडिट में सेशन करना है, we want to do this sports event or anything with income tax officers or anything, you can assume that the things are done, or and he's always available to us. Thank you so much, Jayesh Bhai, for all the services to WIRC. He has more than 20 years of experience into corporate advisory, direct taxation, and bank audit. Regional council member of WIRC, Vikasa chair. He was Vikasa chairman in 1920, members of professional development committee, banking financial committee, and a number of committees. So I'm skipping that. He's almost part of every committee when he was at WIRC. Currently, he's a joint secretary of JCF, founder, chief patron member of GITO, Mumbai Goregaon chapter, and a visiting faculty in Elphinstone College and various colleges, and a regular speaker at Bank Branch Audit. I welcome you, Jayesh Bhai, to WIRC once again. I think with this introduction, everyone is eagerly waiting to hear from our speaker. So immediately I hand over to Abhijit, sir, to take over the charge of the session. Sir, over to you.
Thank you for our introduction, and let's go straight away on the topic. Expectations from statutory branch auditors by central statutory auditors. So let's deep dive into this topic. And first, my question to Abhay is, what do you exactly mean by expectation? Because expectation could vary technically from person to person, and what we at times understand with expectations is basically complying with basic fundamental duties with as a chartered accountant. So like they say, understanding the circulars or passing the right MOC or the LFAR should be very precise and not vague. So just to briefly name a few before you give the exhaustive. So what exactly are expectations and how do you set the right expectations?
Yeah, thank you. To start with, according to me, expectation is a subjective term. That is what I can say in theoretical terms, I can say, because I have been watching one clip on WhatsApp where some radio jockey asked a girl, what is your expectation and all this thing. She decides to say that his income should be more than 2 lakhs rupees per month. He should have what I can say liking for traveling and all this thing. And then he asked her, what is your salary? She said 20,000 rupees. And how many places you have visited? Hardly one place in her life so far. So ultimately, what is more important is expectations. Reasonability of expectation is more important according to me. Now, these are the days of checklist, and therefore I will not like to give the checklist as to what are the expectations 1, 2, 3, 4, etc. But what is most important is, if I try to see I read ICAI literature, what as an auditor one should have. One is ethical requirements which are given. Technical soundness is always there. And apart from that one, what is a professional skepticism? That is the most important term. And therefore, not exactly in lighter vein, but to be very serious, If you remember my name, you will get all these expectations because what you need really, ability, A stands for ability, B stands for behavior. So what is your behavioral pattern over there during the bank audit? There has to be honesty, honesty of knowledge, honesty of purpose. At the same time, you should have adaptability. You cannot be stringent, you cannot be stubborn and all these things. So there has to be adaptability when you are in a profession. And what is most important is all these two things will cherish when you have got youth. Youth, not necessarily what Pankaj is having, I can say, whatever in introduction it was said, but youth is Chaitanya. So that youth, that you should be ready to perform at any point of time. And if you remember all these things, I think fairly all expectations will be met.
Anything to add, Abhay? Pankaj?
Yeah. Before I get on the topic, there was a RBI reference made in the morning, the governor's speech. I would like to add further what Anagha said in the morning. Since 6 to 8 days, the focus has been again shifted on the banks, whether it is the Silicon Valley Bank or the Indian banks, status of solvency, etc., etc. And yesterday, when RBI governor was making a comment in its speech in one of the events organized by one of the private banks, he said that the supervisory department of the RBI has been strengthened, because of which the banks in India is currently in a strong position. I would like to add further, because of the supervisory department plus the central statutory auditor in India and also the branch auditor in India, because of all these three, the banking system in India is strong. So that's the first point. Second point, my friends, always, whenever the term, what Abhijit said, what do you mean by expectation? It's not an expectation, as a taking the leave from G20 motto, if you all aware, one family. Central Stat Auditor and the branch auditor belongs to one family, that is the institute. We here are we are here to share our experiences with you, because we believe that when we learn together, that is when we achieve better. So I would be talking about few of the points which, as a central auditor, we have observed while reviewing the audit report of various branch auditor and LFR of various branch auditors across the banking segment. One point which I would like to address to all of you is that the role of the statutory branch auditor. If you look at the biggest private public sector bank in India, which is an SBI, it has a balance sheet size of around 50 lakh crore. And if you look at the annual report of that SBI, 21 lakh crore is audited by the branch auditor. 42% of the balance sheet size is audited by the branch auditor. And this is not only in the public sector bank, this is across all the 12 banks, whichever you pick up. In PNB, if you look at it, it is audited approximately 55% of the balance sheet is audited by the statutory branch auditor. Whenever it comes to the divergence, not only the branch auditor are responsible, even the central stat auditor. So we sail in the same boat, let me tell you very frankly. Now let's come to what is the bullet points of the expectation. One point which I would like to highlight over here is this, the clarity and the quality of the reporting. I understand, and let me tell you, the central stat auditor do not expect the branch auditor any other thing what is required under the standard of auditing, whether it is from the reporting perspective, standard on quality perspective, or the independence perspective. Time and again, the RBI has highlighted the independence and the code of ethics in any audit field is the topmost important. Taking from that only, first, clarity and quality of the reporting. Whatever you're reporting in the LFR has to be absolute. We have seen, just to give the instances, we have seen the LFR which says that generally the branch has complied 2 to 3 instances, 1 or 2 instances, so on and so forth. So, when we are consolidating as a central stat auditor, look at our position, we have to give the instances. Now, if you don't have those samples, it becomes difficult for us to give those instances. The second, timely communication of the issues. Many times when we have been the central stat auditor of the various banks, we have been called at the fag end of the closure of the branch that, sir, ये data हमने मांगा था, branch ने नहीं दिया. Sir, ये information हमने मांगी थी, branch ने नहीं दिए. If these can be escalated to the central stat auditor at the, beforehand, it will be better.
Abhay touched upon professional skepticism. We were at the RBI we were at the Central Stat Auditor meeting organized by the Institute few days back only, where RBI representative had come. The kind of divergence which he was talking about, these are all non-traditional divergence. These are not the divergence which is the DP has been computed on the basis of expired stock statements and all that. These are the divergence which are coming from the restructured portfolio. So when we are looking at the professional skepticism, I think we have to change the way we also look at the branches. And one or two points more, professional judgment. Don't leave anything to the Central Stat Auditor to decide, because we are no different. We are just serving different responsibility which has been given in the bank. I mean, don't write in the LFR. I mean, one should not quote in the LFR that this has to be looked at the central office or this has to be looked at the regional office, and so on and so forth. And the last and the relevant, most important point, my friend, remain relevant and updated. I think somebody quoted in the morning that the resource or the person who comes to the branches are even not aware about the basics of it. So only expectation is that whenever any circular is coming, whenever any notification is coming, just remain updated. I mean, we understand that's a part of the job, but these were the points which I thought I would highlight to just kick off the discussion. Yes, Jay.
Rightly pointed out by Pankaj bhai and Abhay bhai, we have to be updated. So, subah, I was sitting there when I believe Subrat ji or Day madam told that the indirectly वो क्या एक अपने को बोलकर गए कि भाई the quality of the staff is not up to date. Indirectly or directly they wanted to hint that. So that was a very, very relevant point. आप branch audit में you just cannot send any junior person or any person who is just started his articleship or you have just kept him on the job. अगर वो पढ़ भी लेगा ना तो डिलीवर नहीं कर पाएगा. That is for sure. बैंक ऑडिट वैसा नहीं है कि आपको वाउचिंग करनी है, ऐसा कुछ भी नहीं. यू हैव रिलेवेंट 4, 5, 10 days in hand. उसमें अगर वो करने बैठ गया ना नया आदमी तो कर ही नहीं पाएगा. You will not serve any purpose only. So that was very relevant point, and that is the first basic point which is to be taken care when we are expecting as a central auditors from the branch auditor. The main point what Pankaj was trying to say is the report has to be concise, clear with conceptual clarity. That can only come when the आपके जो deputed staff and team members they are very updated and they are aware of the circulars what the RBI has given. जब तक आप circular नहीं पढ़ोगे, analysis नहीं करोगे तो it is not a routine job. You cannot think कि now what the normal tendency is there कि everything is now system based. So circular मतलब जो भी रहेगा वो system के through ही आएगा. That is correct, but system may be interpretation. There is very issues regarding the interpretation of the circular. I know for myself that there are, the branch auditors are auditing, as he rightly pointed out, almost 40 to 50% of the total advances of the bank. And each auditor, कोई ना कोई अगर कोई नया point आ जाता है, it may or may not be relevant as far as the branch is concerned, but it can be some systematic issue which can lead to a very, very high figure. I remember एक हमारे जब audit कर रहे थे तो एक branch auditor, वो भी branch auditor from the rural area. They have mentioned about the audit. They have mentioned one single point that in case of term loan, although the account is NPA, but the outstanding amount is higher than the sanctioned amount. This is something if the outstanding amount is higher in case of term loan, then it clearly means कि आपका कोई reversal नहीं हुआ है. Otherwise, in case of term loan, आपको reverse करना पड़ेगा NPA. अगर वो नहीं करोगे तो आपका automatic something is missing. So that was one single point which they have highlighted in their report, in their LFAR. Now that lead actually हमारे लिए भी kickstart point था और जब हमने पूरा overall analysis किया तो that turned out to be volume 1000 crore का volume आ गया था उसमें एक छोटे सी चीज के लिए. So you are the eyes and ears for the central auditors. आप लोगों का एक point, and believe me when I am saying this, one single point आप लोग जो भी LFAR में लिखते हो, जहां पर भी आप लिखते हो, that is screened very seriously, thoroughly by the central auditors. No single point is missed out. So आप अगर ये लिखते हो कि नहीं भाई that has to be looked by the central auditor or it has to be generally the branch is complied, in one case it is not complied, you have to be very precise, very concrete, you have to give the detailed analysis. भले precise रहना लेकिन पूरा detail देना बहुत जरूरी है कि भाई आपको issue क्या मिला है, and it will be better if you can say कि भाई this particular guidelines of RBI or the bank circular is violated, so that वो एक violation can lead to violation in entire bank. So the point is your team member has to be updated. Practically अगर आप लोग ऑडिट भेजने से पहले अगर 2 या 3 दिन का ट्रेनिंग सेशन ऑफिस में रख लो ना, इट विल हेल्प यू अ लॉट. 4 दिन 5 दिन 10 दिन में अगर ऑडिट कंप्लीट करना है तो आपको वो करना बहुत जरूरी है. सेकेंड मोस्ट इंपॉर्टेंट पॉइंट इज, आजकल पहले जो फोकस रहता था कि भाई अपने को डाउनग्रेड करना है, एनपीए होना चाहिए, एमओसी करना है, ये सब चीज तो अभी क्या बहुत सिस्टमेटिक हो गई है. अभी आप लोग बहुत मुश्किल होगा कि एनपीए आप कोई ओवर एंड अबाउट जाके निकाल सकते हो फ्रॉम दी सिस्टम रिलेटेड इश्यूज, बिकॉज system is very very dynamic nowadays and all the probabilities are covered in the system. So now it is more important that you go into the transaction of that particular company. आपको कोई भी सीसी अकाउंट होगा उसका ट्रांजेक्शन देखना जरूरी है. एंड अभी तो एलएफआर का रिक्वायरमेंट भी है वो ट्रांजेक्शन ऑडिट करना है, बट ट्रांजेक्शन देख के उसमें अगर आपको कुछ वेवर्ड मिलता है देन इट मे लीड टू सम डाउनग्रेडिंग ऑफ द अकाउंट. सो इट इज वेरी इंपॉर्टेंट दैट यू go into the transaction. You will have to just move ahead of that थिंकिंग कि नहीं भाई ये एनपीए करना है, कैसे करना है, सिस्टम मतलब ये बराबर नहीं हुआ, ऐसा वो सब सिस्टम का तो कोई इशू आना ही नहीं है. वो आएगा तो वो सब सेंट्रल ऑडिटर्स विल टेक केयर ऑफ इट. बट इफ then also if any systematic issue come, please make it a point to mention in your LFR or whatever remark you can make. Yes sir.
Yeah, just one point, just taking ahead from Jayesh bhai, about the MOCs. See, I have seen lot many times, whatever little experience I have, the branch auditor focusing from the day one on the MOCs. Let me tell you, my friends, if the branch manager is very smart, he will give the MOC on the plateau. And that MOC, and he will deflect your attention from something very big. So the only point which you can consider is focus on the audit process, focus on the transaction audit, and focus on the basics of the audit. MOCs is a result of these processes only. I mean, the MOCs are not the first thing what we have to address. We have to address our audit process first. MOC will come and it will definitely be there if it has to be there.
So, thank you all three panelists for enlightening all of us on what should be the baseline requirements we should take care of. Especially, I think audit quality is something which is given. But quality also, I believe, has to be seen in the light of constraints also which are. So I would like all three of you maybe to give your views, because you can't have an expectation which is unfair. I can understand a branch manager or a bank resource talking of quality, but then I would like to also bring at a certain point of time the quality also on their side of the bank. At times they are clueless when we ask for a representation. At many points of time, management representation letters are not given, which is mandatory as per SFIT. I think we should qualify for non-receipt of MRLs. Your view? The second is very basic. System availability. At times system is not given. You need to move into somebody's ID or something again. Sharing of passwords, data confidentiality or whatever that other thing. Data availability in the first instance. I think data is not made available. The reports are not made available, especially system reports or concurrent audit reports or previous year stat audit reports on time. Something availability, comprehensiveness, completeness of availability as well as timeliness of availability, and even the space to sit. At times the branches are so crowded that you just need to pull somebody's chair and just shift those chairs. So the restraints, one. And second, even when you raise those issues, the responses are received quite easy. So at a lot of points of time, disclaimers have to be given. So how would you, when an SBA is doing his duty completely, but he is facing these constraints, how would you as a central statutory auditor also back him or support him?
Okay. fine. One thing is about expectations, but merely narrating expectation is not enough. And therefore, how to meet these expectation is also more important. And therefore, whenever somebody sets up the expectations, even one should be in a position to guide how to satisfy these expectations. And therefore, from that angle, possibly I'll take 2 more minutes, but I'll try to see as to what way. The concern was about the timeliness, first timings, I mean to say. That is within 2 days or 3 days, etc. People expect that the branch audit has to be done, whether that is sufficient time or not. My dear friends, let me tell you, we are the creators of our own destiny. If somebody is able to sign in 1 day, naturally, people will feel that 3 days are more than enough. So collectively, I think we have to think on this particular aspect, that how to approach this particular aspect. We complaining that this is not sufficient, that means we are agreeing that we are not adhering to the quality. The other inference could be, we are not really able to maintain the quality, and therefore, within ourselves possibly, or when we talk to public at large, I think this timing issue, we have to tackle ourselves. If we feel that this is not sufficient, collectively from the institute side, say WRC or ICA, some efforts could be made to establish that this time is not sufficient. But according to me, if we prepare properly, and nowadays bank also tries to give us sufficient time, or what you can say, to plan it properly, some details being made available without breaching the confidentiality of data to us. So therefore, that is one aspect we have to take into account. One soft side I'll say of this particular aspect is, nowadays social media is very popular. And in the month of April, on Facebook, if I go, many chartered accountants, their postings are visited so and so place on the audit of so and so, etc., etc. Friends, I appreciate that you must be working, even burning the midnight oil. But such type of photograph create public impression that you go for audit, outstation audit only for enjoyment. Within this August gathering only I can talk like this one. I will not be able to talk this one outside. And therefore my frank, that's why it's not related to technical subject, but it's a soft issue. One has to take care of this one. Ultimately, we create our image. And therefore, from that angle, we have to take care of these aspects also. When I say morning, the keynote address said that the bankers are and chartered accountants or auditors, they are the partners. I appreciate the feeling out of that particular thing, but at the same time, as an auditor, my independence of auditor is most important, and therefore kindly see that the independence is not hampered. Don't take unnecessary courtesies. Don't unnecessarily think from the angle of the bankers, because it's a sentimental appeal normally you get. And therefore, as a charter, see, ultimately when the RBI questions you, nobody is going to come and help you. So that is the thing. Morning also at one of the session, the bankers told you that LFAR is your document and we have got no responsibility towards that one, mind well. So when it comes to, people can demarcate this line and still people want a partnership. So that's a different issue. So I can, from the angle of chartered accountants and auditors, I can speak, I think, you will be able to take proper clue out of this one, because from such type of what you can say dais, I cannot go on more elaborating on these aspects, but please take hint out of this one and take care of it. Now coming to this one, the staff quality, people quality and all these things. I feel we can improve that one by taking some in-house training sessions. If firm is appointed for the first time as branch auditors, you can invite some other person who has got experience and conduct 1 3 hours, 4 hours session in your office, so that people are at least aware of what are the banking terminologies. Because what happens in bank, nowadays that concept has gone, but if you ask cash book, there's nothing like cash book, it's a day book, which is having 3 columns, that is cash, clearing and transfer. Now that is the fundamental difference, and therefore when you go to the branch and ask, give me the cash book or something like this one, then it becomes very odd statement. softwares. Bank never uses tally software. We have got that concept that accounting means tally. So by no imagining that word has to come in bank. So therefore, such precautions has to be taken by the person concerned and his staff members. That is another aspect. When I go to the branch or first communication with the bankers, what I should speak if I'm doing it for the first time. That is most important. So in case of bank, if you want to if you want to really understand the nature of the business over there, try to understand the quantum of deposits, quantum of advances, then composition of advances, what type of it is, retail banking or a corporate banking. Try to understand that. And when you ask such questions, then the branch manager also understands that you know at least little bit of banking. But if you blindly ask some questions, then there is a problem. And typically what happens, especially if the questions are not relevant, that discussion goes to something else. The branch manager tries to ask you how many partners you are, what is the setup, what type of clients do you have, do they need any finance, you can refer to us. We get overwhelmed by all these things. And then somewhere independence gets shaken up. So that should be avoided, frankly. These are the softer sides or behavioral sides of what you can say branch auditors. If I go to the technical side of it, typically somebody says that on account of NPA. Because I think the session ends at 3:15 and therefore I'll try to capsule my thoughts right now at this point of time. So which will be of some value to you. That is what is my feeling. If it is not, you please raise your hands and stop me. Typically what happens, non-performing assets is the most important aspect. And how do we check that particular thing? What statement you get, they are already identified as NPAs. But what are not identified as NPAs are supposed to be seen by the auditors. And if at all you come across such type of thing, then you have to either by way of MOC or otherwise, you have to place it in your report. Now, the overdue statement is the most important statement. And therefore, the overdue statements for last 3 months, month on month. Nowadays, you get day on day also because NPAs are identified on day basis. So overdue statement, if you take it and you make some analytical analysis, then you will be able to understand which are the NPAs which have escaped from the statements or what exactly the branch had done. Branch can do some jugglery at the end of last week of March and try to take all those such stress asset out of the clutches of NPA. So as an auditor, typically my concentration will be on such account wherein the overdues, that movement, NPA marking, NPA statements of earlier period, NPA statements of last year, then as in the planning session, it was an upgraded and downgraded accounts during the period. And what is more important, I'll take last time statement and try to compare whether all the fields are captured properly, even if they are old NPAs, whether NPA date is taken properly or not. Because sometimes I have seen that the NPA date changes. And if the NPA date changes, if it is valid one on day basis, overdue gets cleared and then it becomes updated and then downgraded, that's a different issue. But if at all NPA date changing, it has got its repercussions on aging provision on NPA. Because NPA, once you identify first 12 months, it is substandard. After that one, it becomes doubtful. Doubtful also from provision wise, doubtful 1, doubtful 2, doubtful 3. All these things, I think next section, you will have all those aspects. But such type of things get changed because of change in the date of NPA. That is one thing. Second aspect is there is one question in LFAR that whether there is any window dressing or not. Most of the occasions you will find that the branch manager, if there is unutilized facility in cash credit account, my cash credit limit is 10 lakhs rupees, my balance, I'm operating at 3 lakhs rupees. So he will request the borrower member that you withdraw 7 lakhs rupees, put it into fixed deposit for 15 days. So what happens? My balance sheet, deposit side increases, asset side increases. We are happy because our fees are based on the advances. That's a different issue. But still, we have to pay attention to this aspect and whether this window dressing is there or not, that we should be able to see. Similarly, in branch, there are two things. One is there is exceptional transaction report on day basis. Try to get one. Friends, one thing is there, the banking has changed over last few years tremendously, I can say. And it is going to change fast in the coming years. Digital banking, morning you have seen or heard about that one. Auditing techniques also have to be changed in that fashion. No more, it is like earlier, when I started my articles, it was posting, casting, very vouching, verification and all these things, posting, casting. Nowadays, posting, casting has gone totally. There is no item as in audit program as posting. Similarly, possibly bank audit program also will undergo certain changes and you have to apply those techniques looking at the transactions. And these techniques will vary from branch to branch because now it is vertical based banking. Therefore, if I'm doing asset recovery branch, my technique for audit will be different. If I'm doing forex oriented branch, my technique will be slightly different or totally different, not slightly. And then if I'm doing regular banking, it's a different. Somebody mentioned that nowadays branch has got no banking per se, they are more like marketeers. So that's altogether different aspect. But yes, that's a future, I can say. Though the roots are in present, but that is what it is. And from that angle, auditing techniques also needs to be seen. So you get exceptional report, you get ALM alerts. Kindly look at those alerts. Whenever there is a recovery in any loan account, last 7 days at least or 15 days, you try to see what are the fund movement, where from these funds are coming and when account is regularized in that fashion. Especially pay order outstanding at the year end. Whether there is any pay order outstanding, which is on account of disbursement of loan, then it's a window dressing. I'll issue the pay order payable will be there, and I'll open the advance account, and that will be my loan account. So I bloat my asset side, I bloat my liability side, though there is no actual transaction of disbursement of loan. This is window dressing. So try to see that one, and if at all you are able to even have a doubt, investigate it further and try to get that one passed. One more thing I would like to say is don't depend only on oral confirmations. And if at all you have to depend on that one, try to cross-check with 1 or 2 people. Dialogue should be open with everyone in the branch, mind well. Usually what happens, branch audit is supposed to be the responsibility of the branch manager. He entertains you, he keeps you in his cabin and all these things. Don't depend on branch manager's confirmations. Try to talk to even from the peon to branch manager. And if it is oral confirmation, get that double confirmation from somebody else. How to raise a question? Because ultimately, as I say, auditing is a skill. And it's a skill of questioning, skill of inquiries, and skill of people management. Now that particular skill, you can hone up yourself depending on the situation and try to get those questions. Then other aspects possibly is most important aspect in branch audit is in balance sheet, you have got other assets and other liabilities. These are the parking accounts. And if you see or analyze those accounts, you will get to know so many things which are really not concluded. So try to analyze each and every entry. Sometimes people say it's old entry. Sometimes people say it's a system-based entries. All these are good jargons as far as English is concerned. But according to me, every jargon has got some meaning out of that particular thing, and try to understand what is the transaction behind that. Once you know the transaction, once you know the facts very well, then you are able to conclude properly. Merely doubting that there is some problem and writing that we could not get these details, there seems to be some problem, Central Statutory Auditor should look into this particular thing. It is not going to help. And lastly, I can say, because I know that time is running short, I can say reporting has to be very clear, especially in case of MOC. When I say MOC, it's a memorandum of changes, not the MOC of the function. The memorandum of changes, what happens the moment you utter that word that you are planning to give this one, the entire atmosphere at the branch will change. Those who have done the branch audit, they can understand this particular aspect very well. And then they try to convince you that how memorandum of change is not required or which is not required. And if you wish that आपको इतनी बड़ा है तो आप LFAR में लिख दो. That type of thing. So you will say, there, sir, you can put everything in the LFR, but please sign the audit report, as if you don't understand what do you mean by MOC. So MOC, when you are giving it, one thing is that you have to be very clear why you are giving MOC, not merely because some hunch you are giving it. In case of MOC, your mind should be very clear that what are the facts, what is the regulatory requirements, where is the deviation, and what is the right thing which you expect to happen. Once you are clear on that one, on technical, not that because I feel it as an auditor, but because technically this is wrong and therefore this should be done. Once you are able to convince the person, there could not be any argument with you. It should not be on personal level at all. So there is no personal element at all. It's on technical aspect. And once you give that particular thing, I think MOC will be accepted. While giving the MOC, my suggestion is you have one full page or whatever way you want to explain all this logic in that one. Attach that logic along with your MOC. Because, see, you write the report, you in a sense, branch auditor, I'm not distinguishing between you and me. Branch auditor writes the report, gives the MOC, MOC goes to central office, the central statutory auditor is supposed to look at this MOC. And if at all proper explanation or reasoning is not there, what happens is the bank people normally argue that this auditor, he had not understood the transaction is like this, and therefore this MOC has got no relevance. And friends, over there are 100 people arguing for the bank, and from auditing fraternity, only central statutory is there. Understand this situation. So if you write it properly, I got all support for me to argue for your MOC. And then it will happen in that fashion because I have got this experience. I have done that one as branch auditor when I was working as branch auditor. When that one-page note was given, that was the only occasion in the branch when I signed all my returns. It was a tense moment because central office has said that don't sign branch manager to that branch manager, that don't sign below the MOC. Don't accept MOC of the branch. I said, okay, I'll attach along with my report. I have given my explanatory statement and it was submitted. After 10 days, I received a call from central office that my central statutory auditors wants to meet you. There was a meeting from branch auditor side. I was there, central statutory auditor and his engagement partner were there. From banker side, there are a number of GMs or MDs, DMDs were there. And they tried to say, central statutory asked me one question, that is, yes, Mr. Kamat, what do you want to say? I said, sir, I have already written, you must have got this one. I want your opinion on that one. When he read all these things, he said, fine, this needs to be changed. So frankly speaking, there was no argument at all. What I mean to say is this type of thing where there is lesser, because otherwise, as he had rightly pointed out, they will divert your concentration on one petty matter and the big matter will get escaped. Because ultimately it's a show of 3 days, suppose, or 4 days, wherein you have to, how much you check is a limited thing. If you concentrate on some petty matter, then possibly important matter may lose. Precisely, these were few things. Of course, there are many things because as a bank audit, since we are doing it for last number of years, there are so many instances or so many things. But okay, depending on the time and further question, we can address that particular thing. Thank you for your time. Yeah.
So my question, which was very specific, is to Pankaj, is would you view qualifications coming in from the statutory branch auditor, especially representations not being given? So there's a generally that we as a branch don't have a practice of giving representations, and I really don't know how you can, unless you give a disclaimer, because LAPR is supposed to be for the year, and I'm on 18th of March and I don't even know which branch I'll get. When I'll get the branch, when I'll start, maybe I start the branch in the next year for the year which is already over, and I'm supposed to report on the systems and processes where I was just not there. So obviously you'll have disclaimers or qualifications, which we have given as branch auditors, we have openly given, because finally it's all about doing what is right and what our standard says as an experienced auditor would do what is right. So question again to Jayesh is, one, when we are talking of expectations of central statutory auditors from SBAs, I would like to even ask you, thinking what would the SBA expect out of you? One, so Jayesh to answer that later, but first is what about these qualifications when it comes to you or disclaimers? How would you take this up? Because when as a branch auditor and having done a lot of audits, I feel that this is not a branch issue, it's a bank issue. Obviously, when I write, I would write it that the statutory auditors should basically also look into the fact whether this is prevailing in other branches, because as a central auditor, we have seen that some issues come from certain branches, but actually pertain to the bank as a whole. So how would you view it? And
No, very, very pertinent question, and this was discussed, I think, some way or the other in the morning session also. What to do when the branch is not giving the MRL? What should I do? And I will share what we have been doing and what we have been practicing in past also. Yes, we have also faced certain kind of situation, but as an auditor, let's be clear with one thing. We can't write whole thing in the MRL and then expect the branch manager to sign it. You can't, there has to be a distinction of liability between as an auditor, what you're supposed to do, and as a branch manager, what he's supposed to represent. Whereas when it comes to dependence on the system or on the IT issues, to be fair, yes, within 3 days, you can't get your IT expert to do the interface testing or the app control testing and all that. You can't do that. Obviously, you have to rely on the representation from the branch. Can I qualify the report? Let me tell you a secret, and you can practice it if it works well and good. Whenever you visit the branch on the first day, you know what typical MRL you'll be taking because the institute guidance note contain that MRL. Just share the copy of the MRL with 1 or 2 changes, whichever you want to do. That's a preliminary requirement which you can share with the branch auditor or branch management. Post that, whatever additional representation you may ask, let's suppose, you are asking for a representation on a specific account. That may not necessarily be included in the part of the MRL. You can get a specific note from the branch management also. Let's suppose, you are saying that, okay, I could not verify certain other asset or other liability matter because of XYZ reason, time constraint, data non-availability, so on and so forth. That you can put it as a representation, but you can't put that the advance is matching to your financial balance, which is your financial balance is this much and the advance Form A balance is this much. That cannot be part of the MRL. So as an auditor, we have to be very specific what we are planning to put it in the MRL. Second point, what to do if the branch manager is, let me tell you, hold the audit report. He has to give the MRL because that is one of the requirement of SF-IET. He cannot just say that I will not give the MRL, and the institute will have a full backing. You can speak to the central stat auditor. Obviously, you will get the concurrence that the MRL has to come. But to be very fair, let's be very clear, what are we putting in the MRL? Abhijit, if you look at the content of the MRL of some of the branch auditor, you have to be a little bit, look at your standard auditing, what it requires you to take on the MRL. So I think the true and fair view has to be certified by the auditor, not by the branch management. I think that distinction has to be clear in everybody's mind. One point I think you touched about the logistic issue and the data availability issue. Let me tell you very frankly, my friend, logistic issue and all can be handled at the branch management level, if not regional office. That's where you have to get the logistic issue sorted. Data availability issue, if you are not getting the data, obviously you can't perform the audit. And there is no chance if the time is going, you have to issue a disclaimer opinion report. But, do you have enough evidences that you followed up for the data? It's an oral request is not an evidence because when it goes to the another level, they ask you the documents, email, communication, so on and so forth. So let's be very professional in our approach and keep those documents ready whenever it is called for, if you are planning to issue a disclaimer opinion report. I hope that's answer your question.
To answer, I think what you said is, what I can understand is you should be ready with all your homework before you even enter the branch. So day 0, I would say before even you enter, this is the list, what you need. This is what should go with this. So your clock starts right now. And every day, as I do at the end of the day, update, this is the data which I sent, this is what is pending. So if 10 days later, there is something which comes to his word versus my word, I have 10 emails sent every day which says this is pending and this is complete evidence. So again, SA 540 I
yeah, let me tell you, you are playing 2020. You are playing 2020. 10-10. You have to hit your best shot. So that let's be clear with that at least.
So my question is, what do you think could be the expectations of a statutory branch auditor from a central statutory auditor? Maybe support, maybe guidance, maybe communication on time, maybe even picking up the phone and answering, whatever.
So yes, you're right. Uh, Expectation of the branch auditor definitely is that you, in many cases, we have actually come across such cases wherein there are like in transaction only, some stock statement has been provided, but stock auditor's report is negative, कि भाई old stock are there and the DP is not maintained. तो वहां पर काफी जनों की क्वेरीज आती है कि भाई हाउ टू डील विद सच सिचुएशन, एडॉक सैंक्शन किया हुआ है, 3 महीने का हो गया, वापस 3 महीना गया है, तो व्हाट इज हाउ दिस हैज टू बी टैकल्ड. सो ऑल दिस थिंग्स आर देयर. स्टॉक ऑडिट कंपलसरी है, नहीं करवाया तो क्या करें, 1 साल से स्टॉक ऑडिट नहीं हुई है तो व्हाट शुड बी डू. सो दिस आर द थिंग्स व्हिच आर प्रैक्टिकल थिंग्स व्हिच देयर. सो सी द जब भी आपको लेटर आता है अपॉइंटमेंट का, इन दैट लेटर यू आर ऑलवेज कम्युनिकेटेड दैट हु विल बी योर रिलेवेंट सेंट्रल ऑडिटर्स. देयर मे बी 4 or 5, बट यू आपको एक ही दिया गया भाई आपकी रिपोर्ट आपको वहां पे फॉरवर्ड करनी. यू विल बी गेटिंग देयर ईमेल नंबर, यू विल बी गेटिंग देयर कॉन्टैक्ट डिटेल्स ऑल्सो. So whatever issues you have, you can definitely mail those issues at the day end if it is a routine matter, or even if you have some very like practical चीज बता रहा हूँ मैं आपको. एक हमारा एक कोई ऑडिटर था दिल्ली का, वी वर डूइंग दी दिल्ली जोन. दिल्ली का एक ऑडिटर था, उसने इमीडिएटली हमको फोन किया था कि सर ऐसा ऐसा मैटर, देयर हैज बीन वन डिसबर्समेंट व्हिच हैज बीन डन, and although the disbursement is mentioned ki it is for the purpose of paying to contractors, but we have seen it has not been paid to contractors, it has been paid for purchase of property. So how should we deal about it? So that was something which was very relevant because it is totally diversion of fund. तो उस क्वेरी को हमने पूरा डिटेल्स, वी सॉर्ट द एंटायर डिटेल एंड ही हैज रियली डन अ वेरी गुड जॉब गोइंग टू द नेटिग्रिटीज ऑफ द, मतलब एक तरह से एक छोटा सा फॉरेंसिक ऑडिट कर लिया था. तो वहां पर वी डिस्कस दैट मैटर विद द मैनेजमेंट, वी टुक द मैनेजमेंट व्यू, और उसके बाद हमने उनको बताया कि भाई ऐसा ऐसा आप स्टेप करिए सो दैट यू आर ऑल्सो सेफ, वी आर ऑल्सो सेफ, एंड एट द सेम टाइम द बैंकर्स विल नॉट फेस एनी प्रॉब्लम इन द सेंस कि कॉम्प्लायंस में कहीं पे भी किसी को इशू नहीं आए. So that is the thing. If some important thing is there, you can immediately call upon the auditor. और अगर कोई routine चीज है तो आपको mail कर देना. You will definitely get a reply on the mail. At least from the central statutory auditor side, I can say कि all the central auditors are very particular about the queries which are raised by the branch auditors, because as we have already told that you are eyes and ears of us. तो जो भी queries आएगी उसका reply तो जाना ही जाना है आपको. Then there are certain important things which I believe you should take into consideration. जैसे अपन डिस्कस कर रहे थे कि भाई सारे एनपीएस जो है आजकल बहुत सिस्टमाइज्ड हो गए. अभी वो नहीं रहा कि भाई 30, 60, 90 डेज वाला कोई एनपीए. नाउ जो एनपीए आएंगे आपको, स्पेशली इन रीस्ट्रक्चरिंग केस, अगर आप लोग रीस्ट्रक्चरिंग का सर्कुलर पढ़ेंगे तो उसमें काफी पोस्ट रीस्ट्रक्चरिंग फॉर्मेलिटीज दी हुई है कि भाई अगर आपका ये रीस्ट्रक्चर करने के बाद इफ देयर इज एनी डेलिक्वेंसी व्हिच इज एनी डिफॉल्ट व्हिच इज देयर फॉर मोर देन 30 days, देन योर अकाउंट विल बिकम एनपीए. वो काफी बैंक में अभी भी सिस्टमाइज्ड नहीं हो पाया बिकॉज वो बहुत चैलेंजेस, बहुत दिस इज वेरी डायनेमिक. तो ऐसे बहुत सारे इश्यूज आएंगे. आपको कोई सैंक्शन लेटर, आपका कोई सैंक्शन लेटर, मतलब कोई क्लाइंट को सैंक्शन किया हुआ है, वो सैंक्शन में कहा गया है कि भाई योर कैपिटल, योर नेटवर्थ शुड बी ₹X as on 31st March. सैंक्शन तो पहले कर दिया, उसका पोस्ट कंडीशन फॉर्मेलिटी दे दी 6 महीने के बाद. अगर वो नहीं होता है then what? So unless and until you go into that sanction letter, you go into that relevant circular, especially when you apply your mind कि जो चीज सिस्टम में नहीं सेट हो सकती है उस चीज पे फोकस करिए, and definitely you are going to find some aberrations which has to be reported properly. Then काफी क्वेरीज जो ब्रांच ऑडिट की आती है वो आती है ऑफिस अकाउंट को लेके, एंड आरबीआई इज वेरी पर्टिकुलर नाउ ऑन ऑफिस अकाउंट. काफी बार ऐसा होता है कि भाई अगर कोई चीज को रिकंसाइल नहीं, आजकल तो फिर भी बहुत सिस्टमाइज्ड हो गया, बट काफी चीजें जो अभी भी अगर कोई रिकंसाइल नहीं होता डे एंड पे तो उसको ऑफिस अकाउंट में डाल देते हैं, फिर ऑफिस अकाउंट को रिकंसाइल करते रहते हैं. सो देयर ऑल्सो योर इंटरवेंशन इज वेरी मच रिक्वायर्ड बिकॉज ऑफिस अकाउंट इज सॉर्ट ऑफ अ सस्पेंस अकाउंट बोलो, या बोलते हैं ना कि इट इज लाइक अ वो कहीं कुछ भी नहीं मिला, इट इज लाइक इनकम फ्रॉम अदर सोर्सेज. कुछ भी नहीं हुआ तो वहां पे जाके पार्क कर दिया. सो दैट इज वेरी वेरी इंपॉर्टेंट बिकॉज ऑफिस अकाउंट वाज यूज्ड by one of the private bank employees for a big fraud. So that account has to be taken into consideration. देन अर्ली वार्निंग सिग्नल, अभी काफी बैंक में अर्ली वार्निंग सिग्नल के पैरामीटर्स बैठे हुए विच हैज टू बी चेक एट द ब्रांच लेवल ओनली, बट ब्रांच ऑडिटर्स को नॉर्मली पता ही नहीं चलता है। इनफैक्ट हमने जब ब्रांच, हमको भी नहीं पता था कि भाई ऐसा कुछ चीज है जो ब्रांच लेवल में देखना है। यू विल हैव टू कॉल फॉर दो सर्कुलर कि भाई अर्ली वार्निंग सिग्नल के आपके पैरामीटर्स क्या है, और अर्ली वार्निंग सिग्नल के आपके जो रिपोर्ट आई वो रिपोर्ट आपको चेक करनी है। सो दिस ऑल आर थिंग जहां पर definitely branch auditor will require some support from the central auditors, and you can always call upon the central auditors for their help. कोई अगर सर्कुलर का इंटरप्रिटेशन है, इनफैक्ट कोई बैंक का कोई सर्कुलर आया हुआ है which is relevant, you can always ask with the management also and with the central auditors also कि भाई is there any circular which is relevant for the branch audit. So they will be support, they will be sending you the things which will be really supportive for you. Unless and until you have all the circulars properly with you, तब तक वो उसमें इतना ग्रिप नहीं आ पाएगा। जैसा आपको बोला कि जो आरबीआई के बेसिकली जो आरएआर आता है आपका डाइवर्जेंस रिपोर्ट, उसके काफी सारे पॉइंट्स है जो आई बिलीव वी कैन जस्ट टेक अप दी डाइवर्जेंस पॉइंट विच विल बी वेरी रिलेवेंट फॉर द ब्रांच ऑडिट आल्सो। तो कुछ ऑलरेडी आपको मैंने बता दिया ऑफिस अकाउंट के बाद में आपका ये जो एनपीएस वाला है, दिस ऑल आर वेरी रिलेवेंट थिंग। तो yes sir.
Fine. So I think we are just about to conclude. Before I take next two questions from the audience, I think one parting word in one sentence. One parting word in one sentence. That's tough.
I can say only all the best. देखो काम लिया है ना तो डिलीवर क्वालिटी से करेंगे, एंड वी विल डिलीवर इज टू फुल ऑफ आवर कैपेसिटी। एक बार एक्सेप्ट करने के बाद नो हियर एंड देयर देन।
If anybody want to ask any question, please.
My question is, I mean, we find it in the statutory audit, sometimes what we find is, find it very difficult to convince, I mean, the branch staff to be there on the holidays. And particularly this, from 1st April to 28th, I think there are 5 or 6 holidays that are going to be in between. So, I mean, can we do something? Because what happens is sometimes the credit officer, he says, I'm not going to be there. You talk to the branch manager, and I know we keep on flipping between the staff, but I mean, ultimately we have to take some rest in between, or I mean, we don't find it convincing. So anything can be done from the also from the bank level itself. So one is, as Pankaj said, we are playing a rain curtail T20 where minimum it's 6 overs to win. So expect that you will get only 6 days. Now, how you function in those 6 days is basically you have to have your coaching system or your practice system, or this is what we are doing is the preparation to do it. Just keep on firing on all cylinders. I think day one you should be prepared, but rest I leave it to the
Usually, when the time is set for the branch auditors, the central office instructs the branch that you have to work on holidays. And where there is officers, it becomes compulsory for them because their CR is at this stake. So normally people do work on holidays, Saturdays, Sundays, etc. And personally, if you ask me, working on a holiday becomes more comfortable for the audit purpose. Reason is there is no disturbance. Because otherwise during the banking days, the branch manager or the officers, there is a disturbance, and therefore even our work also gets hampered. One more trick usually I play is whenever it is outstation audit, it's a standard practice in our firm that it will start at 9:30 and end at 9:30. So after that one, it as per demand. But that is a normal practice. Advantages are two. We focus on the work. And secondly, you don't have time to think of something else. So that's the precise thing. If at all somebody wants to have pleasure trip, you can have one more day which is spared after you sign. And when we are coming to the signing part of it, see, the moment you sign the returns, your importance is lost. And therefore, my suggestion is always sign all returns together. You can mark 3 or 4 hours for that one and sign it at one go at the end of it. There are two advantages out of this. One thing is that till that time branch attention is with you, number one. And secondly, there are certain returns where you can correlate the figures and all these things. That you can do. If you sign something and subsequently you realize that this figure should be so and so, then again rectification starts. Instead of that one, that can be done. Therefore, signing should be at the end and all returns together.
Yeah, one point just to inform you all or just to highlight to your attention is that 1st April 2025 is the peer review date from where the peer review of the auditors doing the branch audit will be mandatory. So they will be, peer reviewer will review the 3 years work what you have done. So this is the first year which will get captured for the peer review certificate will be there. So let's be prepared with our documents, audit working papers, so on and so forth. So I thought I'll just highlight that point.
One more last question. Yeah.
The question is regarding IFCO-FR, Internal Financial Control. ये क्वेश्चन सुबह मॉर्निंग सेशन में भी पूछा गया था. ब्रांच लेवल पे बहुत सारे क्वेश्चंस हैं जो ऑडिटर फाइंड आउट नहीं कर सकते सिस्टम लेवल के कि ये सही तरीके से किया है या नहीं. ब्रांच मैनेजर इज आल्सो नॉट एबल टू एक्सप्लेन. तो इसे ब्रांच ऑडिटर ने कैसे हैंडल करना है?
Yes.
See, normally IFCO-FR में आपको जो checklist दी जाएगी ना, that will be normally with reference to branch level only as to whether the branch is following all the documentation properly or not. System related चीज बहुत कम जगह पे दी जाएगी because I have the experience that जब हमने checklist issue करी थी तो it was only related to the documentation part and the process part which was being followed in the branch or not. So system related issues आपको because as a central auditor and as a bank they also know that system का वो कर ही नहीं सकते हैं. तो वो आना भी नहीं चाहिए. अगर नहीं है तो you can easily write not applicable.
Typically what happens? It's a pyramid approach. So what happens? Branch auditor is at base level to the branch. Then center statutory auditors, and then accordingly it is reported. So as it is rightly said, the branch auditors are said to be eyes and ears of center statutory auditors. Usually what happens as the center statutory auditors, they have to give report on IFCO-FR, internal financial control on financial reporting. And therefore normally, see typically in public sector banks, even the control lies at the bottom level, that is at the branch only. So therefore, such type of confirmation is taken from the branch auditors. Giving system related or CSB, CBSE related this one, I don't think that is a correct way. That shows not applying the mind while passing any information. Ideally, when I'm giving, even the center statutory auditor is supposed to give direction letter to the branch auditor also, to what exactly is expected out of it. But since RBI had got the norms prescribed, separate document is not normally given. If there is any specific thing, then in such cases, central statutory auditor through bank, they give this type of thing. Coming back to IFCO-FR, that is internal financial control on financial reporting. What happens is, as a chartered accountant or the auditors, we are supposed to limit ourselves to internal financial control on financial reporting. Now, whether any lack of control is leading to misleading information as far as the financial reporting is concerned, that is what one has to see. And therefore, at branch level, possibly the what you can say, the level may change or the materiality may change. But if you come across anything which is worth mentioning in your report, not necessarily that it will be picked up at the final position. Final report, you may say everything is fine and all this thing. But if you come across, please mention that one. The reason is, if it is not material at the bank as a whole level, depending on the volume, but if at all I get 10 branches or 20 branches such type of report on a particular aspect where all branch auditors say that this is a lack of control, as a central statutory auditor, I have to consider that one for placing it in my final report. Stage one. Secondly, if at all there is problem in financial reporting, can you say that there is no IFCO FR? Some people at some other corporates, I have seen that people give, there is no IFCO FR, which is not a correct one. There will be certain areas where there will not be financial control or financial control needs to be strengthened. Not that everything is bad. If everything is bad, then you cannot give true and fair view. That's the problem, because internal control is backbone of our audit techniques. So from that angle, to answer your question, if the questions are not pertaining to the branch audit scope, please say that this is not available at the branch. Unfortunately, if such type of question comes to, ideally it should not come. And if at all there is any instance which is worth mentioning to highlight this one, it is always appreciated that such instances should be mentioned so that even if it is not a part of final FQFR certificate, but at least LFAR will find a proper place for such type of observations. And therefore, you are most appreciated, most welcome to mention such type of thing.
At the outset, I want to thank our all central statutory auditor, CA Abhay Kamat, CA Pankaj Tiwari ji, CA Jayesh Kala ji, and CA Abhijit Sanzgiri to accept our invitation for this session. And actually, this session has been designed to interact between central branch auditor and central statutory auditor, because once the audit will start, we all will be busy in doing audit, and they will be busy in resolving the query. So it's better to interact with them before getting the audit, and you can do your audit planning accordingly. CA Abhay Kamat talked as practical approach and social behavior in bank audits, and he has also shared his point of view and how he dealt with our branch audit report with the bank. And CA Pankaj Tiwari informed about importance of MRL and how to play 10-10 with proper audit planning. CA Jayesh Kala thrown light on expectation of central statutory auditor from SBA, and also explain how to deal with some special queries or situation that arise during the audit, and importance of office account, which is treated as like a suspense account in bank. Actually, I also have one experience. If you allow me 1 minute, I can share that. I have called from, I received one call from economic offense branch. Because in one bank, I had audited, in that there was a fraud happened. And that fraud was in Forex. What they did, when the LC expired, they are shifting that amount in suspense account. And again, they are opening LC from suspense account. Okay. So, but in my period, on 15th March or 16th March, they just had started once. First transaction was happened that time. So I have clearly out from that. But I used to take printout of full office account. And once I used to throw light on all the transactions. If there is a same transaction happening, or there is a transaction for more than a limited, there should be a limited amount, not big amount. So when the sir was saying that you should say office account, I reminded that situation when I was in economic with office wing, and they are asking me question for question. So you should not fall in that. And office account को हम बहुत loosely treat करते हैं. Generally कोई देखता भी नहीं है. Just खाली हम last के transaction जो 15 दिन से ऊपर के हैं या कितने दिन के हैं, खाली वो हम बैंक वालों से ले लेते हैं. That is not the proper way. अब full year का एक बार print out नहीं भी ले रहे हो ना, तो just एक बार आप नजर मार लो उस पे. उसमें उन लोगों ने बहुत कुछ घुमाया होता है. कहीं कुछ नहीं मिला, उनको day end करना है, they will park in suspense office account. So thank you, sir, for your time, and thank you for your patient hearing. And I request you all to carry with good round of applause for all the four panelists. if not the least, because it's on IRS yield norms and asset verification. And sir, yeah, I want to thank CA Suresh sir to accept our invitation for this session. I want to introduce CA Suresh sir formally. He is qualified chartered accountant and has more than 20 years post-qualification experience. He is also masters in finance from Mumbai University. He is a partner with CNK and Associate LLP since 2002. He specialized in statutory audit of bank, HFC and other listed entities. Also engaged in consulting and transaction advisory service such as due diligence, valuation, etc. He has completed a statutory central audit of Union Bank of India, and he is currently doing central audit of RBL and Citibank. CA Suresh sir worked closely with the regulators including RBI and ICAI. With this brief introduction, I request you all to welcome sir with a good round of applause. And I want to request CA Ketan Bhai, please come on the dais and give the memento. Sir, you can start.
Good evening, everyone. I think I could see that many of you are seasoned players in that sense. And before this session, somebody talked about 2020, 10-10. I think as a branch audit, I was just talking to Ketan Bhai also, that this is the first assignment of the year that you do it. And year begins with a good thing is always a good foundation for the rest of the year. So take it as a positive. We understand that there is a challenge, as somebody, sir, has mentioned about the time limit, the issues that we face. But take this as an opportunity. Pankaj did mention about the peer review. That is going to be a critical part of it. I don't want to touch upon all those parts. My topic today is IRAC norms and asset verifications. I would like to limit myself more about the IRAC norms because that is more important from the branch audit perspective. Whenever you are doing it, any branch audits, asset verifications has a most important part, which is your playing. And one has to say it is a balance sheet audit that you do it. Revenue is a subset of that. And primarily whatever the IRAC norm that you have to follow in terms of classifications, provisions, that's very important. So that is our today's topic. But before we start the topic, just wanted to highlight few of the things. What is a recent development which has happened in last 2 weeks? All of you are aware about it that suddenly we come to know that Silicon Valley Bank is no more the valid bank. I'm not sure any speakers in the morning talk about it, but that is known, that has come as a shock to many. Credit Suisse was one of the banks which is in the limelight for a long time, saying that there is a problem with that bank. But suddenly we come to know that there is a bank which is around more than 100 years old bank in US has been folded. And friends, really, what was the reasons? And if you look at it, the primary reasons, somewhere it is the asset liability mismanagement, the entire business model on which they are working is into the question. So it is very important today that from the banking perspectively, what is the model that you are working on it? Post-liberalizations, and if you have seen last 8 years, there are a lot of relaxation which has been given by the regulators. Many of the things which is considered as a floor requirement are changing. Banks are being allowed to do the business, the product mix they wanted to do it. And you find many of the banks which are now a specialized banks. So you have a small finance banks which specialize mainly in the retail category or MFIs. There are large banks who are into only co-originations, like a housing banks, or primarily looking into the housing finance or anything. So it's very important that we need to understand what are the business dynamics which are there. Why I'm telling you all this? Because all this, when you're going to any branches which is there, predominantly you need to know what is the branch really on. Is it a retail branch which has a predominantly advances which is given to housing finance, secured advances? Is it the four-wheeler advances? Is this MSME branches or SSI, some PSBs called it, where most of the small corporate advances which are there. So those understanding of the business is very important. So right now, in my presentations, I'm touching upon the aspects which are very relevant from last couple of years point of view. So this is just a disclaimer. So what are the regulatory changes which has happened? If you're seeing that banks in last few quarters have been performing very well. Quarterly, results are very good. You take any PSB banks, private sector banks, everybody is doing very well. The question is that how far are they going to do? The market expectation is there that there is the only industry which has the best ROE which is there, which means there will be always a pressure on the business that to perform and compound, and which is a concern as far as auditors are concerned. Second about is the lag on the deposits. If you see what has really happened, that because of the increase in the repo rates which has been done, and RBI in entire year has increased 7 times the repo rates. It has increased by 250 basis points. What really has happened is that the liquidity in the banking sectors has been sucked into it, and which is reflecting into the asset liability mismanagement. So it's very evident that last couple of months, most of the PSB banks have come with the interest rates which we never heard for last 2 years, and specific rates. So it's very interesting and very concerned that we need to see that this is also going to be a area where we need to be watchful. With our experience, I can tell you that there is a concept of value dating of any instrument is also permissible. So while booking any fixed deposits, you can probably do with the CBS, the value dating. So you need to be mindful that whether there is a clear balance is available, and only at that point of time, a fixed deposit got created, or just to show as a balance sheet management, they have got this and they are given a benefit to the large or a critical customer from the branch perspective. Third is about the recent layoff in the IT sectors. So predominantly the growth for 2 years which has happened, that has happened in the retail sectors. So if you're seeing housing loans are concerned, credit cards, personal loans, four-wheeler loans, these are the areas which is driving most of the profitabilities for the banks, particularly the PSB banks are concerned. Because post NCLT and large accounts which has been under resolution plans, there is no large infrastructure project which is getting funded. But scenario is changing. Last 6 months, there is infrastructure funding is happening in long term. But primarily in last 2 years, from the retail sector side, there is a vast takeoff which is there. And one of the area where you're saying that the downturn in the IT sectors. So we need to be mindful that how it is happening, what is the correct mix of the portfolio which is there now. From the regulator point of view, the regulator is always concerned about the quality of the assets. Divergence has been concerned. There are divergence not only in the large advances, but even in case of the small retail advances, also the divergence has been spoke upon. During my presentation, I'll take you through some of the examples where possibly there can be a evergreening or divergence which is being identified by some of the central statutory auditors, observed by the regulators also. And as a branch auditors, it's very important that we need to mindful about it if it is happening in your own branch also. Few rest of the things are the recent development which are there in terms of DB units which is there, or digital rupees, which is not going to impact, but I'm just trying to highlight these are the new things which has happened right now. And lastly, about the recovery things. Friends, maybe PSB banks may not have this, but most of the private sector banks where we are currently auditors, there are concerns has been raised about the practices followed by the recovery agents, typically third-party entities to whom the recovery and follow-up things are there. So RBI is very concerned about, one, about the quality of the advances, and secondly, they are more concerned about the, I would say it's more customer-centric approach that they have right now. So the way I would say that few, or maybe a decade back, it was not that view. Right now, it is very clear the customer is the king. You can't do something or can't do the wrong way where the customer gets hurt. So this is just a coverage point of view. Over a period of time, the percentage of coverage has come down substantially. You can see from 90% from 2000 to 2021. It comes to 22, 23, around 70%. Major change which has happened, that coverage is now going to be determined by the board of bank board. So it is now, it is a totally the bank board that determines what is the percentage of coverage. I'm not sure in 23, 24, post this audit will come to know what is the coverage. I'll not be surprised, it will be further been down by some few points. And that is the one area of really a concerns. And I think Institute is also actively pursuing this matter. Just for a record, we have a Central Statutory Auditors program happen during this week itself, early week, Tuesday we have. Some of the concerns which is raised about, mainly about the coverage of the audit in terms of fees which is there. Second point is that there is an increase in the fees happen, but 10% increase after long period of time. If you're seeing the inflation and the rate at which the cost of your articles or chartered accountants or your own cost, I think the 10% increase a minuscule in sense. But that is what the opportunity for us to bring in lot of technology. How effectively we are doing it is now the key in terms of survival and able to carry out the audits. Earlier, there is a requirement of the prior approval from the RBI. It is no more required. So it is all depending upon the each management to decide whether which firms to board. Last is about they have truncated the number of branches. One can say is that half glass full, half glass empty. In terms of the seasoned auditors who I can see out here in August gathering would say that we used now have to do only 2 branches. And that is going to be an impact in terms of what is the revenue that you're going to generate out of the bank branch audits. But at the same time, look at it this way, that a new entrant in the practice is concerned. This is an opportunity which has been given to them. So as a fellow chartered accountant, I would say that it's a fair play. We have to take it on the stride and say that what the best manner we will be able to deliver what have been expected by the banks from us. These are the few challenges which is there. First is about the NPA automations. Clearly post 2021, daily NPA which has been there. COVID restructuring which has happened too, which is most of the second COVID restructuring, most of the COVID portfolio get open up during the financial year 22-23. Their behavior of that, the date of NPA, what are the policies which is followed by the bank, is these policies are in compliance with the IRAC norms? These are the challenges that we need to face. Third is about the monitoring the pool of restructure accounts. So there are a large restructure accounts probably there. There are criteria are different in terms of upgradations, because now expectation is that you can upgrade the things going back to 2019, that satisfactory performance for 1 year. Once the portfolio move out of the restructured portfolio. So that is one thing is there. Retail loan portfolio, there is evergreening and negative amortizations. I'll come with a specific slide on the negative amortization, and this is very relevant from the current years. This specific year concern, you'll find it in many of the banks, possibility of a negative amortizations. Lastly, very important, that certificates and reporting, this is a regulatory ask which is there. We have, if you are giving a limited assurance, you have to give this, what are the reasons for these certificates? And for the first time, auditors has to report on process of the internal weaknesses of the critical process, what the banks are doing. So just to capture, these are the two paras which are there. One, talk about it as highlighted, that SCAs or statutory auditors shall indicate that every certificate as to whether the same has been issued with a limited assurance or reasonable assurance. In case a limited assurance, the SC or SA shall indicate the reason for the same. So it's no more that we can simply say that I can give a disclaimer of opinion. We need to document it, demonstrate it with your own working, that this is the reason for which we are giving a limited assurance. By and large, it is applicable for SCAs, but at the branch level also, we are doing a lot of certifications. And if we are giving a limited assurance, we should have a proper documentations with respect to that. Lastly, about the process weaknesses. This is more from the ACA point of view, but I thought that it will be better to highlight and come to know that what are the new things which has been covered during the period. The few of the relevant circulars which are applicable from 22-23 point of view. One is about the IRAC circular which has come in 2022. This is a consolidated circular. Entire IRAC norms and clarifications which has happened over a period of time now have been consolidated at one place. This can be a Bible to start with as far as current year is concerned. Then there is a master directions on frauds. I think this may be known to everyone. Red flag accounts and EWS mechanism. Red flag accounts particularly, I just wanted to highlight that once a bank identify account as a red flag, they're supposed to dispose of within the 6 months. That is a requirement of the master directions. But in most of the cases, you'll find out because there is no conclusions, forensic audit reports are not available, they kept in pending for a long period of time. Now, if an account which is a red flag, which has an inherent risk which is being identified by the bank itself, for a foreseeable period of time, if it is not conclusive, as a branch auditors or as a SCAs, it is a responsibility of the auditors to conclude and say whether we require to classify this as an NPA or not. So from that perspective, it's very important that what is the period for this, it has been pending. Or at some point of time, red flag account get concluded based on the management commentary without any supporting. Those also can be questions about the qualitative aspects, whether it is to be considered or not. Merely because the subsequent recovery has happened does not mean there's an element of fraud got resolved. It's very important to have looked into that also. Then there is some certificates which is typically when you're doing the branch audit, there are a number of certificates that is expected to be signed off. And Abhay did mention in the last session about that you keep a reasonable time in terms of signing off the entire bunch of certificates and reports of the returns that you are signing and all. So it's very important, the classification of advances into priority sector, non-priority sectors. It has ultimately at the branch level, all the data get validated in terms of the central statutory auditors. We rely upon the data which has been certified. So I would say that a granularly, if there are anything which is wrongly classified, or I would say that these are more the concerns about the data, cleaning of data is concerned. So at the time of capturing, if the things have been incorrectly captured, it will get reflected incorrectly and it shows the quality of even the management, the way they are doing it. So at some point of time, data cleaning should happen at the branch level. So maybe I'm not expecting that 100% to do it, but even at a random basis, few sample basis, one has to see that at correctly it is getting captured or not. You need to give MOCs wherever you feel that account does not qualify to be classified as a priority sectors. And inversely, same way account is classified as a priority sector, but it has not been classified. Last about the KYC, it is 2016 it has come. It is very important that KYC update on a regular basis when the onboarding of new customers are concerned. All document has been completed or not. And KYC is one of the basic things that is be expected to be completed at the branch level. Typically from our experience, just to give, most of the private sector banks are concerned, there is a centralized processing units are there. or there is a monitoring mechanism which is there. Unfortunately or fortunately, I don't know, but as far as the PSB banks are concerned, since the accountability and the holding of the accounts remain at the branch level to some level. So most of the basic data are concerned, the KYC compliances happens at the grassroots level. And therefore, it's very important that all the information is correctly getting captured. Lastly, about the Master Circular on Guarantees and Co-Acceptance, all of you are aware about it since 2016 onwards. The RBI regulator has changed the flooring. Earlier, if you recollect, few of the veterans in the audience could recollect that there is a restrictions on what is the unsecured exposure the bank can have. Overall flooring was given as 15%. Post 2016, it has been open for each board of bank to decide and determine what kind of exposure that they can have. So one has to look into it, what is the broader policy of the bank which is had. And the question will ask you that whether those policies are available at a branch level. I think what one can look into it is that go back to the balance sheets. Most of the policies which is available, if the policies in terms of the guarantees and co-acceptance are not available explicitly, please reach out to the central statutory auditors or reach out to the management and say that what are the policies that we have. It is good to know, and I understand that what I'm talking about is a lot in a small capsulations. You will say that when ground level, when we are doing, we have 5 and 6 days. Can I cover everything? I think we require some checklist to start with. Time permit, this is something we need to look into. Other relevant circulars which are there, and few of this I just run past, these are more from the central statutory auditor's point of view. One about the presentation and disclosures, there are few changes I cover in the next slide. There is a regulatory framework change in the microfinance loan which is being given in 2022 onwards, it is there. I think it will be more like banks like Bandhan Bank, which is built on as a microfinance bank. It is very important. Then there is about consolidated circular on the CCOD account, the way this account bank need to open. It is more from the LFR point of view, the compliance is happening or not, or there is a multiple accounts being still maintained or not. There is a master circular about securities and standard assets. It's more from SCA point of view. Lastly, about the transfer loan exposure. So, friends, from statutory branch audit point of view, this is the key point that we need to look into it. One is about what are the other things which is from the branch audit point of view which are impacting. One is about the NPA automation which has happened since 2020. It has a timeline, it is given that how they need to implement it. Clearly, when we are doing a year 22-23, the expectation of regulator is that the implementation is already completed. And one of the important thing is that it's a daily NPA marking. When I'll take few of the examples, you will come to know that how it is important that a daily NPA will change substantially the classifications, the provisioning norms, and overall impacts the profitability of the branch itself. Second is about the disclosures that we talk about. Then comes is the material item. So there is any divergence which is there in terms of those disclosures are come. And lastly, the outsourcing. Friends, when you are doing any of the audits, I think Institute as a platform has given a lot of guidance to us. Everything is available. These kind of a programs which is conducted. These are the few of the publications which is there. And do refer to that. Many a time you come across the practical problems and all. You go back to these guidance notes, technical guidance. You will find out many of the places this is getting captured. It's just that it comes only once in a year. And we start preparing when you have to appear for the exams. And we know that everybody is a firefighting and we are more client-centric and we need to solve their problems and all. But as Pankaj mentions, since 2025, the peer review is going to be mandatory. I think it's very important that this is the first year we're going forward. We need to be aware about it, what standard of auditing is applicable, what are the guidance which is given by the institute is there in terms of the branch statutory audit. And this is something which is worth going through it. I can clearly tell you it's like a Bible. Most of the things you can get it from there. Master directions and the interpretation which is given by the institute, guidance note which is given, will take you through 95%. 5% is a judgment call. So in terms of divergence, over a period of time, there are changes happen. So now going forward from 23-24, is there any 5% changes that also going to get reported? Another change or disclosures which has happened, that is anything which is exceeding more than 1% in other assets and other liabilities will get qualified and disclosed separately in the notes to accounts. So this is just one example. And most of the examples that what I have taken or my colleagues who have prepared this are with the practical examples what we faced in last couple of years. So just to see that, this is one of the bank which has reported NPA of 954 crores in that year, 21-22. Subsequently, with the RAR report which has come, it shows there is a diversion happen in investment. PTC investment is being classified as divergence. As on 21-22, when the NPA provision which has been made, none of the investment has been classified as a NPA. So it's the first time divergence that is being classified as an NPA. So now the question is that, and go back to this, in terms of disclosures, whether this PTC investment which has now been considered would get covered. I need answers, because this has to be interactive sessions. I want people to apply their mind and start, replying to this. How have you looked into it? Would you say that this will be a divergence required to be reported? Or it is not? Because if you look at it, the 954 is a total NPA. 10% of that comes to around 95 crores. And the divergence computed around 67 crores. So would require reporting? Five % is from the next year, 23-24. We are talking about 22-23 is what we are going to report. Whether this will amount to a diversion and require to be disclosed in notes to account. Simple arithmetics. Yes or no? Anyone? It's below 10%, right? But if you're seeing the way the categorization which is there, there's a ticklish issue that at the balance sheet date, as far as the investment is concerned, there is a 0 NPA which is there. So floor is 0. And from there, it's a 100% increase. And then start looking at it. And then you'll say, you need to look into it. I think the first starting point would have been that you need to discuss this with the management and saying that, to my view, this is my interpretation. So tell me what is your interpretation. And precisely that is what the discussion that we are currently having with the management. And we are saying this will require to be disclosed. Because as on 31st March 22, as far as the investments are concerned, there is a nil NPI which is not disclosed. Now this diversion which has happened is the first time classification under that class. So the view that we forming, that clearly it breaches the limit and required to be disclosed. It can have a different view. This is a firm view that I'm telling you. Probably the management will have a different view. My fellow colleagues can have a different view. But that is the way I'm saying that this is the interpretations and thought process you need to start with. So this is the entire IRAC journey that which started. So it started somewhere, the automation which is started in 2020. The first IRAC norm which has come in October 2021. IRAC clarification come in November 12, and November 12, I believe that is very important. Last year, most of the programs which you have attended and all, you'll find out is very important that subsequently followed with the further clarificatory on 15 February 2022. And the last IRAC 2.0, that what we called, which has come in April 1, 2022. So let's look at it. What is basically automation coverage which is there? This is automation expectation of regulator, and I have carried this entirely from the master directions. It is required that it will be all the assets or borrowable accounts are there concerned will get covered under the automations. There'll be no excuses, nothing will be excuse about it. Second, the classification will be a rule-based classifications. This will be clear, configured within the system. There will be no manual intervention will be there. It's a simple set rule which will be defined based on the which classification will happen. There will be a preset of rules which is there to classify the assets into different categories. The value of securities has to be captured from the system. So in terms of the data upgrade is concerned, there will be minimal manual interventions are expected from the banks. Income recognition and derecognition will happen from the system. It will not be computed manually. At the same time, the upgrade and downgrade of the account will happen through the systems. So if you have seen the entire journey in terms of a classification, first from the identification, classifications, provisioning, income reversal, and then upgrade and downgrade. So entire spectrum is now getting covered under the NP automations. There will be no manual interventions. If manual intervention has to happen, it will happen with the exceptional thing and whatever the MOCs which will be given by the either identified by the bank management itself or by the branch auditors or SCAs when they are identifying. Otherwise, there will be no manual interventions. The significant important that what has the change happen in IRAC norm October 1 circular, the one I highlighted. The first time you can make out that even the new requirement talk about whenever there is a implementation time for the RP is concerned, if there is a delay, even fund-based, even as a non-fund based exposure also required to be considered for making provisions. So if you're seeing the shift is now happening, not only the exposure which is there, but now they're talking about exposure at default. And I'll touch upon last if time permits, the new discussion paper which has been come by the RBI on the roadmap in terms of the ECL which is applicable. They have asked for banks, fellow professionals, response till 20th of February. I think most of the response is gone. Expectation from the industry is that the ECL will get implemented somewhere near future, maybe from 24-25 financial year or maybe a year later. But it's very clear that this is a starting point. The indicator was always there since 2021 that what is the exposure at default at given point of time. They started with the RP and going forward, the once the ECL model will get evolved, all the non-fund based exposures, the guarantees which are given by the banks will also be required to be provided for. In terms of few of the major points which has got clarified in 12 November, one is that specific due date, repayment date in the loan agreement is required. So you have to give the entire scheduler which is expected to be given, what is the due date and all. It not left to the discretions of the management. Secondly, about classification based on the SMA and NPA, and it is part of the day-end process which is there. Major change which have happened and clarified is about the definition of out of order. As we used to know about the two methods in which the account can become out of order. Now there is one more third layer as also added. In few of the later slides, I would cover specifically how currently the banks are interpreting, how they are following as auditors, how we need to look into it. Then there is a NPA classification in case of interest payments. So typically in CCOD accounts, only the interest servicing is happening, whether at what point of time you're going to classify it as a NPA and not. Lastly, about in moratorium period, if any interest is being given or capitalized, at what point of time post-moratorium period, once the account is classified as an NPA, what you need to give a treatment, that is what been clarified. So right now, the first point about the SMA and NPA. So if you, the area which we need to highlight in this is about the first time. If you can see, pointer. So if you're seeing that area which is there or any other amount wholly or partly overdue, can anyone help me out with this? Can you make any sense of this? Is it something new or this is a common? Friends, we have to make it interactive sessions. I don't want it to be just from the podium. In fact, then I have to come down. I can see that few of you are sitting all the way. So what you mean by that? Any guessworks? So this is the what I'm referring to. Any guess? So this is the addition which is there. So if you're seeing that what is saying any other amount wholly or partly overdue. What you mean by this, any other amount? What will get covered? We know about it, what is the principle, we talk about the interest, everything in know. This is the first time, this is the small sentence got added, few words. Okay, and yes. Yes. So actually what you are referring is most of the cases, the insurance charges or processing fees and all, it's one-time thing which is happening at the time either opening of the account or the review which is taken place. And most of the cases, these are the CCOD facilities. And if you're seeing the way the principle is drawn, that it will get adjusted from the CC facility if it's available. So it never remain outstanding. Any other guess? So friends, if you're seeing that in retail portfolio, if there are any delay payments as a deterrent, always banks has a right to recover the penal charges. There will be some extra check bounce charges, penal charges, other charges, you name it. And these are primarily considered as a deterrent. They are never been considered as an income. And if you'll see the policy, the income get recognized only on the realization basis and not on the accrual basis. So it'll be everybody will talking about. The way it is getting captured right now and the way the regulator looking at it, that anything other than principal and interest, so any EMI based product which is there, any other charges which has been due, and generally it sits into the suspense accounts. And if you check with the bankers, what they say is that we have no certainty of recovery of this only when the account will get closed at that point of time, when the customer comes for the, say, housing loan account is there. When they come to collect the original documents, we can claim that amount because that's a due recoverable. And if I can recover, if a good customer is there, I will forego that. If the bad customer and able to recover something, I will recover at that point of time. The way the regulator looking right now, that whatever which is getting accrued and which is sitting in your suspense account should also get considered for classification of SMA. So that is what way really clears this. Right now, let's stop about the SMA. The logical conclusion to that, if those dues are 90 days DPD, the account should be classified as an NPA. But then comes to the policy in terms of whether this has been recognized as an income and to the extent receivable. Do you have a recourse to recover? I think these are the discussions which is happening for last couple of years. Mostly it is concluded saying that is only for SMA purpose, but going forward, I'm not sure whether it will be remain only the SMA or possibly the regulator will come back and say that this also should be considered as a receivable and 90 days DPD. Based on that, the account may require to downgrade and classify as an NPA. So this is the the way, the dates on which the account going to become NPA. So it talk about more about the day in process. So if you're seeing the due date is 31st/3/2022, overdue became on 31st/3/2022, SMA becomes on 31/3/2022, and that account now going to become NPA on 29/6/2022 and not on 30th/6/2022, the way conventionally we used to know. Now, erstwhile, what used to happen? Every bank used to have their own different methods of classifying the NPA or carrying out, somebody used to carry monthly, some used to do quarterly, some used to do daily. Now it is harmonized. Everybody has to do the daily. It's a day end. Irrespective whether it's a holiday, it's a Sunday, public holiday, that a day end process will continue. DPD in the real term has to be computed. Anything which is due and outstanding 90 days as on that day will classify as an NPA. And it is very important that as auditors, we need to see that whether day end process is happening on those days or not. Whether while classifying as a date of NPA, whether it is, so that one of the LFAR point, if you come across any instances, though account is classified as an NPA, but the principle of 90 days DPD, the day on which it need to be tagged as an NPN system is not correct, the logic is not correct, then please mention that in LFAR. That this is not correct way that the bank has done. Major impact, I think from the daily NPA of 12 November, the major impact is that partial recovery is no more allowed to upgrade the accounts. And that is a big shift. And typically from the out of order point of view. See that circular, if you're seeing the circular is applicable for all across the industry. So all NBFCs and everything. This out of order is the only one area that third limb has add on the more spice, the way the classification will happen. But traditionally, we know that once the account has been classified as an NPA, the upgrade can be possible that all the dues as on date of upgrade has to be recovered from that. It's only in case of the NBFCs, when they are following under the Ind AS model, they used to show the stage at which it is outstanding. Anything less than third stage, they used to classify as a standard assets. So it's that change is more from the NBFC perspective, but from the banking side, I think there is no change has happened. So we'll look into a greater detail. What are the changes happen as far as the CCOD is concerned? And we call as a out of order. First two aspects I'm not reading and considering the time, we will not look into the first. We'll straight go to the third. And third is a new thing which has come. What it talk about? The outstanding balance CCOD account is less than the sanction limit, drawing power, but the credits are not enough to cover the interest debited during the previous 90 days period. So clearly, what used to happen earlier, that whenever there is a no sufficient credits are there, the bankers used to say that interest served because there is a limit is available. If the sanction limit is 5 CR, the total exposure is 3.5 CR, any interest which is there, whatever the interest which is debited is being utilized from the whatever the exposure which is there. And there are some credits are available. Those credit may not necessarily is equivalent or more than what is the debits for interest are happening. So it's not a dormant account. The account is a functional account, but the credits are not sufficient to cover the interest which are there for the period. Always there is a dispute which used to happen till 2020, saying that whatever we have a exposure and therefore it is considered as a principal and that interest component is always considered as served. Now with this clarifications and mind, it come as a clarifications. The way regulator is looking into it, that from the day one, we are expecting that this is the way it should be interpreted. And now we are clarifying that you can't treat this. Your all 90 days recovery which is there, it should be sufficient. Now look, these are the two scenarios we are looking at. So clearly I'm looking at a quarter, which is a second quarter. And second quarter is talk about total interest debited in this account is 56. You take a scenario 1. Now in that scenario 1, last 90 days, if you take it, the 90 days recovery which is comes is a 45. So I'm looking at from the October onwards, because I'm not looking FIFO method by which we are doing it. So it is not sufficient. So scenario 1 is classified as an NPA. Look at the scenario B. Now the credits are there, which is 60, that account will be considered standard. So this is a principle which is we are talking about. This is a new thing which has come. Everybody with me? Okay. Now, we talk about the two scenarios. And the reason I'm taking this as an example, because each banks has adopted different interpretations, different methods. So currently there are two methods which has been followed in the banking industry. And it's very important from the auditor's perspective. We need to know that what method which is being followed and at what point of time the account is going to begin out of order. Now, first thing method we talk about it, that it is a summation. So last 90 days have been looked into it. So as on 31st October 2022, the debits are 36. The credits are also 36, and therefore the account is standard. Come to the next day, because it's a day in process. 1st November when we are looking at it, the same logic at the day end will be run. And now, if you look at it, the previous 90 days, the earlier 13 which has been considered will get ignored. And therefore, the account will become NPA as on 1st November 2022. So far, so good. Everybody understood? Okay. So to sum up, what is really happening is, it is a daily NPA which is there. Circular has clearly saying that previous 90 days has to be looked into it. And the view which is there, till my previous 90 days, there is a sufficient interest recovery. The account will be considered as a standard. The day my previous 90 days, if it is not sufficient, account will be considered as out of order. So this is one view which is there. And believe me, there's a lot of debate has happened. How can you do this? Because previous 90 days, there can be reasons, there may not be recovery. Is it going to be a FIFO method? Is it going to be a different method? And so on and so forth. And is it comparable to the other DPD models? Because we have a 90 days DPD. And how come now we are looking at it only one day and then we are looking at it, the recoveries are not. So some second view which has been formed by the few of the banks, they talk about the DPD model. So they said that we will do a kind of a earmarking for that what is a day past due, the outstanding interest is there. So any given point of time, if my interest which is past due for more than 90 days, then that account will be classified as a out of order. So there, this is the method which will work. So for example, interest debited is 15th on 31st/7/2022, not so on the 1st August, or it is day end process. So that DPD 1 start as on 31/7/22 itself. On August, it will become 2 days DPD. When the recovery takes place on 2nd, it becomes 0 DPD and so on and so forth. So this is the way and method which is being followed. So it's a clearly a different from what is the first method which is there, where previous 90 days summation is looked into it. Now from here, it is more akin to like a EMI. Whatever the due which is created in the system, from that day till the reporting day, if that due is outstanding for more than 90 days, or it is a 90 days DPD, on 90th day, that account will be classified as out of order. Now, this is a system logic, because as we know, this NPA automation has happened. This is not going to be computed manually. So first and foremost, when you are interacting with the branch managers, probably managers may not be even aware about it at what method which is followed. But you looked into it, few of the accounts as a CCOD, which has gone as a out of order. What is the method which is being followed? So what we are really looking at it. When you know that what is the practice or method which is being followed, then we can do a qualitative work and say whether it is required to be classified as a out of order and therefore NPA, and whether it is being correctly done, or there are some gaps that we observe. So these are few things which is there. I think we discuss about it, we'll go ahead. So this is more about the third condition capturing that how the third conditions is impacted, how the banks has looked into it. So this is the first case study I'm taking, and case studies are the way I wanted that either some of you who wanted to read out the case study, or I wanted the answers, quickly. So we can take it as many as case studies because now it's already 4:40 and time permits are maybe I have a 20, 25 or maybe 30 minutes max. So we need to quickly run past the things. So I can expect if somebody can volunteer, that will be a great. If not, then I'll take with my own. Anybody from audience want to take it? Or let's read it out. So this is basically ABC Private Limited has availed the CC facility from the bank. The bank has closed the current account with the borrower as per the new RBI guidelines which has come. The company has also taken a rupee term loan and a capex LC was sanctioned as a sublimit to this facility. The company has taken the LC against the capex expenditure. On the due date, the LC, the bank has disbursed the rupee term loan to close this LCs. The disbursement against the capex LC were routed through the CCOD account and payment were made from that account itself. The account is classified as a standard based on the out of order criteria. On the careful verification of the account statement, the auditor has observed that the business credits in the account were not sufficient to cover the interest debited during the period of previous 90 days. However, the system has classified the account as a standard considering the disbursement credit in the CCOD account. So as our auditors, what is your view? So this is a practical example that what we come across the last year. Whether this account, CCOD account should be considered as out of order. Anyone? Or auditor's view to classify as out of order is correct? Let's start with whether auditors want to classify this as out of order. Is it a correct view? No view. Floor has no view. Friends, we are going to do, each of you are going to do the audit. This is a practical examples I'm giving. This is going to face that 5% is your opportunity to learn. I think I want everybody to apply their knowledge about entire the bank branch audit. They have done it. What is your view? NPA, what is the reason? That's right, absolutely. But the way we are looking at it, this is a systematic issue. Today, the disbursement has happened from the CCOD account because you don't have allowed to have a separate current account. You can have only one account. So bankers are going to come back and heavily and saying that, no, we don't agree because there's a system. Regulator only told me that you can't have a separate CC account. So I have done correctly. My system is driven. The system logic is given. And you now tell me how logically you are saying this is correct. Because we as auditors, we need to be very clear about that what is the requirement. So now look at it, what is the requirement of the IRAC norm circular? What it says, the bank should not do withdrawal from the term loans through CCOD current accounts of the borrower. Since term loans are permitted on specific purpose, the fund should be remitted directly to the supplier of goods and services. In case where term loans are meant for the purpose other than the supply of goods, the services and whether the payment designation is identifiable, bank shall ensure the payment is made directly. Now, in the given case, this is a LC. So it's a overseas, it's not identifiable. And therefore the bank may not be having the ability to remit. In such cases it can, but it clearly says it's bring to a platform that what we today talk about is the requirement of the IRAC norm itself. You can't do that. So these are system lacunas. Such accounts need to be considered as out of order. Is this entire slide is visible behind and everything? Or you want me to read? So this we have captured the Finacle screenshot for a CCOD account where we have the debits which are happen on 31st July 2022, the payments which are happen on 20th August 2022, and subsequently there are basically entries which are happen, and in banking terminology, these are more like a compensating errors. So you pass the entry a day and process the reversal which takes place. So all those things which we are looking at is the debits credits which are there. These are all those entries which are happen. Now look at the way this account has been classified as an NPA on 29 November 2022 due to the non-service of interest. And if you see, the credits are not there since 31st August 2022. Now, according to the IRAC norm and according to the auditors, what should be the date of classifying this as an out of order and NPA? Correct. So Ketan bhai has rightly said, what we need to do is that we have to ignore. So that summation formula which is there, in that all these debits credits, because effectively what will happen, the credits which are there, those are reversal entries. Many a times system is unable to, or system is not built with the logic to ignore such of the entries which is passed. So simply system, when they're talking about 29 November, they have considered all these receipts, and later on from 31st August onwards, it is considered, and from that day onwards, it is. If you ignore this, I think this account will become NPA by around 15-20 days in advance. So from the date of NPA point of view, it is incorrectly captured. Though this account is an NPA, we not only have to identify whether account is classified, but it's a correctly date of NPA is being correctly classified or not. So from that perspectively, you require to pass a MOC and saying this is the correct date of NPA, because subsequently the aging criteria, its sub-classification will happen. So whether 12 months has passed, it will be called DB1 and so on and so forth. Next thing which has come from the 12 November consider is it is clarified that if a loan with a moratorium on the payment of the interest permitted at the time of sanction of the loan become NPA after the moratorium period is over, the capitalized interest corresponding to the interest accrued during such moratorium period need not be reversed. So this clarification has come that during the moratorium period, whatever the interest which is there and it is capitalized is need not to be reversed because it is allowed to do it. But a very important part that you need to know is about what is there within the brackets. It says permitted at the time of sanction of the loan. Because in COVID-1 and COVID-2, most of the cases which has been considered as a restructure, during that moratorium period, whatever the interest which has got accrued, people have capitalized, and subsequently that account has become NPA. The bankers has taken a view that we are not, because they have taken a plea of this clarifications. But if you read it carefully, it is permitted at the time of sanction of the loan. So mainly the moratorium is granted in retail cases in education loans. So typically it works like this, that the repayment starts after a period of time. The interest services therefore get EMI. So that interest get accrued and get cumulative, and EMI start after 3 years or 4 years when the moratorium completes. Only in those cases, interim period, whatever the interest which is accrued and capitalized may, with the bank's own policy, need not to be reversed. Otherwise, all other cases, so COVID 1.0 or 2.0, whatever the interest which is currently capitalized, if an account subsequently slipped into the NPA, the component of the interest which is there, which is capitalized, the full provision is required to be made and it need to be reversed. You have questions? Next is about the clarification which has come on 15 February 2022 that previous 90 days includes the day for which the day-end process is begin. So run day is important. We have seen earlier, it will happen on a day earlier, it happened on 29th, not on 30th. It will come out of these clarifications. Upgradation of the facility only upon the repayment of the entire areas of the interest and principal pertaining to the all credit facilities. So these are the two things which are very important. Now, this is the example that we are looking at it. So linked account upgradations. So we have 3 facilities which are there. Personal, housing and auto loans. Various days are there. The housing loan account of the customer was overdue and was classified as NPA on 29 November 22. On 11th March 2023, the customer has paid entire overdue of the housing loan and DPD in other loans are below 90 days. The bank on 11th March 2023 has upgraded the housing loan from NPA to standard and all other accounts automatically upgraded to standard account. As an auditor, what is your view? Sorry? No, we now talk about upgrade which has happened on 11th March. NPA classification on 29th November. Yes, agreed. It has happened. Now we come to the upgrade, 11th March. Correct. So that is very critical point. So look at back the last point that they are saying, clarified. Pertaining to all the credit facility. So right now, as on that day, it has to be a 0 DPD for all the loan exposure that they have. Yes. These all account will continue to be NPA. Date of NPA is going to be backward to 29 November 2022 only. Right? So other major points which are there, is upgradation of the loan account classified as a NPA. 2 things, I have captured with the examples. I've just, yes.
Are we going to take care about this, or we need to see whether it has been done correctly or not?
Ideally, system should do. Ideally, it should do. But the way the system has been built, every bank has a different logic which is there. Till the point of time it has got tested or not, we don't know. It's a recent phenomenon. Automation has happened a year back. So there's a possibility is there. You may come across situations that a system is upgrading. And typically when you're looking at an upgrade, what you do is you look at it that account which has become NPA, the recovery is 0 DPD or not that you looked into. And you generally tend to ignore it. That customer ID.
Yeah, we need to check all the credit facilities that have been given.
Correct. And just to add, and this is simple. You have a credit cards. I know that as a branch auditor, you will not have credit cards. But believe me, credit cards add complexity like anything. I don't want to highlight, but it is much more complex because that overdue and all, which is that a cycle starts from the day one that has become due. From that, it has certain period after that become overdue. Then you have a MAD to be paid, 5% minimum. So if you pay less than a MAD, then how it will compute it? Then there is a waterfall impact which is there. And the way in which you do appropriations. So it's much complex. So if you really want academic, there are a lot to discuss and deliberate. But simply from the branch auditor perspective, I think this is the good to do. One has to look into it as a customer. What are the other facilities? In later slides, there are other new issues are there. Once you add to this, you will come to know that it's going to be very difficult to even upgrade also.
Okay, and one question out here. How we are going to find out, what is the overdue on a particular date? For example, we are going to audit, say, in the 10th of April. How we are going to come to know, 11th of, particular date?
See, you have a date of upgrade in the system. There are returns which is given. As on that day, you go to the Finacle, you see the customer ID, all the exposure that you have, and see what is the DPD for those exposures as on that day. So as far as this account or this borrower is concerned, housing loan has become zero DPD on 11th of March. And that is get captured in the return of upgrade return that you have, that you certified that during the movement of NPA during the quarter, this or during the period, entire year. So you have a detailed data on which it has got upgraded. Date of upgrade you captured, you run a query for that specific customer. How many accounts are there? And what is the DPD of all the facilities as on that day? If all the facility DPD is zero DPD, then this upgrade is correct. If any of the facility has even 1 day DPD, that can't be upgraded.
So we can check that in the,
You
Finacle.
can check in Finacle.
Okay.
You can check in the Finacle.
Is there any specific command that we can check our?
No, that is something which is, I'm frankly speaking, Finacle commands and all, I'm not really experts in that sense. But I can look and come back. But at customer level, you have certain exposures, reports are available. So that specific day, run day, you can ask them to generate report for that specific as an exceptional query. That report is available. And otherwise, you independently want to validate, you can go and check in each Finacle for that customer ID and see what is the outstanding due which are there. So there is, once you go that inside the Finacle, apart from the outstanding, they give the summation of that. What is due, how much is recovered, what is the period for which is outstanding.
Okay, thank you.
So this is just we talk about. So these are the few things I think, friends, even while concluding the erstwhile earlier session, there's a questions or I think Madam mentioned about divergence and some economic offense wing has giving calls and everything. I think by and large, what regulators are looking about, these are the few examples which are there. One about RP implementation is not being correctly done. The NFB is not considered in terms of provision which is made. DP computed based on the expired stock statements and not classify as an NPA. Wrongful upgradation of NPA accounts before implementation of restructuring plans. Wrongful reversal of provision on charge of change in the ownership before expiry of moratorium period. So this is a very peculiar because moratorium period for COVID 1.0 or 2.0. This is a classic example is that during moratorium period itself, there is a change in the ownership has taken place. And without even the moratorium period expired or expiry of the period, if you're changing the classification which is there or releasing the provision which is required to be made, that has been seen as a divergence. Last two are more recent. Rollover of working capital demand loans of the borrower under financial difficulty tantamount to the restructuring. Now, practically, this is very specific view taken by the regulator that even when there is a 30 days DPD, if you are granting any new facility and from that 30-day DPD, that account become a zero DPD, they are saying this is a divergence. They talk about only in working capital demand loan. Retail segment, it has a large ramifications. They have limited themselves for working capital demand loan, but this logic can be extrapolated for anything. So take an example that you have a credit card dues and a personal loan gets sanctioned. Personal loan end use is not known. And if you are paying that, from that the credit card get upgraded, it is possible that it amount to divergence. Currently, for retail, it is not happening, but the way the regulator looking into it, that any credit facility sanctioned to your existing customer, if there are any inherent risk is there, or is there any DPDs which is significant more than 30 days, if you are sanctioning any facility and by disbursing that, those DPDs are coming, then it is being considered as divergence. Last is about the wrongful upgradation of investment exposure without ensuring satisfactory performance after writing out of advances. So this is basically multiple exposures are available. So one of the account is a technically written off totally out, and then the subsequent investment is being upgraded, to which they are saying that you should continue to classify this as an NPA NPI and you can't upgrade it. This is more from the central statutory auditor's perspective, not at the branch level. So these are the probable expectations from the regulator is concerned. Evergreening, as we just spoke about, non-compliance with the IRAC norms, restructure account more from MSME and non-MSME accounts which are there. Basis of compliance with the IRAC norm, because that's one of the certificates which has been given, that how the IRAC norm has been complied. And many a time you can't give a limited assurance in the certificate. Otherwise, it amount to a qualified opinion. So that compliance which is there, so that's one expectations which is there specifically need to look into it. Assess the increase in the credit risk, if there any credit risk has been increased or not. Quick mortality cases has to be looked into it. So any area specifically where they're saying that within the year of sanction, account has been classified as an NPA and then subsequent recovery is there. So there is an inherent risk is there is a possibility of fraud, divergence, everything is expected to be reviewed by the auditors. Highlights the area of two different views, interpretations, issues. So that basically LFAR is the one way that possibly that today the management has taken a view. And as an auditor, we have an independent interpretation and feel that this could be one of the view. It is the qualitative aspects that we can mention in the LFAR. So not only from the branch auditor perspective, more from the SCS point. So at some point of time, we don't agree to the view of the management. And there can be an interpretation used. So at points, you can always highlight that whilst the management has interpreted this circular in this manner and not classify as an NPA, according to us, it can be interpreted in this manner. The management is required to re-look into it and assess, and if required, may require to change any policies they have made in terms of the interpretation they have made for this specific master directions. So that is the way, friends, we need to actually bring in a lot of validations to the management, because at times your view is correct, but you are not convinced that at overall bank level, it can have a large ramifications, and they would like to take it a view which is more in a short-term point of view, but it can be a view maybe industry others are not taking. And therefore, it is our responsibility auditors to bring on saying that if this view which is taken, whilst we agree to that view, there's a possible view are there, and bank need to evaluate and assess whether this view is correct. Probably they can go back, the compliance department can go back to the regulators, SSM, and say that whether it is this view has been aired and required any relook, possibly our bank view is correct or not. So this is more from the central statutory auditor's point of view, but as a branch auditors also, when you're doing it, it's very important that you need to look into it, that what is the area that you have any difference view. Don't curtail, write it that what, be crisp, be to the point. I think that brings a lot of validations. Now, types of advances, I'm just running past. This is a common thing which is there. You have a standard assets, you have a substandard, a few non-performing assets in case of guarantees, income recognitions and all. So criteria of classification is term loan, 90 days DPD, overdraft, it is a out of order. Bill purchase and discounted overdue is a criteria which is there. There also 90 days. Credit card is also minimum amount due, that MAD which I spoke about. Derivative transactions overdue received representing the positive M2M value of derivatives contract remain unpaid for more than 90 days. I don't know whether any public sector bank has these kind of a derivative transactions, but this is one of the advances one can look into it. Agriculture advances, and fortunately out here, I don't expect that much of the queries or questions to be raised, but this is the one area where most of the PSBs has interpreted or documented in the manner that today we as auditors may not have a comfort. Typically that Kisan credit, which is the repayment happening on the day and the same day, the amount get drawn or the next day. So whether it is amount to evergreening or is it there is a clear zero balance which is happening. So we can subtly can say that as a best industry practice, either there should be a clear zero balance in these accounts should be maintained. we can understand this is required. And if you will see the trend, most of the KCC accounts, the outstanding balance keep increasing. So rollover will happen at a date of rollover, the repayment will take place, and next day, or same day, the additional sanction take place and total outstanding goes up. So our experience is that with the local money lenders, with 1 day interest at 24% or 30%, the agriculturalist or the farmer borrows the money, goes and deposits to the bank, account becomes zero DPD. Same day in the second half, he withdraw everything, including that what interest has to be paid to the money lender. And you will see that there is a marginal increase or to that increase. You try to do it. If you have any branch and if you come across things, you will find out. This is the modus operandi typically followed. And that's how the credits are keep going up. And you will see that this is a continuous pattern year on year, year on year. Now, this is a practice. The top management is aware about it. SCAs is aware about it. And as a branch auditors, what you can do it. I think you can say that as a good prudent practices, I think the bank should do it. And this can be a part of the one of a LFR. And if you strongly believe that it amount to evergreening, you can mention this as along with your audit report with a clear documentations in terms of number of accounts, what has happened, the trend, everything. I think once you're able to demonstrate on the paper, I don't think so SCAs or even management can ignore that. This is about the classification, standard, substandard, DB1, DB2, DB3. The movement can happen from standard to DB1 depending upon whether the security is available or not, a few of the conditions. So this is an example of the evergreening through the group companies. How much time we have? 5 minutes? So I'll just not take this because this is more we can look into it. There are 2 points that I want to highlight. One about is co-borrower and second is about the negative amortizations. So I'll skip this all case studies if you permit, because otherwise you will start taking each case study will take another half an hour, 45 minutes minimum. I don't know. I'll leave it to. I have a time. I'll leave it because I believe if you all spend time and eagerly want to listen, and if I have to offer something, I should be willing to give, impart. So I'm there. I'll go along with the floor. If you think you want to go through each and every case study, I'm willing to take. If the time is only 5-10 minutes, I will stop myself. I'll take the 2 critical aspects, which is I talk about the co-borrower and next second is the negative amortizations. I'll leave it to all of you. How you want to do it? Couple of time will take half an hour. Now let's take it first, these 2 aspects. If everybody thinks that we want to, I can come back on this. Okay. So this is about the negative amortizations. If you're seeing the statement which is there, this is a housing loan which is there. So A has taken a housing loan from ABC Bank Limited, have been servicing EMI regularly on monthly basis due to the increase in the repo rates. As I mentioned in my opening remark, the repo rates during this year, it increased by 250 basis points. There are 7 instances which are there, and most of the home loans are linked to the repo rates nowadays. Very few people are taking a fixed rate loan account. The interest rate of the loan has increased significantly as compared to earlier. The extract of the HL statement is as follows. So you can see the HL statement. To start with, 1st January 2023, outstanding balance is 11 lakh. The EMI got service for March and for February. And end of 20th February, the outstanding balance is 11 lakh 800 rupees. What we call as a negative amortizations is basically the EMI is not sufficient to pay the dues of interest which is created in the system. Now, system point of view, this account will never classify as NPA because whatever due which is created has been fully serviced by the borrower. Right? So if you take the repayment schedule at the branch level, these accounts will show either perpetuity for repayment, or it will show the repayment period 35 years, and it can go to 85 years. Friends, in Finacle, beyond 85 years, they can't show the repayment schedule. Because once it become negative amortizations, the loan will be continue to be served till perpetuity. It can go beyond 100 years also. So it will show anything beyond 25 years loan repayment, 30 years loan repayment in scheduler. These are the cases are morely negative amortizations. Now, as auditors, what you will do? This to be classified as an NPA? Is it system fault? It is not a system fault. That's true, but they have not done it. And there is an economic reason for that. How frequently going to change that, and whether the borrower is capable of repaying that loan, whether my EMI is going to become more than 50% of my annual monthly income, because that is also one of the criteria with RBI regulators are saying that you can have LTV is one thing, loan to value. Second is that IRR has to be maximum 50% of your monthly income. So there are operational issues. Yes. Sorry.
If the debit is on the basis of floating rate, then the credit also should be on the floating rate basis only.
Correct. That's right.
Yeah, so in that case, the credit by the bank itself is not correct.
That's
So
right.
the schedule is not correct. actually.
Right.
So it's not, it has got nothing to do with the account as such.
Correct. That's right. So what sir has mentioned is absolutely right. In terms of classifying this account as an NPA is a non-starter. We can't classify this account as an NPA. The point that I'm bringing that this is an irregularity, because this account is something where there will be a perpetuity, there will be never repayment will happen. So the bank has to actively pursue with the borrower for one-time repayment to bring down the outstanding balance, or they need to reach out to them and reschedule the EMI. And that is the only way they can bring it down. So onus is on the banker. You can identify all the cases, put this as the case for the branch, mention this specifically in LFRA, that this is the case which is there. Bank need to do the active persuasions. There will be efforts that to be made by the management to ensure that these accounts, and these are accounts are basically, I would say, it's like an inherent risk. In terms of the borrower side also, in spite of paying the entire amount, the principal is not going down. So there can be a possibility of customer complaints also. So it's just a take example that if out of the audience somebody has a housing loan and it happens to you in your own case, what your reaction? You would say that you would have come to me, I would have paid more amount. You never reached to me. So there is an element of customer complaints also is there. So these are few things which are there that we need as auditors need to look into it. Probably you can reach out to the management saying that this is there. You can reach out to the central statutory auditor saying that this has been identified at my branch. Please look at it at a pan India basis. How many cases are there? What are the efforts required? I think this year, the LFR, you can, if you come across, please mention it along with the proper disclosures. This will give a lot of validations from your side to the management. Sorry? Correct, sir. But that is what happening, that period which is increased, in this case also they have increased the period only. But now my interest increased so much that the EMI service is not sufficient to even pay off the current debits of the interest. What you are saying is absolutely right. They have two options. Either they increase the EMI or they increase the tenure. Increasing the tenure is the easiest solutions. And in all the loan documents, it has been mentioned that anything that the discretion of the management, the bank can increase the tenure. And they go under that plea. But if it become a perpetuity, this account will never going to even repay that loan. And therefore, this is a systematic risk, I would say that. As far as the housing loan is concerned, it's a systematic risk. If it not been addressed on the time, this can create a problem going forward to the bank itself. In terms of the customer complaints, in terms of, this account is perpetuity. You can't have this account in perpetuity. I know. No. No. See, EMI due which is there, that is there, but this will not happen on 31st March. If you take this example, interest due which is there, from that day onwards, so you take it 20th February, eventually it will become NP on what? May 2023? April, end of the April. So we are saying that this is possibly that you need to look into it from the day one itself, that this is a potential NPA also. Any questions? No. Whatever due is there is being fully recovered. Correct. 9,500. Same. Then, can we go ahead? So this is one more thing which is about the co-borrower. And I want to spend around 10-15 minutes on this. It's very important. This is something which has been started with the private sector banks, PSP yet to catch up on this. This is a one thing that we need to look into it. I'm not sure bearing even SBI currently doing or not, I'm not sure, but this is the first year most of the private sector's banks has been looked into it, and they are starting classifying the co-borrowers as NPA. So typically, you have a primary borrower and you have a joint borrower. So look at this, that housing loan is a 10 crore, which you have a joint borrower. There's an auto loan, which is there. And co-borrower has another exposure, which is around credit card. NPA, when you're doing it, you will do, since it's a primary borrower, both the accounts where he has a primary account will classify as NPA. Now, whether credit card in this case also required to be classified as NPA? Technically, yes. And if you've seen that current industry practice, co-borrower tagged as, reported as to the CIBIL. So CIBIL, they are reporting that what is the DPD days is get reported. It is not being classified as NPA, but CIBIL reporting is talking about is only the classification. Say that's a DPD 90 days outstanding because a co-borrower. So it is currently getting reported, but never being classified as an NPA. The moment you classify as an NPA, see the ramifications. That account holder or that's a co-borrower will not even avail to any loan from industry. Nobody is going to give him a loan. So it's not that going to be that easy. Now look at it, what is a co-borrower clarification which has come? No specific guidance is given as far as the classification of the co-borrower as NPA. Joint responsibility of repayment. So basically when we talk about it, with whom the bank has a recourse. Bank has a recourse with the primary or it has a recourse with both the borrowers. The principle on which we are looking at it, that the both borrowers are equally and severally liable to repay the loan to the bank. And therefore we have a clear recourse and we're going to recover the money from that. So if the primary borrower is classified as an NPA, obviously the co-borrower also need to be classified as an NPA. And term borrower in IRAC norms would mean include the co-borrower. So there is no clear visible distinction. So currently the IRAC is silent about the co-borrower. It talk about only borrower. And for the banking industry perspective, borrower means the whoever is borrowing the money, whoever with whom we have the recourse. So clearly in this case, both the co-borrowers with whom we have a recourse, and therefore both need to be classified as NPA. Following two are the disclosures which is given by the banks, private sector banks that we have just highlighted, that this is if somebody asks you and typically public sector bank will say that हमको evidence दिखाओ कौन कर रहा है. See the evidence. Okay, so take it forward that this logic of a co-borrower, till what extent it will go. So these are basically parameters I'm just putting in. I'll just look at it. This is what we will spend maybe 5 minutes on this. So typically if you are seen as a co-borrowers, the concept of co-borrower primarily that you have a series of co-borrowers and that co-borrower eventually become a primary borrower of some exposure the bank has. So we have A, B, C and D are there. So A is a primary borrower. The co-applicant is B. Primary borrower has a housing loan and an auto loan. So in this case, NPA classification of A is concerned, whether both the accounts need to be classified as NPA, right? Both. Okay. Now come to the B. We have B as a co-borrower and along with the A in the housing loan, and it has a credit card, which is solely used by the B. In this case, which facility need to be classified as an NPA? Okay, so it will go with the principle of once the account borrower is classified as an NPA, all the facilities will be classified as an NPA. We come to the C. Now, C is a co-applicant along with the A. It has a personal loan and it has a mortgage loan also. Okay. Now, whether C is required to be classified as an NPA? Yes. So it will be only auto loan that will be classified as an NPA? Sure. So the principle remains same. I think once any correlation between A as a primary borrower classified as an NPA with any exposure that he has a co-borrower, wherever it is there, the logic can go to that extent. There is a possibility the management come back and say that auto loan as a standalone is never being classified as an NPA. And Mr. C is a co-borrower for that specific loan and not for the one which is considered as an NPA. But where the waterfall impact is there, A as a per classified as an NPA, all joint borrowers along with that for all the facilities by virtue of the principle will be classified as an NPA. This is one of the debatable issue. Some of the banks are doing, some of the banks are not doing. I'm not saying that there's a confirmed view, but there's a possibility is there. I'm just giving the logic under that the principally one need to look into it, that if A as borrower is classified as NPA, all its facilities being classified as NPA, and therefore by virtue of that, their co-borrowers, wherever he is a co-borrower, those also will be classified as NPA. Now come to the Mr. D, very unfortunate person. So he is basically a co-borrower along with the Mr. C, who has a mortgage loan, and he has a sole personal loan. Now, according to the floor, whether D will classify as an NPA. Sorry. Fair point. And I think somewhere this principle has to stop. And this is a critical juncture where the chain reaction has to be stopped somewhere. Otherwise, we have to go with the first level, primary borrower, along with that co-borrowers. Beyond that, if you're trying to go, that co-borrower, because of the primary borrower, has tagged as an NPA, because of he being a co-borrower along with someone, that co-borrower not necessarily need to classify as an NPA. And most of the bank, believe me, the two banks names that what we mention out here have gone to C level only. Nobody has gone to the D. That will, I think, would be in a far-fetched and, I would say that it is the extension of the logic to say that we would not. As an auditor, as a conservative, I say that everybody is NPA. Sabko kar do bhai. So friends, I have few slides and all. Either we can take or we can stop. We are already 5:22. I think I'll conclude because there are case studies are there. If you're trying to go it, there are various points. Each case study will take around 10 minutes or 15 minutes. Only quickly the point that I'll go is to capture what are the approach as an auditor that we need to verify. That is something which is must to do when you're doing. I think that is what everybody would like to know. This presentation I'm leaving with the institute. Hopefully they'll circulate that also. So if you have any specific queries, questions, then you can reach out to the institute, you can reach out to me, and I can deliberate on that. But I have taken something on the income recognition reversal of NPA also, some examples on that also. So I'm not going for the practical challenges. Straight away, let's go to the audit approach. One, that automation classification of NPA. So verify the system, parameters, controls on the modifications of parameters, controls on the categories of NPA. So what is done in the last year, what has changes have happened, you should be made aware about it. It's just coming out of the system, therefore is correct, is not the correct approach. Certain parameters, we should have a clarity from the day one. So when you have a first meeting and all, I think this is what approach, the discussion that you have will give a starting point when you interact with them, what we wanted, what is expected from that central office, from most of the banks will provide you whatever changes are there. If not, you can reach out to your fellow central statutory auditors, ask them what are the changes are there. At least then only the qualitative evaluation will happen at the branch level. Third thing is about the CCOD, working capital facility, verify the computation of drawing powers, because that is the one area which has always been area of concerns, how the DPs get computed. Press sanction to escape the NPA classifications. So any new disbursement which has taken place, either for the borrower or any group entities from where it has been evergreening happening, please look into that. So you can, when you are looking at the certain sample selection which are there, related party from their balance sheets you can make out and see that those related party has any exposure with the branch, and whether any facility is being granted during them, and it has a direct impact on the upgradation of the account, then clearly you can, link all those dots and try to form a larger picture and saying that, yes, it looks like these are the cases where there is a possibility of divergence, evergreening has happened out there. Reversal of unrealized interest on the first time classification, subsequent transfer to the memorandum accounts. So all the reversals are happening or not, all unserved interest. So typically one example I've just taken about it, that you have guarantees which have been, commission has been served through using the CCOD facility. And that CCOD facility itself has gone out of order. Now, whether that guarantee commission, which is recognized as an income, whether required a reversal, just think through it. Then borrower-wise classification, upgradations and subsequent downgradation of NP accounts as per the IRAC norms. Valuation of security. This is also one critical thing, that most of the branches, wherever securities are lying out there, typically the security valuations in terms of immovable properties are concerned. 1 in 3 years you do it. But in case of plant and machinery particularly, you can look into it. The last realizable value, probably you can look into the financial statement available, you can take, because you can't take something which is 3 years old, plant and machinery. In fact, it will be further accelerated depreciation if there is no operations happens at the branch level. So it's a practical thing. And typically the bankers will say that this is what is being given, this is the format, 3 साल में एक बार करना है, हमने किया है, हम कर रहे हैं. So, be watchful, mindful about it. No debits allowed in the NP accounts. Typically what happened that, as Sir talk about it, that debit charges are there, review charges, legal charges, or any inspection charges. They just debit. Account is NPA. You can't do that. Please look into it. Yeah, I think this thing has been suggested by fellow professionals only. Because if you see in the last year when the Caro has come specifically and there is a thing, this has got amply discussed. I think if there is a significant variance and tolerance, if you look at it as more than a variance of 5% or 2%, obviously as a auditors or even as a management, as a branch officials, they need to reach out to the borrower and say that please no, because there's a clearly inherent risk are there. So DP has been managed and you will come to know when you're doing it the last year's working, the 31st March 2022, what has happened, 30th thing. Maybe the current date may not be possible because audited financial statement is not readily available. So the starting point, you can look into the last audited financial statement. If you see that any of the borrower is doing that, there's a clear inherent risk is there. Ask for the auditor's report, check with that. And that can be a starting point to say that this is a account whether in SME, if in SME2 category, DPD is around 80 days DPD or 70 days DPD. It's a classic case where they are managing the things. And IRAC is very clear that any recovery which is happening near to the balance sheet date, and as a auditor skepticism, if you feel that this is basically of one of the things and inherent risk is there, and as a visibly there is cash flow management is a question mark, you still can downgrade it. Nobody can stop you from downgrading. But that skepticism need to be put on the record and you need to be able to demonstrate that. Otherwise, it's a rule base. Rule says a 90 days DPD, but continuously SMA2, the DP is in the question mark. As rightly said, it is last year is wrongly computed. These are the classic case. These are the cases which has been just managed somehow to be not classified as a NPA.
And thereafter, there are some charges, say inspection charges, etc., as you have said in last slides. Then where it is to be credited now?
Those goes into memorandum account, recoverable. They will be never recognized as an income.
Yeah.
It's only on the receipt basis will be recognized. I think, friends, I'll stop this. So this is a minimum procedures which is further are there. Thank you very much for patient hearing. And sorry, I understand the timeline, the subject, but I thought it's important to capture the most of the things. And wish you best luck for your forthcoming season for the branch audit. And hope that lot value addition you bring to the managements, and this is what only continue to have our what we are reporting will make them think twice about reducing the number of branch audit. If they see that there is a value addition coming from the branch audit, qualitatively, I don't think so that management or even to the regulators, we don't want the branch audit. So it's a fate in our hand. So we need to decide, the quality of our work will speak for ourselves, or we will just say that institute. I think institute is making the best efforts from their side. At the same thing, as a collectively as professionals, we also need to give our best. Thank you very much.
Hello. First of all, thank you so much, Suresh sir, for this amazing explanation on I think one of the most important topic of verification of advances in NPA norms. And I think so very beautifully explained by examples. And absolutely, I think it's an honor to have you here and explaining them. So can we have a huge round of applause for CA Suresh Agaskar sir? I think it's an amazing start of this two-day conference that is today, and we have this tomorrow as well. So looking forward to meeting all of you tomorrow as well. We'll be starting up with another amazing sessions lined up tomorrow at 10 o'clock sharp. Thank you so much for the patient hearing. Thank you very much. Thank you.